be some, see, the major platform companies should ideally be trading anywhere in the range between 20 to 25 by FY30. I think that's a good estimate for platform-based companies.
28 times FY30.
FY29, FY30, I would say. Okay. And so long-term opportunity is huge. And the other thing is, if you look at smaller companies like private companies, which are volume-based companies, I think they should be anywhere from 60s to 80 levels. They should come down to something like a 40, 45, 35 to 40 is my range by FY30.
It's an interesting one. But, I just wanted to understand, do you track companies like Solar Industries, Premier, yes. And is there a, there are rumors and obviously there's reports that there could be some sort of deal taking place in this space itself. Premier is up for grabs. The buyer benefits, who could it be, and what's your call on Solar Industries?
See, I think Premier has been on the block for quite some time. It's been almost 3 years I've been hearing that Premier Energies, but I think the deal hasn't really gone through. Adani, L&T, and so many other companies. I've even received interest from a lot of companies, but I just think that we will know when it happens.
And your call on Solar?
Solar is a good company, but I still think the valuations are rich. And of course, once Pinaka deliveries start happening, the companies would start looking very good.
So your top picks would be?
Bell and Bemel as of now.
Okay. All right. Great chatting with you, Jyoti. Thank you very much for joining in. We'll wait by. We'll keep chatting with you as this entire opportunity unfolds for the defense sector. All right, before we go across to Hormuz for some stocks where we saw a lot of delivery-based momentum, a quick check on Asia this morning because there is red on the Asian market screen. The Korean market, Kospi, has slipped 5.3%. Hang Seng is down 1.1%. The Japanese markets have slipped nearly 1%, and Taiwanese markets too have a shade of red. That's down half, but the biggest fall has come through in the Korean markets. There you have it. That's down more than about 5%. I don't know if bad news for Kospi Taiwan means good news for the Indian markets, but for now, I think the GIFT Nifty is still flat. But the slide in crude prices from yesterday's level to today is still positive for us.
Yeah, the correlation between what happens in NASDAQ and what happens in Korea is a lot higher than the anti-correlation of tech sell-off and India as well. So let's see whether, we benefit from that.
And everyone goes on cribbing that, the Kospi has done so well and the Sensex is lagging. Both of their base years is 1981.
Yeah.
And today, the Kospi is at 8,600 after today's pullback. And the Sensex? It's closer to around 78,000 odd. So, longer term, we have done well. Not too bad. Form, Manglam, is?
Form is temporary, class is permanent. Let's monitor that. All right. On that, let's go across to Hormuz, who is another permanent fixture on the show with all the delivery volumes. Hormuz.
A lot of these momentum stocks actually in yesterday's trading session. Kirloskar Group, the entire group was buzzing in yesterday's trade. Kirloskar Oil Engines, of course, the news flow driven move at 20% circuit yesterday. The biggest biggest rise on record, and the stock ending at a 52-week high as well in yesterday's trading session. You take a look at the volumes as well. 18 lakh shares were traded, the most in over a month. The 20-day average though is only 4 lakh shares, and that's also a third of those were marked for delivery. So around 5 lakh shares, and compared to the 20-day average of around 2 lakh shares as well. And so far in the year itself, the stock has almost doubled in values, up around 95%. The other big mover yesterday was delivery, and after almost a very, very long time, the stock finally managed to cross its IPO price in intraday trade yesterday, almost 5% higher, the fourth straight day of gains. In fact, the stock has gained in 8 out of the last 10 trading sessions. Over 1.2 crore shares were traded yesterday. The volumes were the highest since November of last year. The 20-day average here is only 22 lakh shares, so around about 5x the 20-day average. A third of those were marked for delivery on this one as well. 43 lakh shares were marked for delivery, and the 20-day average was close to 11 lakh shares, so 4x on that, and the stock still is very close to its issue price. And the one that continues to move higher though ever since its name appeared in the list of selling shareholders in the NSE IPO is New India Assurance. There's 7th straight day of gains now for the stock, and you take a look at the volumes as well over the last 3 sessions. There's anywhere between 8 crore to as high as 12 crore shares on New India Assurance, and anywhere between 4.5 to 5.5% 50% of those shares have been marked for delivery. But take a look at the volumes before that. That prior 20-day average before this 3-day up move is only 8 lakh shares, and even then the average delivery volume was only a third of around 32%. So significant volumes seen in New India Assurance. The stock over the last 7 days has gained almost 50%.
Got it. Okay, Hormaz, thanks a lot for joining in, giving us a quick update. For the time being, we slip into a short break. You come back, we'll get the pre-open rates that will start trickling in. Continue our chat with Dharmesh Kant. We'll also connect with our technical experts. Sachi and Mitesh are waiting for us.
Welcome back. A little under 2 minutes to go for the pre-open. About 15 minutes, a little around 16 minutes for the market open as well. The GIFT Nifty indicating a flattish start, a mild cut of almost 20 odd points. No real worries out here. The street obviously penciled in for a 23,950 to sort of 24,250 range on the frontline index. Let's see which side it breaks out today. With that, let's also welcome our tech guests in just a bit. Dharmesh Kant's still with us. Dharmesh, the defense pack is what we were discussing earlier. What do you make of the valuations that, Jyoti just pointed out and some of the names that she spoke? BEML, you have BEL, also a couple of the other newer players in the space.
Yeah, Bangla, I mean, we have been quite constructive on the defense space for last 1.5 to 2 years. Though the stock prices have not moved significantly, it's been in a range for most of the players with a lot of volatility being there. Execution being questioned, for example, HL execution was there in question, but last quarter numbers were actually better than what the expectation was. This year, I think second half would be great for most of the defense companies. Order book is very strong for most of them. 4 to 6 times of an order book they are sitting on. And I think as the time progresses and more, multi-country treaties are done with Indian government with technology transfer being in place. Like with France, significant order, I mean, it may come through and a beneficiary can be in HL. So we are constructive on the space. We have been liking that. BL is the only one which has moved on the price count. But along with BL, HL also looks pretty strong. Smaller players, the problem is the valuations are too high and the size of revenue is too small. So you hardly have any company in the defense space which does a revenue of more than $1 billion. Most of them are 800 crores to 1200 crores kind of revenue top line, though the promise is high. So that space is a bit suspect on the low side. But on the higher side, HL and BL remains to be the topic out there. And it's a portfolio buy for 3 to 5 years kind of a perspective.
Okay, all right. Dharmesh, I wanted to ask you about the Vedanta group. Anything you like from there? The returns have been made in the near term for the event play. That is, you bought the stock at 700, 750 rupees. Sum of all parts came to around 900 rupees. You're happy about that. But now, there will obviously be selling. Someone who wanted aluminium doesn't want oil and gas. So they have sold oil and gas. So that stock could have come down a little bit. Or aluminium has come down as well, close to around 15% from the top. Yesterday, it went up, to upper circuit. Do you like any of the pieces? Some argue that steel, the replacement cost will be more. Promoter, in the past has done various activities that make investors sometimes a little bit nervous. But now it seems that his books are in order. That's Vedanta Resources. Any of the pieces you like, or you believe that the event has played out, you rather stay away?
Yeah, I mean, if somebody was playing for the event perspective, it has played out. Basically, the Vedanta Aluminium Limited, we were expecting 400 to 450 kind of a pricing on the listing. It did far well ahead of the price, and most of the gains were captured out there. So our SOTP based, target price was 8 to 850 kind of a range. It's better than that, and I mean, metal as a space is going through a corrective phase as of now. But to our mind, at least 1 to 2 years of a good upcycle is there. What we like in the entire Vedanta space after the demerger is one is Vedanta Aluminium Limited and the other is the Vedanta Limited itself, which takes into account Hindustan Zinc and copper and other plays into it. So I think this correction which is happening is a good opportunity to buy. Would have liked aluminum to, Vedanta Aluminium Limited price to correct a bit more. And then around 450 or 400 is a good level to get a portfolio entry because the structural play, be it electrification or EV vehicles, all the industrial consumption of aluminum is to be there for next multi-years. So a good place, and they are expanding their capacity, doubling their capacity out there. So that's the best play out there, followed by Vedanta Limited.
Okay, Vedanta Limited, in fact, we're expecting a large trade. And Dharmesh, on Vedanta Aluminium, you actually got 447 or 440, I think, last week. And Mangalam and myself, I remember we were on Chartbusters and we were covering the, the valuation aspect on that. So, it did go to those levels, and from there, it's seen a bit of a bounce. Let's get chatting about a couple of other stocks then. Power Industries, what a beautiful moving stock that is. It saw a big correction. I spoke to the promoter a couple of weeks or so ago. From there itself, the stock has seen already a big rally. If I pull up a last 1 month chart, you'll see that the stock has already rallied big time. What's your view on this name? It's been a big wealth creator, then it saw a correction, and now it seems to be finding its form yet again, with the cables, the conductor segment as well, both of them having tailwinds, and they have incurred capex and they front-loaded it. So they've kept things ready. Any view on the stock?
I mean, the only questioning point is the valuation part, and this is more of if you look at the price action, it's not a structural price action throughout. Sometimes it gives you a dip, but the entire this electrification and conductor oil story is intact. Almost doubling of the capacity is expected on the transmission and distribution line in next 5 to 10 years kind of a time frame, and most of the transformers are in for replacement. So be it, city transformers or one station to one down to another transformers, they all will go in for replacement. HVDC is a new concept of transformers. They won't be needing a replacement. But again, the transformer oils will be used out there as well. So a big, story unfolding out there. One has to be patient and a structural buyer out there. Valuations, I mean, in between can give you some jitters, but corrections out there is a good opportunity to get into it.
All right, take that point, Dharmesh. Thank you so much for joining us this morning and giving us your ideas on a whole host of stocks and investment bets that you are suggesting to your clients and viewers as well. With that, let's get in our technical experts. We have Mitesh Thakkar of Bonanza Portfolio joining in. Along with him is Sachidanand Dutekar of Trade Bulls. Mitesh, good morning. We're in this range. Do you sense that a breakout is imminent? And if yes, by when?
Good morning, Mangal. So I think we're still not in range. I would say that, after having rallied from 23,100, I think the low we got was 23,072, to a high of 24,189 in a matter of about 6 trading sessions. We're just trying to consolidate. So not exactly a range trade, but, just a pause. Unless until we start breaking below 23,800, I think my strategy on the index and on stocks would be to buy mildly buy on any mild declines. Preferred level would be close to about 23,900, 850 zones. And once we see a move beyond 24,200, then I think 24,350, 400 is the near-term immediate target. But more logically, 24,600 is what I think the Nifty can do.
Sachi, your thoughts on the index and Nifty Bank in particular, which has been outperforming?
Good morning, Mangalam. Good morning, Nigel. Good morning, Rima. Clearly, I think the market is in a range-bound mode. 23,900 seems to be a decent support, and on the higher side, as Mitesh pointed out, 24,200 remains the breakout zone. So we are expecting that this particular healthy pause could continue. We have already seen a very strong rally last week. So it is evident that the Nifty may spend some more time near its 5-day exponential moving average support, which is placed somewhere close to around 24,000 levels. So we may see some more consolidation here, but eventually a breakout is something that is in the offing. But when we look at Nifty Bank, the data is much more supportive. We have already seen a strong bullish breakout from a flat pattern formation, which is indicating a price target somewhere close to around 60,200. From a trading momentum perspective, at least for this particular expiry, we are expecting a swift move towards 59,000 levels. So I think it's better to use the declines to buy Bank Nifty. One can keep a stop loss at 57,560 on closing basis, and create some long positions even on a decline towards 57,700.
Got it. Okay. All right. Mitesh, what's the individual stocks that you're looking at?
I have more buy calls, a few from the defense pack. One is HAL. That's a buy with a stop below 44.70 for targets of 46.20. Then also a buy on Mazgaon Dock, which is what I recommend, with a stop below 2,500 for a target in vicinity of 26.50. IRFC is the third buy call. Keep a stop below 98.5, look for a target of 104.5. And one sell call, which is Colgate-Palmolive. Keep a stop just about 2001. Look for targets of around 1940 on the downside.
All right. Do you have a call on delivery by any chance? That stock saw a bit of a spike in yesterday's trading session. Anything chartically that stands out?
Me?
Yeah.
So delivery, I think, if you look at the data starting from 2024, January, on the weekly charts, I can count about 10 or 11 highs in the range of 480 to 490. Now, closing above 490 would be very positive. Disclaimer, it's on my buying watch list as well. I would want to buy if the stock gets past 490. And then I think I would look at a first target of around 555 to about 560, but more logically, a target about 600.
All right. We do have Sachi stocks remaining as well. Sachi?
Mangalam, from the banking space, we still continue to like AU Small Finance Bank. If you look at the structure, it's a classic bullish flag formation breakout. Yesterday, we saw the OI cluster of 1,050 getting challenged. So we are expecting that there could be further momentum in this particular counter. Expecting a price move towards 1,092. Hence, we are recommending building fresh long positions. Keep a stop loss at 1,032. On closing basis. The second call is a buy call on BDL. Clearly, the way this particular stock has started, scaling higher, we have already seen a very strong bullish crossover on its 5 and 20 exponential moving averages. Yesterday, we saw it also, confirming a close above its 50 weekly exponential moving average resistance, which is somewhere around 1375. So we are expecting some more momentum getting built in here. Keeping a stop loss at around 1382 on closing basis, one can expect an immediate move towards 1442, followed by a price target somewhere close to around 1480. The third buy call is on Adani Energy Solutions. Now, if you look at the overall structure, it looks like a classic bullish flag formation on the daily scale. But if you look at the broader structure from 2022 December, you'll see that the stock is forming a contracting triangle formation, and the resistance is placed somewhere close to around 3,000 levels. It has already spent almost 19 trading sessions near this particular resistance. So we're expecting that there could be a very strong bullish rally getting built in here. Keeping a stop loss at around 3020 on closing basis, one can expect a move towards 3,200 in next couple of trading sessions. So a buy call on AU Bank, BDL, and Adani Energy Solutions.
Thank you. Gentlemen, we'll come back to you for more calls. For now, let's go across to Sudarshan for some brokerage calls of the day.
So I have two stocks and one sector-specific report. First one is Citi has come out with a note on Meesho. The stock has been in the focus for the last few days, and today Citi has initiated coverage with a buy call, and target here is 210 rupees per share. It's a value-focused e-commerce platform with several vectors of strategic differentiation versus other e-commerce platforms, and it's uniquely positioned to serve as an infinite and accessible store to a massive audience, and it values Meesho at 50 times FY29 estimated EV to adjusted EBITDA. Next one is Vishal Mega Mart. Here, Investec has initiated coverage with a buy call, and target here is 144 rupees per share. It says it arguably offers largest TAM in consumption segment and structurally best place to execute the competition. And it sees Vishal Mega Mart as a clean double-engine growth story with 10% same-store sales growth and 13% store additions to drive 18% revenue and 21% EPS CAGR over FY26-29. As far as valuation is concerned, it trading at 42 times FY28 estimated, and that Investec finds very attractive. Next one, NBFC. Jefferies has come out with a note. It believes the NBFC setup has improved with West Asia tensions easing, and growth and collections are tracking well ahead of the last year. Even softer bond yields and delayed rate hike expectations should support the margin. As far as the risks are concerned, weak monsoon and El Nino they have mentioned as risk. And it prefers Bajaj Finance, AB Capital, Chola Investment, and Shriram Finance.
Got it. Okay, all right, sir. Thanks for that. Hopping across to Vivek. Vivek, tell us about JSW Infra as well as Craftsman Automation. I think that block has taken place.
Absolutely right. JSW Infra, let's look at that first. A very large fundraiser, QIP of over 7,500 crore is what the company has launched with a fresh issue component of over 6,500 crore. The indicative issue price is at a discount at 285 rupees a share. Total dilution of over 11% of the equity when you take into account both the fresh issue as well as the offer for sale component. What does the company use it for? Remember, the company has a very large capex plan lined up till FY30, so it will be used for that as well as debt repayment as well as eyeing inorganic growth via acquisitions is something that the company has mentioned. Now, the other block deal that just occurred was Craftsman Automation, a little over 2% of equity exchanged hands. The seller, as per the term sheet that we accessed last evening, is Srinivasan Ravi, a promoter shareholder, and the floor price at which that particular block deal was supposed to occur was at 9,250 rupees a share. So, over 480 crore worth of equity exchanging hands in Craftsman Automation.
Okay, thank you very much for that. Here's a quick recap then of the top stocks that we've covered earlier this morning. There is Cipla, there is Alchem Laboratories. Cipla, remember, was the big gainer yesterday after Citi initiated a 90-day coverage in the stock with a buy rating. But you generally watch out for these pharmaceutical names on the back of news. Alchem, Zydus Life, IIFL Finance on the back of the upcoming board meet. InfoEdge has disclosed the kind of AI investments that they've made or the overall investment in startup. And from 2007 to FY26, the company has generated an IRR of 33% on their investments. BEL, Sirma, SGS, these are stocks you should watch. There's Craftsman's Automation, JSW Infra, and Vedanta. We've got about a couple of minutes to go before we open up for trade. The GIFT Nifty will come up for you on your screen. Yesterday, the Nifty closed at 24,100. But I think once again, let that GIFT Nifty level also come up. But Vedanta is a stock that you're watching today.
Well, that's right. Vedanta is a stock that I'm tracking because the promoter entry in all probability could be coming in there to sell some shares, in the company. And that's what source-based information is indicating. 6.5 crore shares, at a price of around 291 odd, which is a 5% discount to yesterday's close price, which equates to around 1,900 crores in terms of a large trade that we're looking at. We'll wait to see who exactly is the parties to this particular trade. The promoter entry, remember, they had 56.38% stake as of last recorded. That's on March 2026. The promoter, that's Vedanta Resources, the debt has come down from $10 billion to around $5 billion. But they've indicated that they want to go to around $3 billion. So this could be the step in that direction. And also we'll wait because Mr. Agarwal hinted that he could also be looking at listing this entity. That's Vedanta Resources, since the debt has come down by a large deal. So that's Vedanta Limited in focus.
All right, that is Vedanta Limited in focus. We have about 30 seconds to open the market right now. About 31 points is where the Nifty has, settled in the pre-open lower. The mid-cap's doing a shade better. We obviously expect some moderation in the first part of trade with perhaps some acceleration in the second half, largely because of the lower crude prices. There goes the bell. The Nifty is open about 35 points lower, no real problems. The Nifty Bank is the one which is actually opened marginally in the green, is an outperformer, has been an outperformer in the past as well, and holding above the 24,050 mark for the first tick for the frontline index. The mid-cap index higher by about 90 odd points. We're seeing the small cap index as well, which is a mild outperformer. In terms of sectors, the pharmaceutical space is the one that stands out at open. We're also seeing some traction in the PSU bank space as well. The heat map comes up for you right now. We do have a bunch of stocks which are spiking from the Nifty. Dr. Reddy's is the one that stands out. We have Adani Ports as well as Bajaj Auto. On the way down, it is tech and metals. So the overnight sell-off on NASDAQ playing out in the same direction in our markets as well. So Infosys, HCL Tech, TCS, you have Hindalco, which is lower as well. But among the top losers today are tech, we have metals, and some of the large FMCG names, the likes of HUL, etc. as well. And this despite, the cut that we've seen in crude prices. In the broader markets, InfoEdge does well, but again, the losers belong to the metal space. We have Vedanta, Nalco, Hindustan Zinc, Rima.
That's because the dollar index has also moved up to levels of 101. So dollar index has moved up, which also in a way explains the fall that we're seeing in metals. And secondly, IT is facing the selling pressure today. So, on one hand, we spoke about the Max 7 stocks and how they fell, but even the software stocks in the US were under pressure. So whether you look at an SAP or a Salesforce, they had a decline of 1.5–2%. Palantir, which is a very close proxy to perhaps what the Indian IT companies, but more of an AI play. But Palantir had a fall of about 7%. So yesterday, the Nasdaq fall was not limited to the large cap AI names, but even the software companies sold off. And I guess that rub off is visible today. So Infosys is now accelerating on the way down. That's down 2.5%. TCS is down 1.6%. HCL Tech 1.4% lower. And you go down the curve, you've got Wipro and Tech Mahindra also down nearly 1%. Yesterday, many of these consumer names were on the back foot. So the FMCG index was the lone sector which ended in the red. And this morning, you can see cuts continuing on HUL and an ITC. So IT is soft, metals is selling off. Asian Paints down for the second day in a row. So that's down close to about 1%. And this morning, even some of these large banks, which otherwise held up okay yesterday, HDFC Bank, Kotak Mahindra Bank, have opened in the red. On the way up, it's pharma. There is that US cancer shortage story. So pharma is generally upbeat today. Dr. Reddy's leading the gains. Cipla up half. Apollo Hospitals up and about. Adani's group stocks are seeing buying. So Adani Ports, Adani Enterprises. Shriram Finance deserves mention. Along with that, you've got a Bajaj Finserv up in the green. And the rally continues on Reliance. Yesterday was a big move, 2.5% gain. And this morning, consolidating with a positive bias.
Well, talking about those that have continued their form from yesterday's trading session, Kirloskar Oil, take a look at that stock. It was up 20% yesterday. It's up another 10% today. The JM Financial note clearly has excited the street, post the argument that valuations need to narrow between Kirloskar Oil as well as Cummins. So that stock now up close to 10%. Vedanta Group stocks, Vedanta Power, Vedanta Iron and Steel, and Vedanta Oil and Gas, all of them are in upper circuit as we speak. That's a 5% circuit, what we're looking at. On the flip side, Vedanta Limited, where that large trade has taken place, 1.7% equity changing hands. So that stock, in fact, is down close to around 5%. Since the dollar index has shown some strength, silver prices have shown some weakness. And that's why you have silver ETFs, Kotak Silver ETF, Tata Silver ETF, Nippon India Silver ETF. All of them are a little bit lower. New India Assurance has rallied 30%. No, not making a mistake, 30% in this month itself. That's coming for some mild profit taking in today's trading session itself. So net, well, we're trading with a bit of a negative bias. The good news is the mid-cap index is already moved into the green and the number of stocks advancing more than the number of stocks declining, Mangla.
Yep, and we do have a bunch of other names as well which are finding some favor. Sirma SGS, the joint venture with Tata Electronics for EMS manufacturing in India, doing well for them. That stock's opened fairly in the green. We've seen a gain of almost 3.5%. The other one that stands out is Aadhaar Industries. Has been doing well. Now, this deal with Saudi Aramco to supply base oils to them has been well appreciated by the street as well. And a word on Asian Paints, it's gone ex-dividend to the tune of 23 odd rupees. So if you adjust for that, the stock ticker is down about 14 rupees. So if you adjust for that 23 rupee ex-dividend, then it's actually a 9 rupee uptick that we are seeing on Asian Paints, and which is what was expected given the sort of decline that we've seen in crude prices already. Some of the consumer discretionary names are better off this morning. We have Trent, which is doing well. Commentary coming in from Sanjeev Bikhchandani on InfoEdge also has that stock excited. It's among the top gainers today, up with a gain of almost 2%. Perfect time then to welcome our market master of the day, Nilesh Shah, founder of Envision Capital, joining in. Nilesh, remember the last time we spoke, you did like the digital platform plays and you liked the defense plays as well. Both of them finding a lot of favor, at least from the broking community right now. And the street is excited about the prospects here as well. Do you think you're nibbling into them as the markets are consolidating, or you're looking for newer ideas too?
So these continue to be the strong pillars of the kind of uptrend that we have seen on selective sectors. So while the large cap indices haven't kind of gained too much of ground, but very clearly there have been very strong sectoral trends, and clearly out there, digital platforms or digitization, defense and aerospace, driven by indigenization on the consumer discretionary side. There are plays both on premiumization and value. These are all very strong kind of domestic phenomena where the growth opportunity still remains very structural, very secular. And these are the kind of spaces or the sectors which I would continue to believe would remain in a strong uptrend for the near to short term.
Nilesh, hi, morning. Rima here. The big story overnight was this Meta Cred deal. Meta investing $900 million into Cred, Kunal Shah being elevated as the global WhatsApp CEO. I know no direct implications for the Indian markets, but since this is such a big talking point, I wanted to get your thoughts in. And are there any indirect implications of how the space may evolve, and there could be some rub-off impact on stocks like Paytm?
Well, I clearly believe that the business models of these different fintechs are very different from each other. There is really no significant overlap. So to that extent, I don't think any kind of a negative rub-off effect on any of the fintechs or the payment tech companies. Just that this is one more global recognition of the power of Indian talent and the fact that a global name goes on to hire Indian talent to basically lead these businesses at very, very interesting times. I think it's a very big positive from a sentiment point of view, but I don't see any direct business impact for the sector or, for that matter, any of the other technology platform companies.
Hi, Nilesh. Good to see you, Ben. Nilesh, what are you making of the markets, though, as of now? There's one school of thought that it's time for us to catch up, and do well from here on, post the recent underperformance. Now the pieces are coming together. The rupee is stabilized. You have crude prices that have corrected, and hopefully that earnings trajectory continues, because now we have 3 whole quarters with hopefully not many, headwinds. And also you don't have an election for, I think, close to around 8 to 9 months from here on. So some reforms as well are looking forward to. Would you be constructive on the Indian markets? Do you think fresh all-time highs could be reached in the next 9 to around 12 months?
Very, very likely, Nigel. I clearly believe that the markets have consolidated quite a lot, both from a time-wise as well as a price-wise consolidation. The only missing link are essentially the participation from foreign investors, and 2 is essentially stronger earnings growth from the very large pockets of the Sensex or the Nifty, which is basically the IT sector and the banking sector. But on the whole, I do believe that there is a very strong case for earnings momentum on a very aggregate basis to be extremely strong over the next few quarters. Some of the policy initiatives that have been introduced over the last few quarters are going to play out in the times ahead. And if there is a further push in terms of policy reforms, that's something which would basically kind of give a boost to the market and also boost the confidence of foreign institutional investors as well. So I think on the whole, the outlook is constructive. I believe that probably the worst is behind us. And it looks like that over the next few quarters, we could kind of continue to see an uptrend, and hopefully the markets will make new highs.
Right. Sometime in the next 6 months, second half of this financial year, there'll be 2 major IPOs hitting the market. We will have obviously the NSE IPO, and given the filing on the DRHP, it looks like they will be within days of each other itself. Do you think that could cause a big liquidity event in the market? Because if you go by the size, it could be anywhere close to $8 to $9 billion.
Well, yes. I mean, surely that's going to basically absorb a fair bit of the liquidity as well. But I think as long as domestic liquidity continues to be strong, mutual funds continue to receive systematic investment plans, these would actually be looked upon as opportunities for domestic liquidity to deploy itself. So to that extent, I wouldn't be unduly worried about it. I probably think that these are two very differentiated offerings, which actually could trigger or catalyze the foreign investors to basically come in and invest into them, because these are both very, very unique opportunities. So to that extent, I probably think there isn't any kind of a material downside because of these two mega IPOs. If at all, it could actually trigger an upside in the Indian markets at some point of time.
One sector, Nilesh, you're most bullish on. If you had money to invest today, where would you invest right now? And one sector which is a complete avoid for you.
Clearly believe, I think digital platforms are the best structural and the most attractive investment opportunity. I believe that these are very strong consumer-centric businesses backed by technology, and many of them have created moats where they sustain market share. Yes, in the very short term, there is competitive intensity, but many of them have proven that they can deliver on unit economics, and they're pretty much raring to kind of scale and scale efficiently. So I clearly believe that this is clearly the strongest pocket within the Indian equity markets from a medium to long-term perspective. So that's one area that I would be very constructive on. I probably think the space that I would be a little cautious on is essentially metals. I clearly believe that many of the metals have run ahead of their times, and maybe it's time for them to kind of undergo some kind of price consolidation. So I think metals is one space which I think I would probably avoid at this stage.
What do you think of power, renewables, and the domestic manufacturing space? You know, it's been fancied as an important theme, but many on the street also believe that maybe just the valuations have run slightly ahead of the fundamentals. Would you be in that camp, or do you think that growth will take care of the current overheated valuations?
I think growth is always basically the best punisher. It's always the silver bullet. And any sector, any bunch of businesses which demonstrate superior growth are essentially going to get rewarded by the markets. Clearly believe that Indian manufacturing is evolving. It's coming of age. It's got tailwinds of several policy reforms. Surely there'll be many more policy reforms which will make Indian manufacturing more competitive. There's a lot of breadth. There's a lot of variety in Indian manufacturing, be it auto components, be it companies which are making components or equipments for the energy sector. There's defense, there's aerospace, and also the bilateral trade agreements which have already got executed and which are likely to get executed will also boost some of the conventional sectors like textiles or chemicals and pharmaceuticals as well. So I think on the whole, manufacturing is an extremely attractive space, and I still believe that Indian manufacturing will basically kind of show up quite significantly over the next few years and remains an extremely long-term investment opportunity.
Are there any names here that you like in specific? You can give us some direction.
So we own across all the sectors that I mentioned, be it defense, be it pharmaceuticals, be it auto components, auto ancillaries, or companies which are basically suppliers of components to power projects or renewable projects. I think we own a bunch of them, and we continue to maintain a more diversified approach, given that the breadth of opportunity is so huge that it's always going to be very risky just to kind of pick one player and bet on that, versus that it probably makes sense to have a diversified bunch of opportunities there.
Monsoon risk, is that priced in already to your mind, Nilesh? Or is that going to be a big headwind?
The fact that it's forecasted that monsoons are going to be below long-term average, I think that's something which is priced in. I don't think we've seen any significant rally in consumer staples or some of the other rural plays as yet. So to that extent, I think that's a bit priced in. The question is, the accuracy of the forecast. And I think as long as we have monsoons which are in line with the forecast, I think that's fine. I don't think the markets have any additional reason to worry about. But if the actual monsoons end up being far lower than what's being forecasted, then I think that could be a fresh source of worry in the short term.
Okay, got it. You were also bullish on the GLP-1 opportunity in the pharmaceutical basket. Has that played out, or do you think that's also still a structural opportunity? The entry point also matters.
I still believe that it's still early days for the GLP opportunity, and there's one way to play it, which is basically the direct play. I think that continues to be still very, very good, both the domestic opportunity as well as the global opportunity. So we like the GLP opportunity, and especially from companies which are direct proxies to those opportunities. In addition to that, along with demand for GLP medicines, I think along with that, there's a very strong demand emerging in the category of multivitamins, proteins, nutrition. These are pockets which essentially are ending up being collateral beneficiaries also of the GLP opportunity. And along with that, they remain strong proxies for aspirational lifestyle as well. So clearly, we are basically participating in the GLP opportunity through a combination of these subcategories, which is the direct GLP plays as well as the indirect GLP plays through the multivitamins and supplements and all of that.
Thank you very much for joining in, Nilesh. Always a pleasure chatting with you. Thank you.
Thank you so much.
Okay. In just moments from now, we'll get in the management of Aadhaar Housing Finance. For the markets per se, it's back to that 24,100. That morning dip was slightly lower. We had opened about 30 points down, but that has been recovered. Things are absolutely flat, consolidating. Today is the Nifty weekly expiry. So generally, the second half of the trading session, the last hour, could be far more volatile. If
you're looking at the pharmaceutical space, there is another round of serious optimism out there. The morning we saw some outperformance, and now we're just seeing a build up to those gains. Look at Piramal Pharma, up 7.5% right now. Strides Pharma also at the high point of trade. We're seeing some traction in Laurus Labs. There's Syngene, which is moved to the high point of trade. We're seeing some buyers in Biocon as well, which too has moved to the high point of trade. And alongside that, on the frontline end, obviously, we have Sun Pharma and Dr. Reddy's, which have been outperforming from the word go in today's market so far. Divis and Cipla are among the top gainers on the Nifty as well. So the pharmaceutical pack looks like it's in a bit of a form, a purple patch of its own right now this morning with the kind of move that we've seen. Flat on the frontline index, the Nifty Bank also slightly flattening out. But the pharmaceutical index definitely on fire.
Well, I think another stock that's up, I think, is Space Digitech. They put out some ambitious guidance yesterday. There was a presentation that was uploaded. I'm guessing that is the reason why that stock as well is moving higher. It's moving higher on large volumes as well. So keep an eye on that one name. It's up close to around, I think, 8.5% or thereabouts. Just trying to see a 52-week high, because I think the stock had actually corrected from the top. Yes, it was at around 230 rupees, corrected all the way to around 190 rupees. Now the stock is excited because of the ambitious guidance that's been set out. So we'll have track delivery. Last 1 year, stock is still down close to around 10% after rallying 8% today. But the reason the stock is buzzing is because of their ambitious guidance that's out there. And Kirloskar Oil, well, it's not on a slippery wicket at all. Stock is up close to around 12% as we speak, following up yesterday's 20% run. So big move is what you've seen on that name as well. And as Mangalam pointed out, some of these other pharma-related names actually that have moved quite well. And as we did that check, the markets actually have moved into the green. So interesting times on that one. And yeah.
Curious, Nigel. We spoke about the QSR space with Dharmesh earlier. He said it could well be just a trading pop, no more than that. This morning we have Westlife Food, which has also seen a bit of a spike, up around 2.5%. Eternal is obviously the one that delivers. Swiggy is another platform, but when we say QSR, maybe Westlife Food is something that should come up for you on the screen right now. Jubilant FoodWorks was doing well in yesterday's trading session, up around 0.2% right now as well. But if you pull up the intraday chart of Westlife Food, you would see that maybe burgers on the house. Nigel?
Okay, before we get to burgers in the house, let's talk about the house itself, because we've got Aadhaar Housing Finance now joining in. So they recently met ICICI Securities. There was a roadshow, and from that note, they believe competition is increasing in the affordable housing segment, but most lenders are focused on prime and mid-income housing, and Aadhaar continues to dominate at the lower end, so the sub 15 lakh category. Rishi Anand, MD and CEO of Aadhaar Housing Finance, is now joining in. Rishi, thank you very much for joining in. The broad narrative seems to be that affordable housing sales have fallen. Is that something that you've seen in the category that you operate in? How is the demand on the ground? Any numbers you can share for Q1?
Okay, great. Morning, Rima. As always, pleasure. You're right. There have been multiple reports which we also go through with regards to reduction in the supply side on affordable housing. The good part is when we talk about low-income housing, there is nothing to do with the construction activity. And I'll give you some statistics around it. For example, in my company, 35% of my consumers do something called self-construction. So obviously, the reports don't carry that data. Another 35% of the consumers buy secondary sales. Obviously, these reports don't carry that data. And the balance, 27%, 28% is low luggage property, low ticket, low luggage property. Hence, overall, I don't think low income housing, less than 15 lakh ticket size gets impacted by looking at one-sided reports on the supply side.
But what about monsoon? If water is not available for self-construction, for even the general, construction across segments, right? It doesn't matter. And water is not available. Has that impacted demand? Has there been a slowdown? And will that in some way affect the kind of collections or asset quality?
So Rima, when we talk about self-construction business, there is a seasonal impact, and it works both ways, less of water also slightly impacts, but, if there are heavy rains, it impacts more. So it is more seasonality in nature. When there are moderate rains, that's when self-construction happens more. When there is heat, self-construction happens more because they need a little more time for things to dry up. So in terms of rains, excessive rains will actually cause an impact on self-construction. So I would rather say moderate to better rains will be a positive impact.
So for now, do you hold on to that 22% AUM guidance that you've been talking about, 18 to 20% disbursement growth for this year?
Yes, Rima, we hold on to our guidance of 20-22% AUM growth, 17 to 18% disbursement growth, and 20 to 22% profit growth.
Okay. All right. Hi, Rishi. Good to see you, Ben. What about stress among your borrowers? Are there any signs creeping up? I think salaried customers, if I'm not mistaken, as a percentage of your mix is around 55%. But self-employed is around 45%. So any signs of stress, or that's not really being witnessed?
See, these days, Nigel, when we talk about stress, there are two things that have been commonly talked about. One is the stress because of the West Asia issue. But, the way I look at my business is the first point of difference is always the rise or drop in the bounce rates. Fortunately for us, last 8 quarters, the bounce rates have been very stable state, whether it is on the salaried consumers or the self-employed consumers. So are we seeing any impact as we speak today? No, we are not.
Got it. That's good. What about the cost of borrowing then? There have been various measures that have been announced by the RBI as well. There are some funding options that have come about as well. Could you tell us your take on it, and how do you see your cost of funding move from here on? The fear was that there could be a rate hike, which hopefully gets, pushed back because inflation could be under control maybe till the end of this year. So your cost of borrowing, I think it was around 7.8%. You could correct me on that number. And how do you see it trending from here on?
So yes, you're right, Nigel. Our cost of borrowing as we exited the year was 7.7% to be precise. The first quarter numbers have been trending well. We are again at about 7.72. So I would not say there is any change in the cost of borrowing. Resultant of which our spreads are a steady state at about 5.5, 5.6%. Yes, you're right. I think the industry was expecting that there will be a raise in the interest rate, which fortunately did not happen. Our belief, the way we look at the current situation is in the current financial year, we are expecting a 25 bips rise in the rate. Fortunately for us, the way it works, Nigel, is 75% of my borrowing and 75% of my asset side, both are floating in nature. So whatever comes in eventually moves on either ways to the consumer. If there's a drop, it gets passed to the consumer as we did in February this year. 15 bips was passed to the consumer. And if it rises, to whatever extent it is passed to the consumer.
Okay, and your NIMs should be maintained, I think, in the vicinity of what it was in the past, 8.5%, if I'm not mistaken?
The NIMs?
Yeah.
The NIMs, we closed the year at about 9.18. I think that is a comfort zone that will be at even in the current financial year.
Okay, around 9.2% is what we could work with, right?
That's right.
All right. LAP as a percentage of your portfolio, I think that's holding at around 25-27%. How do you see that panning out from here on?
Nigel, if I look at the way the regulator tells us, and the way, since we are a regulated entity, 60% of our balance sheet has to be individual home loan retail, which effectively means broad-based, effectively means 70-30. Today I am, and you're right, my numbers are about 27% low ticket, low leverage property. I think that's the good space that we would want to be. We would not want to be closer to the breach point. So 27-28% is what we're looking at even the current financial year.
Okay, and a final question then from my end before I let you go, Rishi. Return ratios, that's ultimately what gives the valuation. You're talking about good growth from year on, but what are the targeted ratios, ROE, ROA?
Nigel, I'll talk about not only the current year, I'll talk about midterm. The way we look at last year exit was 4.4 ROA and about 15.9 ROE. I think we have into FY24, if my numbers are right, we delivered a 4.2 and an 18.4. I think that is the sweet spot we will be looking at in the short to medium term, a 4.2 and an 18% kind of ROE and an ROF of 4.2.
Okay. And in your long-term target of getting to 50,000 crore AUM by FY29, is there going to be a change in the geographical mix?
Rima, see, we are a company which is spread across all the states, possible states in the country. We are at 22 states with about 626 branches and growing about 50 branches more. I would say from a pure risk perspective, when it comes to top three matrices, which is AUM, disbursement and distribution, we will be evenly spread. We don't want any state to cross 15% contribution on all the three parameters. So the current geo mix is going to be stable state even from a slightly, I would say, longish term perspective.
And what percentage of your, the disbursements that you do is digitally sourced? Now, everyone seems to be talking about how AI is doing the job and assessing credit and the kind of loans that you're giving out. For y'all, is there a number?
I will try and give it a slight twist, and purely because of the segment I deal with, Rima, I will not expect my consumer to go on a digital platform and apply for loans. These are low-income consumers. They are the bottom of the pyramid. But another perspective is that today 100% of my consumers that come on a digital platform. So I don't create physical files. Everything is on a technology platform. As we talk about technology internally, I think we are an organization, we would be one of where even we are ready to do a sanction in 30 minutes. So we are as ready as a 30-minute sanction. But, the consumers will take a little more time to respond. And as a data point, today 6 to 7% of consumers don't even have a smartphone. They work on keypad phones. That is the consumer you're dealing with. And hence, it is very important for people like us to reach out to the consumers. Hence, I would say the large branch network is required. But having said that, I am very, very positive when it comes to my consumers. I would say outer side, couple of years down the line, they will be, and we can see early signs of consumers becoming tech savvy. I have a consumer app where consumers are coming in and applying for the requirements. But from a pure digital sourcing perspective, it's slightly away. But we do multiple things on digital platform with respect to sourcing, with regards to leads coming from various digital sources. All that happens, but consumer directly coming, I think it will take a little more time.
Okay, thank you, Rishi. Always great chatting with you. Thank you for joining in. We will get into break. On the other side, the management of Elgi Equipments will be chatting with us. Stay tuned.
Welcome back. Well, the markets have moved into the green. The Nifty was down 40-50 points just to start off trade with. And guess what? After a while, we're outperforming because the Kospi is down more than 4%. I think the Japanese index as well was in the red. So India has moved, into the green, which is good news. Hopefully, our time has come in terms of an outperformance. Well, let's focus on the next management. Elgi Equipments, that's the next management on our radar. Remember, the stock is up close to around 30% or thereabouts. To help us out with how business is shaping up, what's the longer-term goal, we're joined by Mr. Jairam Varadaraj, the Managing Director at Elgi Equipments, who joins us. Hi, sir. Good morning. Thanks a lot for speaking to us here on CNBC TV 18. Well, you've made a few announcements, so let's get straight to that. You have elevated a senior leader like Mr. Sen, specifically to head Americas as well as Europe. And, I was looking at the last few quarters, you have now broken even in both the United States as well as Europe, after, a few difficult quarters as well. So could you tell us what is the revenue and the margin ramp up in both these two markets going ahead?
So thank you. It's great to be in your program. For us, Europe and the US are very strategic markets besides India. And Indranil, who has been a CFO for almost 3 years now, has got a good sense of the business, and we need someone to lead it, bring the home office flavor into the respective subsidiaries and bring the subsidiaries into the home office and create a greater integration between the operating units. And that's really the intent behind it. In terms of growth, we are looking at mid double-digit growth in both these markets. We have broken even in Europe, and we are profitable already in the US. So this growth trajectory is going to give us quite a bit of a positive EBITDA in the future.
Okay, so you're saying that double-digit growth in both these two markets with improving margins, since you're broken even in Europe, is the trajectory going ahead?
Absolutely.
Right. What's the timeline that you'll be taking to appoint the new CFO?
So the process is typically in a senior leadership position like this, it will take us anywhere between 6 to 7 months for someone to, get into the role and settle into the role and be able to take on. So that's the kind of timeline we are looking at.
So 6 to 7 months is when we should hear on the new CFO as well of the company. I was looking at the strategic plan that you've laid out for analysts as well. You're looking at nearly 7,500 crores in terms of revenue, $750 million USD. That is about an 11% CAGR over the next 5 years. I look at your last 5 years, you've obviously grown at mid-teens. So I'm just trying to understand whether it's base effect or are you under-promising and looking to over-deliver here?
So our tradition has always been to over-deliver, keep the promises light. But, in the last 4-5 years, we have seen a lot of uncertainty in the environment. COVID happened, then there were metal commodity fluctuations, then the tariff happened, now the West Asia problem, Ukraine war. So there is quite a bit of uncertainty in the environment. So we have to moderate for that. And that's the only reason why we are being conservative in looking into the future. The business fundamentals are solid. We have got very deep stake and presence in all these critical markets. We have repeat customers, and which is an indication of very good acceptance of the product. All this is solid, but the environment is something that we are unable to predict.
You're also targeting after-sales services to contribute about 20 to 25% of your overall top line. What is the current contribution and what is the margin profile of after-sales?
So the current contribution of aftermarket will be, on an average across the world, would be around 16 to 18%. And that's the current prevailing level. In terms of profitability, the aftermarket is about 2 to 3 times more profitable than equipment sales. And that's really where in a business like ours, this is really where the profit driver is aftermarket.
Soon do you get from 16, 18% to 25%?
Yes, that's the goal. Yes.
Now, how soon? Will that happen in 3 years, 5 years, FY31?
I think we have given a commitment for the next 5 years that we will move our EBITDA from the current levels to around 18%. As part of moving that to that 18%, a big part of the contribution is going to come from aftermarket. So I don't think it'll move to 25% in that 5-year period, but certainly in the 20-22% level is where we are expecting it to land.
Got it. All right. Since you're focusing on the India business, I think you're expecting India to outpace the growth of the company on the whole. Would that be a fair estimate?
Well, India growth is definitely higher than the rest of the world growth, and therefore our growth in the market is going to be higher. And we also have India as a very strategic market, and we have created multiple plays in the Indian market. One is our go-to-market for existing products. We are launching a new range of products for a different tier in the segment. So all these are going to be very strong contributors to our growth in India.
I think India from around 45%, you're expecting it to contribute around 53% as you go through to that goal in the next 5 years or so. Is that correct?
It really depends on, how the rest of the world, today it is roughly 50-50. India is 50 and the rest of the world is 50. In terms of the future contribution, we are working in Europe and the US, which are very, very large markets. And if we are able to gain very solid traction in these markets, then the contribution definitely will be far higher. So that's not a goal that we are pursuing.
Are you seeing signs, though, that the capex cycle is turning here in India and things are picking up?
Absolutely. I mean, I think there is a positive sentiment, but, there is a pause to really find out where the world is going to settle with West Asia. Now, once that is settled, I think it's the speed will pick up. Right now, the inquiries are strong, but finalizations are taking a little time. Yeah.
Just wanted to understand a little on your sales mix as well, because air compressors still over 90% of your sales, and you have automotive equipment, which is a margin dilutive business that's a lot lower. Are you going to see a notable shift in the contribution that comes in from the automotive business? And will there be signs of improvement in the margins here as well?
To answer your first question, I don't see a shift in the percentage contribution of the automotive business to the overall portfolio. In fact, it could start shrinking because we expect the compressor business to grow a lot faster. And definitely we are working on multiple initiatives to improve the margins there. So that could also be contributing to overall consolidated performance.
And is one of those initiatives also to reduce your import dependence? Because I remember it coming down to about, or your own manufacturing to be about 88%, and you're targeting this to be almost 95% plus. How much of an investment will that take, and how would that move your margins?
I don't think it's too much of investment, really. It's a indigenization of many of the products that we are buying from different parts of the world. This is something that we have taken as a part of the initiative to improve the margin, because the volatility in the exchange rate is something that caught us a little blindsided. So we are taking that as a serious situation for the future, that the rupee will continue to be weak, and therefore we are looking at insourcing a lot of the products into India.
All right. Thanks a lot for joining in, sir, and wish you good luck for the long-term guidance that you've given. And for us here, everyone will be very happy if the India capex cycle picks up and gets some steam, because then that starts to roll the GDP engine as well. And once that happens, people start earning a lot more and then spending a lot more on discretionary consumption. And that's exactly what our next discussion is all about. Cordelia Cruises' parent, Waterways Leisure. Thanks a lot, sir. Okay, let's move on. Let's talk about the IPO corner now. We have Waterways Leisure Tourism's near 600 crore rupee IPO that opens today for subscription. Obviously, this is known better as the company that operates Cordelia Cruises, and the price band is up for you on the screen, 769 to 808 rupees. And they're looking at a post-listing valuation of closer to 5850 crore rupees as well. We do have Ergen Bayong, who is the chairman and CEO of the company, who joins us. Along with him is Nishikant Upadhyay, who is the CFO as well. Thanks a lot, gentlemen, for joining in, and good luck. Welcome to the stock markets as well. Welcome on board, as they say, on some of your cruises as well. When I look at the offer that you've made, it looks like more than what you're doing currently. A lot of the growth hinges on what happens over the next couple of years, because currently you operate one cruise, which is the MV Empress, and over the next 2 years you do have the others coming in as well, Norwegian Sky and Norwegian Sun. I just wanted to understand what's the kind of economics that you factored in with these two? Because from a 1 cruise operator, you're suddenly becoming a 3 cruise operator. Does that mean your revenues and earnings increase proportionately as well? Do we see them tripling or even quadrupling from here on in the next 2 to 3 years?
Well, first of all, thanks very much for having us, and very good, valid question. So, yes, we are operating currently 1 ship in operation, but do remember, please, that the other 2 ships are already with us since last year, since 2025, and cruises are sold 18 months in advance. So we're already generating revenue, and these ships are available. So you see the 1 ship we have currently, which you know how much money we generate. The newer ships which we are getting, they are far more premium. They have 1,000% more quality cabins in terms of balconies and suites. They're 200 rooms per ship bigger. So yes, so if you do the calculation, each ship, so we're talking 250% more capacity, then better cabins, then I think you can do the maths.
I just did the math, actually. Yes. You know, your average revenue per passenger is close to around 110,000, 120,000 in the last year. If I use just that metric and your current occupancies for the next year with a 20% bump up, it looks like each of these new ships could give you anywhere between 800 to 850 crores in annual revenue. Would that math be off, or am I under calculating? We have the CFO with us. Please tell me.
Under calculating.
So I think you are calculating basis the Empress which is there.
Yes.
So he rightly pointed out that Empress has 796 rooms, whereas the Sky has 1,000 plus rooms. Empress has 69 premium cabins. However, the new vessel Sky has around 260 premium cabins. It is just like in the airlines where the premium economy and economy, that's the concept. And the demand for the premium cabins is across has been very large since
it's actually higher than regular rooms.
And globally also Indians are known for taking the most expensive cabin. It's a known fact, which is a fact. So the numbers, certainly there are restrictions, we cannot speak, but yeah, the
we can calculate. So 800, 850 becomes 1,000,
so
right?
we in our business, we talk passenger cruise days, right? So each room has 2 people. All rooms occupied is 100%, but remember, we are not selling rooms, we are selling beds. So we have actually 400 or 500 beds more than rooms, so we can have 120% load factor.
You know, gentlemen, Mangalam is pushing all for that 800 to 1,000 crores odd. But you are saying that the ships that are coming on are bigger in capacity and they're better as well. So from around 600 crores that you all did last year, in terms of revenues, effectively 250% is what you said. So the potential, say, in the next 3 years or so could be 1,500 crores of revenue. Would that be a capacity, that you could actually scale to, and that could be an aspiration?
So see, 796 rooms goes to 2,800 rooms, and this almost
4x.
8, and the premium cabin mix is increasing by 1,000%.
So effectively, your revenue potential goes to 2,000 crores plus then.
3,000.
Arithmetics can be what you are mentioning.
3,000 crores.
Okay, and what happens with the profitability? I'm just trying to understand a couple of more things from you. While you have spoken at large about the quality of these ships and all of that and stuff, they're also 23 to 25 years old, right? Typically, what is the residual economic life of each of these ships, and what's the annual maintenance that you have to pay for something? And while all these things, from a revenue generation standpoint, sound very good, we need to understand the break-even points here as well, because fixed costs are large in a business like yours.
Good
and
question.
occupancies, and there will be annual maintenance as well.
Very simple explanation. So cruise ships don't have such things life like a cargo ship.
Okay.
Because we have 800 audits a year. We are heavily regulated, about 30 times more regulated than the airline industry. We have a program that's called preventive maintenance. So we have to maintain our vessels every single day. And we are spending a good amount of money doing so. By regulations, each ship has to go out of water every 2.5 years or 2 times within 5 years. In our case, it takes about 7 to 8 days. We are going quickly to Dubai, coming back. And even that, we are going with passengers and coming back. And then, so there is no such life because the ships are continuously upgraded to the latest standard. So basically, the steel is 25 years old. In the inside of the ship, everything is brand new.
So the break-even point?
Break-even point is very simple. 60% load factor in the lowest pricing, we break even. And we are under dynamic pricing, so we have 3 slab pricing. 0 to 30% load factor, 30 to 60, etc., 90 to 120% load factor. 60% with the lowest ticket fare, we break even.
And you said the maintenance cost is quite high. So over a period of 5 years, when you do those two rounds to Dubai, how much would you be spending?
Actually, we spend approximately $250,000 to $300,000 a month. So it's about $3.5–4 million a year. But if we divide it again by passenger cruise days, it's not that much.
Okay. All right. So revenue potential, we have gone out of the way. I'm just looking at the last few years. The margins have come down. From I think upward of 30%, it's come to around 20%.
No, I think
you can explain that to me. Point number one. Point number two is the cash flows are negative. So explain that as well, sir. Please go ahead.
So first of all, in terms of margin, if we have adopted Ind AS,
so
right? And by virtue of Ind AS, since vessel Empress is owned by us, right now, so there is no point in discounting the lease rentals. My lease rental has two elements. We have been consistently paying $28,500 per day lease rental to the third party earlier or to the company which was providing the vessel. Out of this $28,500 per day, which works out to around 900K in a month, $1 lakh is only the lease rental. Rest is reimbursement of expenses. So when we decided to go for an IPO, then we saw that there is no point in creating right of use of assets and liabilities on future expenses which we will be incurring. So then we agreed, but since in the middle year it was not advised, so that was changed on April 2025. So now my leasing is 1 lakh and rest is reimbursement of expenses. So when we compare 2025 with 2026, there is an 87 crore worth of expenses which was coming as a below the line item in the EBITDA. Now it is getting captured in my above the line, and the specific line items are the crew wages, the insurance, the maintenance, and the management fees. So the line items are legal and professional, the crew wages. So these are the 87 crores. If it goes up, my EBITDA is better. Though the turnover for the 2 years, 25 and 26, which compare, is lesser by 10 crores, but my EBITDA is better if I nullify this.
Here on, what should we look at as an EBITDA margin?
35 to 40%.
35 to 40% reported basis.
Yes,
so this 19% turns to 35 to 40%.
Yeah.
On a revenue base which is going to triple or a little more from here on as well.
And now in terms of number also, when you are talking about the cash flow negative, if I compare the financial year 2025 and 26, for the sake of a better understanding from the investor perspective, my suggestion is don't go by EBITDA numbers, go by the profit before taxes and exceptional line items. Last year it was 113 odd crores. This year it is 79 odd crores. Whereas the 79 odd crores absorbs around 40 odd crores additional expenses which we have incurred, because since these vessels, as Jürgen rightly pointed out, that we have started booking the vessels, so we have increased the manpower, we have increased the office space. So that is around 40 odd crores which has been getting absorbed in 2026 numbers. Going forward, maybe probably I will not be able to speak, but then this expansion would not be there.
So
in
you
terms
have
of expense.
any revenue which is unrecognized from these new ships because you forward book it. So 18 months of revenue. Could you give us a sense on what that number is?
So if you talk about Empress, I normally sit on a advance cash of 125 to 130 odd crores, which will answer his question as well. When you talk about negative cash flow, in my 26 numbers, there is a negative operating cash flow of 96 odd crores. But this is not negative. Rather, it is reverse. If you see, there is a line item where there is an advance which is being shown, which is 162 odd crores. What is this advance? When I acquired vessel Empress, when I acquired vessel Sky, on the day in the month of April 2025, when I was about to sign the agreement, I was required to pay $16 million advance, which is almost 160 odd crores. So this is an advance for the vessel. Since it is an asset lien structure, it is a transaction wherein advance lease rental has been paid. So it is getting, if you nullify that, then I'm sitting on a reverse side on a positive cash flow of around 80 odd crores.
Are there any risks to your business from what you see right now? Because everything that you're speaking about looks like it's a blue sea scenario, not a blue sky scenario, right? Is there anything that potential investors should be worried about as threats?
We have the same risks like everybody else has, geopolitical situations. We have the same health risk when it comes, like, if you want to refer to COVID whatsoever. I mean, we were the first people to start during COVID. We were the first tourism sector starting during COVID. But we generally, what is our advantage? We have movable assets we can shift, right? Like now, when the rain starts, we're shifting to the other coast. We have sunshine 7 days, 24 hours, plus we operate 365 days a year. We are not seasonal.
Okay. All right, gentlemen. Thanks for joining in. When we were looking at the post-listing market cap, it appeared that you're coming at a price, market cap to sales of around 10 times or. But as you're telling us, capacity is coming on stream, so it appears now it's around 2 times or thereabouts. So we're letting you all go at this. All the best for the IPO. On listing, we re-invite you all, and that time we'll push you all a little bit more for some numbers. Thanks a lot for joining.
Thank you. Thank you.
Well, let's welcome our technical expert then. We have Chandan Tapare who joins us. Chandan, what are you making of today's initial trading action, and also fill us in with a couple of your picks?
Yeah, good morning. Thanks for having me. So the market is positive to range bound as a small decline is being bought, but trend is positive. So positional basis, we have support near 23,888. Till that holds, index has potential to head towards 24,224 to 24,444. So buy on decline and positive to range bound bias in the Nifty. Looking at the Bank Nifty, it has been consolidating from last 3 days, but supports are intact. With support of 57,500, use any small dip for the next leg of rally towards 58,500 marks. Looking at the stock specific action, positive on the Nifty Pharma, and most of the pharma counter looks good. Whether we talk about the Biocon, Lorest, Lupin, Cipla, Glenmark. But here I would suggest to go long on Biocon, which has given a consolidation breakout. Major trend is positive. On the weekly chart, it is all set to give a breakout from pole and play. So buy with support of 423 for target of 455. Second trading idea, that is buy on Oberoi Realty. After a long time, the real estate sector is bottoming out. Consolidation breakout with build-up of long position is clearly visible. It has given a decisive close or hold above 1700, 1720. So buy with support of 1697 for next leg of rally towards 1800. Last but not least, that is buy on Bharat Forge. Strong momentum has been making higher top, higher bottom. Buy with support of 2085 for target towards 2210.
Chandan, thank you very much for that. Oberoi Realty, Biocon on his radar. In fact, the entire pharma basket is up. Cohance 10%, Piramal Pharma 10%, Aarti Pharma 7%, Newland Laboratories 6%, MCure 5%, InSwift 5%, Jubilant Pharmova, Alembic, Natco, Loris, Panacea Bio. Across the board, you're seeing some big moves. Get into a break. On the other side, we'll come back and talk commodities with Manisha. Stay tuned. Welcome back. Let's turn our attention to commodities. Manisha is now joining in, and crude prices continue to trend lower, $77.5 per barrel. Manisha, over to you.
Well, thank you for that. Yes, overnight markets have seen 3% of a decline for the crude oil prices. But interestingly, the volatile moves in the crude prices just about continues. If you look at the trading range that we saw in crude yesterday, the high was 81.5 and the low was almost at 76.5, and that's exactly where we seem to be trading at this point in time. It's a 19% of a decline that we have seen in case of crude oil prices in the matter of last 1 month itself. Well, US issuing Iran a 60-day license to sell oil in international markets has eased the risk premium slightly there. And then the shipping activity via Strait of Hormuz seems to be increasing as well. If you look at the overall number, well, the reopening of the strait has unlocked an estimated 100 million barrels of oil that has been awaiting transit there. Also, when Iran has shipped nearly 30 million barrels of crude in the last 1 week itself, and as per the Kepler data, 35 ships went past the Strait of Hormuz on Saturday, 17 on Sunday. It was a single lower digit on Monday as well, but that number is expected to increase. And then you also have countries and major producers like Kuwait and UAE looking to set alternate routes for crude exports. Well, the only reason that you didn't see the crude prices 140 even as the Strait of Hormuz was shut is because there was crude already on water, and then the alternate routes were actually put to higher capacity as well. Interestingly, there also is an IEA sentiment or data that says that the war has blocked 14 million barrels per day of West Asian oil output, which will start now coming into the markets. The IEA also says that the supply will surge by nearly 8 million barrels per day in 2027, while the demand is estimated to go up only by 2 million barrels per day. So we're looking at an excess supply or surplus, and that perhaps is the reason that you're looking at lower price forecast for 2027. The only one thing that seems to be supporting prices somewhat is the U.S. crude stocks. When you look at the SPR, well, that is down 331.2 million barrels last week to a 1983 low. And the U.S. crude inventories also have continued to decline. The last 3 weeks have seen very strong declines come into the market. And with that, it's nearly an 8-month low that we are looking at in sense of the U.S. inventories as well. The final chart should come in on your screens, and that tells you on what the latest updates have been in sense of crude price forecast going forward. And those updates clearly have been coming fast enough. Wood Mackenzie is talking about $92 a barrel in this year, but they have a much lower forecast of $79 a barrel in 2027. EIA has already spoken about 105 and 79 again on the lower side in next year. ICICI Banks has talked about 79 this year itself, and they're talking about a range of 65 to 75 for the next year. JP Morgan 60 this year to 57 next year. Markets, there have been some reports suggesting that if the supply glut continues to come in very, very strong, you could be looking at mid-50s of a price as well. And then Saxo Bank believes that the near term is going to be choppy, but next year they also believe that it is going to be a lower average in sense of crude prices. 75 is a number that they have put out for that one as well. And then Goldman Sachs has talked about 85 this year, 75 next year. Morgan Stanley hasn't given a 2027 forecast yet, but $80 a barrel, so lower than Goldman Sachs. Citi bearish again, 70 this year, 65 next year. Barclays 100 this year, 80 next year. And then you have Crystal Energy believing that $60 of an average price in the next year is a possibility. And when you talk about a 60 of an average, that means you're looking at sub-60 kind of levels continuing in 2027. So bearish cues coming in for crude from here.
And that's reflecting in our markets because the Nifty, after a slightly muted open, has picked up now. It's 24,124 on the Nifty, up 21 points. Get into a break. On the other side, Lata speaks to former SBI Chairman Dinesh Khara and former Deputy Governor of RBI, S.S. Mundra. In our special segment, It's the Economy.
Welcome to It's the Economy. Last week, Betra, an institute that trains bankers and banking aspirants, published some eye-popping data. It showed that profit growth and fall in NPAs of public sector banks has been better than private sector banks in the last 5 years. This has been, of course, acknowledged by the market with PSU valuations rising. But one statistic from Betra is probably not known to all of us. Despite accounting for 61% of total banking business, the total number of PSU bank employees are less than the total number of private sector bank employees. I mean, just imagine, total employee strength of PSU banks has been stagnant for 5 years, while that of private banks has risen by 32% in 5 years. What explains this huge fall in hiring? Does this need to get corrected quickly, or will it at least lead to loss of more market share? To answer all this, I have with me two veterans from the public sector banking space, as it were. Mr. S.S. Mundra, he's former Bank of Baroda chairman and former Deputy Governor of the Reserve Bank of India, and Mr. Dinesh Khara, former chairman, State Bank of India. Well, incidentally, State Bank of India has not lost as many employees as the rest of the public sector banks, but it is still not keeping pace with the rise in employees that we have seen in private sector banks. So, Mr. Khara, actually that question for you first. How do you explain this? I mean, even State Bank has seen a fall in employees FY22, 23, 24. And then there is a minor increase, which is better than other public sector banks. Why that?
Well, thank you very much for having me on your show, first of all. Well, the subject which you have touched upon is essentially relating to, when it comes to percentage growth or percentage decrease, it has to be seen in the context of the baseline. So when it comes to private sector banks, of course, they have seen a significant growth, but they have also got the baseline, impact also is there. Similarly, when it comes to legacy banks like public sector banks, they also have the impact of the baseline. So I think that is one area which we need to really keep in mind. The other aspect is that over the period of time, when it comes to public sector banks, they have also centralized their processes quite a lot. Other aspect is that when it comes to the cost of employees, maybe up to the level of AGM, which is actually the senior management grade. So there, the cost of employee for the public sector bank is much higher as compared to the private sector bank. And also when these banks are now oriented in terms of meeting the market expectations, they have to ensure that their cost to income ratio remains within check and control. So that is the other aspect which has to be kept in mind. Having said that, we have to keep in mind the service on the counter. So that is the reason why perhaps the kind of model which has been followed by private sector banks in terms of having the back office processing centers, or maybe the subsidiaries which are doing the feet on street kind of a role. This was adopted by public sector banks also in the last about 5 years plus. So I think that is the other aspect which actually helps them in terms of containing their cost and also at the same time meeting the expectation of the customer on the.
Yeah. So actually, when I was doing my homework for this discussion, I did speak to a lot of current public sector bankers, and they gave some of the similar reasons that mergers took some rationalization. The cost of their tier 1 lowest level employees is higher, and so they have these subsidiaries. Union Bank, BOB, all of them have subsidiaries where all the sales people are employed, where you can give variable pay, where the starting pay is lower, it is not as high. They've gave those reasons. But those subsidiaries have a few thousand. Like all told, with all banks, it'll be 5,000-10,000. But I just want to pull up the numbers of employee strength. Look at the private banks and the PSU bank. Can we get that table? Private banks were at 6 lakhs in FY22. It has gone up to 7 lakhs, then 8 lakhs in 2 years. Whereas the employee strength of private public sector banks is almost stagnant. It's risen a bit only in the last year. Mr. Mundra, what is your sense, sir?
Yes.
What is stalling? And will this not impact? See, ultimately, they are serving 60% of the sector, but they have fewer employees. This beats logic.
Okay. First of all, thanks, Lata, for having me here. And yes, I mean to say, fact cannot be taken away. If the data which you have mentioned, the head count in public sector banks from 22 to 26 has rather reduced marginally by 4,000. It was 7.94 lakhs in 22, which has come down to 7.90 in 26. And private sector banks, as you mentioned, has increased from 6.31 to 8.30. There are 2-3 factors let us keep in mind. First, as Mr. Khara also indicated, number one, these data need little more granular details and deep delving, because we don't know how much are outsourced, how much are contract worker, what are sitting in subsidiaries and all that.
Yes.
But having said that, I fully agree, fact cannot be taken away.
Only 2 lakhs is my point.
Yeah, it can't be so much. But we should also understand that this period which we are referring to had been a period of consolidation in public sector banks. And large banks were created, and the whole purpose was to rationalize the headcount as well as the branch network and reduce the duplication and redundancies. I think 22 to 24, that happened. Again, you will find very interesting, from 22 to 24, the public sector banks had a negative growth in headcount as well as in branch network. Private sector banks had a double-digit increase in headcount. Then 25 public sector banks came in positive territory. Private sector banks went into negative territory.
Yes.
And in 26, the increase in headcount and public sector banks has surpassed what it is in private sector banks.
Okay.
So what I mean to say, there is a period of transition, but I fully agree there is a need to have a relook at it, because the per employee business in public sector bank is much higher. Yeah. But again, if you compare it with the profitability, 22 to 26, public sector banks have shown good performance. There has been almost a 3-fold jump in profitability. But again, because there was a period of NPA, there was a period of write-off and all that. But what is important, during this period, the profitability of private sector banks put together had almost reached to the level of public sector banks, despite having less than half branch network, less than half per employee business.
Yeah.
So the point which is coming out, large network, large branch network is not necessarily bringing the business or profitability. I think private sector banks had been able to deploy the people in large number at the centers which bring greater profitability. And that is why I said some deeper delving is required. If you look into the non-interest income, pay income, CASA ratio, I think these are the areas where the headcount is put and it is bringing revenue as well as profitability. So it's a mixed bag. It's a period of transition. It needs little more analysis. Recent trends are different, but fact remains, yes, it needs to have a relook.
No,
but there is
every sentence you say, sir.
Just 30 seconds. But there is a twist to that because of the last 1 year development in the global economy that I'll come to later on.
Okay. Actually, this requires a half-hour discussion. I'm sorry. Mr. Khara, do you think I looked up, the kind of jobs that public sector banks are forced to do. Do you know, I mean, I guess you know this at like the back of your hand. The total number of Jan Dhan accounts, 96% is with public sector banks. 96. I mean, that would be labor intensive. In spite of it, their total number of workers is less. So, I mean, I just want to ask you, is there a policy problem? Recruitment has to be by national exams and stuff like that. You can't do a lateral hire if you want someone for AI. You have to still wait for the entrance exam, is it? I mean, are all these the problems that will choke the growth in future?
Well, I think that's not as much of a challenge. There is, of course, recruitment has to be done through an exam, which has to be a national exam. And there also we get to see different trends. People are coming from certain geographies. People are not coming from certain geographies. But public sector banks have got a responsibility in ensuring the branch network across the country. So I think they do face some kind of challenges in terms of, today's generation perhaps is not as keen for the mobility within the country as much as perhaps in the good olden days, people were go around. So that is one of the challenges that right.
Compulsory transfers.
Yeah, compulsory transfers. And moreover, transfer will depend upon the positions where they are available. And so that also involves, people to pick up the language, local language, etc., etc. So those are the realities which cannot be denied. But yes, having said that, I must also mention that there is no such restriction when it comes to hiring people with the skills which are relevant to the banking system. And I think on that particular matter, various bank boards have taken very pragmatic steps, and they have actually hired people from the market wherever there was a skill deficiency within the system. That is one of the reasons why we have seen the kind of digitization in the public sector banks over the period of time. And I think when it comes to the newer trends in terms of adoption of AI, etc., the models which are required to be developed within the banks have got, if at all they don't have the requisite skills, they can always hire it. Maybe it could be on contract. But yes, of course, we have to keep in mind the kind of aspiration and expectation of the people who want to take up such kind of roles.
That's a fair point.
People actually want to come into the public sector banks because of the scale, because of the variety which they offer. So I think in terms of their professional maturity, it certainly contributes in experience in the
Fair point. Mr. Mundra, we have just a minute left. I mean, is this a recipe for decline, and what's the answer?
Yes. So as I was mentioning, and maybe perhaps we can discuss more after details, as I said, last 1 year development, we all have been hearing something like Zen AI and Agentic AI. So having a lean strength and maybe focused on technology, which has been in recent year, I think it is an open question whether it will be a blessing or it will continue to be a problem. So we can continue to discuss on this maybe after your break.
Yes, sir. So we will have to meet again and have a longer discussion on this. I take your point. This is a very important point that needs further analysis, because public sector banks still have a large reach, social role, especially in terms of inclusion. I'll invite both of you yet again for a bigger discussion. Thank you very much for joining me. Yes, one hopes AI will be the answer, and that's what markets are prepared for. But somehow I feel private sector banks will not be so foolish as to overhire. There may be some business that they are taking away from public sector banks, and so the government better watch. On that note, we wind up on this discussion after a break. Chartbusters.
A large block deal in Vedanta sees 7.5 crore shares change hands at nearly 292 rupees per share. The stock slips 8%. Sources say promoters have likely sold some stake.
Reports suggest that the US FDA has reached out to Indian pharma companies for a key cancer drug as it grapples with supply shortages. Stocks have dropped amid a surge, with supply likely to remain limited through 2026.
CNBC TV18 Newsbreak confirmed JSW Infra launches a QIP to raise 7,500 crore rupees. The issue is priced at 285 rupees a piece, which is a 7% discount to yesterday's close price. The stock up 2%.
Infoedge says investments in 135 startups worth around 4,900 crore rupees made since 2007 are now valued at over 40,000 crore rupees. The stock rallies close to around 2.5%.
The rally in Kirloskar Oil continues. The stock continues to surge after Kirloskar Oil announced a foray into the data center infrastructure business yesterday. Stock up 6%.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And it's a good day of trade because the Nifty is trading in the green. The broader markets as well are outperforming. And the breadth of the market is positive, Mangalam, though the Midcap index in the last few minutes has come off a little bit from the top.
Yes, the decline in the Midcap index is largely at an index level on account of the metals pack that we've been discussing. And alongside that, we've seen some decline in a couple of these Midcap IT names as well. No problems for a lot of the real estate pack as well. Like we earlier pointed out as well, that this was a space which was not doing very well. But now with the war ending and the uncertainty ending around as well, we've heard from managements of all these companies as well. There's been a fresh set of legs which have been, which the real estate stocks have started to own. And we've seen a big move. Lodha Developers up 3.5%, Prestige Estates up around 3%, 2.5% higher for Oberoi Realty as well. And now that it's rained in Mumbai, the street believes that maybe at some point in time, if the monsoons continue, fingers crossed, we will have, the current construction ban that has come about from the BMC, which, is not supplying water to a lot of these construction sites, may at some point in time be revoked as well, which is why a lot of these players are buzzing too. But good time to welcome Dharmesh Shah, who's the Assistant VP, ICICI Securities, for a quick technical check on the market. Dharmesh, we're consolidating on the frontline index, but a lot of individual stocks doing a thing of their own.
Yeah, so good morning, Mangalam. Absolutely, I think so. If you look at the market for last trading session, we have been witnessing more of a stock specific action where the mid caps and the small caps have been making a new high. I think so. The mid cap index already witnessed a new high, and the small cap index itself witnessed a falling trend and breakout, indicating, I think so, the resumption of fresh trend for small cap index too. Going forward, we believe, I think so, that for the Nifty, I think so, it has been consolidating about the short-term moving average of 20 and 50 day. That is something a big positive. I think so. We believe, I think so, we can see some bit of a base formation in this range of 24,000 to 24,200. But eventually we expect, I think so, Nifty to head towards 24,500 in the days to come. More importantly, I think so, to be watching out will be the market breadth. I think so, the one which is again a good indicator to understand the sentiment of the market. Where if you look at the percentage of the stocks which are trading about the 200-day moving average of total Sensex 500 is currently at 65% compared to 52% last week. So we believe, I think so, things are improving. Yes, there could be the days of some bit of a profit booking, but one should not get worried to such profit bookings.
Okay. All right. Dharmesh, we'll come back to you. It appears we have a bit of a glitch out there. So we'll come back to you to hear about that. But let's focus on a couple of stocks. Bajaj Auto is looking to expand its electric vehicle production beyond Maharashtra. Shivani is joining us with more details on that particular news piece. Shivani?
Well, yes, good morning, Nigel. That's correct. CNBC TV18 has learned from sources that Bajaj Auto could take its next phase of electric vehicle capacity expansion outside of Maharashtra this time, and with Tamil Nadu emerging as the front runner on that count. This comes after unresolved incentive-related issues with Maharashtra government continue to linger for Bajaj Auto. Now, there are two separate issues at play here. The first relates to the Maharashtra's EV policy of 2021. Under the policy, manufacturers were required to pass on subsidies upfront to electric customers, electric vehicle buyers. and subsequently claim reimbursements from state government. Sources tell CNBC TV18 that nearly 60% of Bajaj Auto's electric two-wheeler subsidy claims have remained pending since FY22. The company has already extended these benefits to the customer and is now awaiting reimbursement from the state government. Sources add that the Maharashtra government has cited exhaustion of funds. The budget's earmarked for the electric two-wheeler incentives, notably electric three-wheeler claims for Bajaj have largely been settled. Now, the second issue relates to the Maharashtra's package scheme of incentives, or the PSI. Bajaj Auto has invested over 2,000 crore rupees across its Chakan, Akudi and Valuj facilities, but sources say the company is still awaiting eligibility certificates under the scheme, despite having applied around 18 months ago. With these certificates, without these certificates, incentive claims cannot move forward. Sources indicate that the repeated representations by company on both the EV policy as well as PSI fronts have seen limited progress. While discussions with Maharashtra continue, Bajaj Auto is indeed evaluating multiple other states for its next round of EV investment. As I said, Tamil Nadu currently is leading that race.
Right, it'll be very interesting to see where this goes as well. Outside of Maharashtra, what other states vying for attention? A bunch of them, obviously, recent elections, so would like to attract some sort of investments as well. And for Bajaj Auto as well, you know, moving out of Maharashtra and other parts of the country would decentralize the manufacturing that they have in electric vehicles. So let's see how that pans out. Shivani, thanks a lot for that. Cohance Life, before we step into that short break, you know, it's been a big mover ever since the leadership change was announced. Umang Vohra's joining in the company, and now as we speak, along with the pharmaceutical stocks, this one's seen an even bigger move, up 14% now as we speak. So that's a big surge. In fact, from its 52-week low, ever since the announcement was made, the stock is now up nearly 70%. So that's the kind of wealth that has been created on Cohance Life, just on the back of a management change that was there. Take a short break, come back, get you more on the markets and a lot of stock-specific action. Stay with us. Welcome back. Asian Paints has moved to the high point of trade now, has moved to the green, and this is over and above the 23 rupees ex-dividend that the stock's gone today. So if you add that 18 rupee up move that we've seen on the stock plus a 23, it's a nearly 40 rupee up move that we're seeing on that stock. So over 1% is the gain that we're seeing on that counter. Alongside that, we have a couple of these auto names as well, which are now spiking. So M&M for one has seen a decent spike in the last few minutes, currently moved to the higher end of today's trading range. That's Bajaj Auto. M&M is the one that should come up for you on the screen. Let's continue, however, our conversation on pharmaceutical stocks, which have been surging all through today's trading session so far. And there is news as well for specific companies. The US FDA has approached Indian companies over a shortage of a key cancer drug out there. Vinny joins in to give us the details of that.
Hi, morning. So yes, we have Cipla, Zydus Life, Alchem among some of the other names. Plus, there are other players like Aarti Pharma Labs, which are also in focus. Why? US FDA has approached the Indian pharma manufacturers for a cancer drug, which is mainly used for treatment of testicular, bladder, as well as lung cancer. This drug seems like it's a shortage that is coming in the US markets, and the shortage is mainly due to a technical disruption that's there in Baxter International's contract manufacturing site, as well as West Asia concerns are causing some bit of a supply chain disruption for them. So because of all of this, there's a shortage of this drug, and that's why they have approached the Indian drug manufacturer to get these drugs from India. Now, what is interesting is that they said that they prefer FDA-registered facilities, but they are open to non-registered Indian plants with good compliance history as well. So that also is important, and that is why we'll see focus coming in on Cipla, Zydus Life, as well as Alchem. But other names that we're seeing in focus as well, some of the CDMO players that are also buzzing in trade, that's not because of this reason, just an up move that we're seeing coming in on the pharma side.
All right, Vinny, but we are saying don't let Vinny go at that. We want her to also explain to us why InfoEdge is buzzing in trading sessions. So, Vinny, one more.
Absolutely. InfoEdge now, obviously, they came out with a shareholder letter highlighting some of the investments they've made through since 2007, startup investments they've made, and what is that portfolio actually doing for them, right? So since 2007, if you look at it, the company has made an investment of around 4,900 crores. What's the value of that portfolio? It stands at 41,300 crores. Management reiterated saying that, AI, deep tech, consumer technology will remain the focus area for them in the future as well. Now, let's talk about these individual portfolios. AI portfolio, so AI startup portfolio that they've been investing in. They invested around 614 crores, I beg your pardon, and that's in 28 AI startups that have invested in since 2020. Now, today that portfolio value is at 1,268, so doubling over there. They said that several of their companies have progressed very well. The early stage is what they started in terms of developments now have moved to commercial scale. A lot of upgrades that have come in on that front as well for the company. Now, deep tech portfolio, that also they invested around 455 crores, 30 deep tech startups, that values at around 559 crores. The focus in these startups are mainly robotics, semiconductor, space tech, biotech, defense, healthcare, energy, mobility sectors, which are interesting space and picking up in the country as well. Consumer technology, that remains the largest contributor in terms of this portfolio as well. They invested 2,755 crores. Now the value of that stands at around 37,214 crores. So they've seen a very good improvement in terms of the investments they've made in these startups, and that's what you can see on the screen as well, that the street is happy with that.
Yes, indeed. The question is, at what point do they take some money off the table out there as well? Thanks a lot for that, Vinny. Let's talk about another, news break which has been confirmed. It is a CNBC TV18 news break of a couple of weeks ago. Vivek did tell us that JSW Infra is looking to launch an IPO, a 7,500 crore QIP rather, has been launched already. Vivek joins in with the details.
Well, that's right, equivalent to a very large IPO, like you mentioned, but, it's a very large QIP that JSW Infra has come out with. We mentioned this a couple of weeks ago that the company was in the process. Now, when you're looking at the actual size, the issue size of this particular QIP is over 7,500 crores, the fresh issue of over 6,500 crores, and an offer for sale of close to 1,000 crore, 947 crore to be precise. The issue price for this particular QIP is at 285, but the current market price is much above that. So when you're looking at the dilution, and remember, one of the main reasons for the QIP was to ensure that the promoter stake actually falls to the 75% mark. And with this particular dilution of 9.9% due to the fresh equity issuance and another 1.4% due to the OFS component, this will ensure that the promoter stake now goes to the minimum required threshold as for SEBI. What is the company going to use the funds for? Number one, capex spends. The company has very strong capex plans lined up till FY30, debt repayment as well as inorganic growth via acquisitions that the company has targeted. They have not named any entities, but the company does have a stated ambition of growing via inorganic growth, which is via acquisitions.
Got it. Okay. All right, Vivek. Thanks a lot for that. Well, let's shift focus now to our special segment where we get you a few ideas for profit from Money Control Pro. Neha Dave of moneycontrol.com joins us to talk about a stock that she's tracking rather closely. Neha?
Today's stock idea is Muthoot Microfinance. The microfinance sector is on a firm recovery path, which was indicated by the strong earnings performance of Muthoot Microfinance in the quarter gone by. While the cyclical upturn and improvement in profitability are encouraging, the investment case for the company goes beyond just recovery. The stock offers multiple tailwinds: a rebound in loan growth, healthy net interest margin supported by lower funding cost, easing incremental credit cost, and improving operating efficiency. Moreover, the management guidance for FY27 is encouraging, which along with attractive valuation strengthens the case for the potential re-rating of the stock. Management has guided AUM growth of around 12 to 15% in FY27. Asset quality of the company progressively improved in FY26, resulting in a sharp drop in credit cost, which aided the turnaround in profitability. The company reported return on asset of 2.1% in FY26. Management has guided that ROA can improve between 2.5 to 3% in FY27, supported by the continued moderation in the credit cost and a marginal uptick in the net interest margin. In terms of valuation, the stock is currently trading at around 1.2 times book value estimated for FY28, which is very compelling given that there has been a sharp improvement in the return ratios. In terms of relative valuation also, Muthoot Microfinance is trading at a huge discount to Credit Access Grameen, which is trading at around 2.4 times book value estimated for FY28. The valuation gap between the two companies can narrow going forward. Long-term investors should accumulate the stock.
All right, thanks a lot for that. With that, we'll take a short break, come back, get you more on the markets, a lot of stock-specific action on the other side of the short break here with the Chartbusters.
Well, we've been 90 minutes into the trading session, and guess what? The Nifty is unmoved, whereas flattest can be on the index. Plenty of stocks, though, doing a thing of their own. And the boards of IIFL Finance will be meeting later this month to consider some fundraising. Let's go across to Ritu for some details. Ritu?
That's right. Capital raising very much back in focus for the financial sector. You have both IIFL Finance and Bandhan Bank that are looking to raise capital, and they've scheduled board meetings this week, despite already having healthy capital buffers. I'll start with IIFL Finance, where the board is meeting on the 27th of June to consider raising funds through equity shares or other eligible securities. The fundraise could take multiple forms, they've said. That could include a QIP or a rights issue or a preferential allotment or a private placement or a combination of these. And along with this, the board will also consider upsizing its global medium-term note, which is essentially debt raise, potentially giving it some more access to the overseas funding markets. Now, importantly, keep in mind, IIFL's capital adequacy ratio stood at about 17.8% or so as of March end. So this gives you an idea that this is more about funding future growth and maintaining balance sheet flexibility rather than addressing any immediate capital requirement. Similarly, Bandhan Bank's board is meeting on the 25th of June to review and consider capital raising plans. They haven't really disclosed any specific routes or details, but their capital position also remains strong. They also have a capital adequacy ratio of 18% or so and Tier 1 capital of 17.3%, well above the regulatory minimum. So investors will watch, of course, any indication of fresh capital raising, growth plans, strategic initiatives. Also keep in mind, the move is coming as credit growth in the banking system we've been highlighting here, running at nearly 18% growth year on year. And this is one of the strongest growth phases that we've seen in a few years. And that could explain why these lenders are looking to shore up capital today to support growth for tomorrow.
Take that point, Ritu. Thanks a lot for that. IIFL and Bandhan Bank looking to shore up capital. With that, let's move on and get you the latest in the trade negotiations between the US and India. US Trade Representative Jamieson Greer heads to India to meet with the Commerce Minister Piyush Goyal in New Delhi for further trade talks. And this comes just a week after another US trade delegation held talks for 4 days with Indian officials in the capital. Commerce Minister Piyush Goyal says a deal with the US is likely to include preferential tariffs for India. Abhimanyu joins in with the details on this one. Abhimanyu.
This is possibly going to be the last lap of talks between India and the United States before an interim deal is announced by both of them, and it also is finalized and implemented. The US Trade Representative Jamieson Greer is slated to be in India. He's slated to hold talks with India's Commerce and Industry Minister Piyush Goyal and several other officials from the Department of Commerce on the 23rd and 24th of June. Several issues are likely to be discussed, which will include investment provisions, preferential tariff access, and rules of origin. Now, India's Commerce Ministry has indicated that not just the interim trade deal, but also the larger BTA between both the sides is also likely to be discussed. India and the US remain seriously engaged for a larger cooperation, not just in trade, but also in several areas like energy, defense, critical minerals, and investment. Earlier, sources had indicated that final 1% talks are left on the interim trade deal, and the 10% tariffs which are currently in place are set to lapse on the 24th of July, and in the absence of a deal being finalized till then, MFN tariffs will come into play. So all eyes, of course, would be on how early both the sides are going to finalize as well as announce the preferential tariffs which will possibly replace the current tariff architecture which is in place.
Thanks a lot for that, Abhimanyu. Let's focus then on Tata Motors CV. In its Investor Day, it has released its outlook for FY28. Sudarshan, the man on the mission, he's been tracking this one as well. Sudarshan, tell us, what's their goal for 2028?
So company is holding its investor day, and ahead of that, they have released the presentation. So they have talked about 3 topics. First, about the current performance. They have compared FY26 performance by FY27 target that they had given. And lastly, they have also talked about FY28 outlook. So first, talk about the current performance. They are saying that demand is anchored by Vahan-focused market share, and margin is, as far as margin is concerned, teens margin is sustained through the cycle, and they've also de-risked profile through digital and downstream services. Now, comparing FY26, all the revenue margin versus the FY27 target, margin at 13.2% versus the target they had given of teens, investment spends at 3.6% versus 2 to 4% of total revenue. And as far as free cash flow is concerned, it was at 12% versus 7 to 9% of revenue. Now coming to FY28 outlook. So domestic CV market share, they are targeting 40% versus current market share of around 36%. Double-digit margin through the cycle, and if there is an up cycle, then margin will be in teens, and investment spends will be 2 to 4% of total revenue, and free cash flow 7 to 9% of total revenue, and ROC they are targeting in the range of 30 to 35%. Lastly, they've also talked about Iveco acquisition. They are saying that most of the regulatory approvals are in place, and the completion they are targeting at Q2 FY27. And once it's done, they are seeing the opportunity to become the fourth largest CV player on a global basis. So overall, it's looking good as far as Tata Motors CV outlook is concerned.
All right, the outlook looking good for Tata Motors CV as well. A lot of stocks moving around as we speak. Thyrocare is the other one which is added to the list right now, up around 4%. But for the other parts of the index, absolutely unchanged. All of them within 0.01, 0.02, 0.03% of a change from yesterday's close. So what we'll do is, Nigel and I take your leave on this edition of Chartbusters. Stay tuned. Trading Hour comes up next.
Good morning, you're with us here on Trading Hour. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I am Hormas Patakia. Joining me as always is Ritu Singh. The markets have done precious little this morning, as has been the case over the last couple of days now. The traded in a very narrow range in yesterday's session. The story continues in today's trade as well. It was a 90-point range yesterday. It's an 80-point range today on the index. It's the weekly expiry of the Nifty, but that does not take away from the fact that there is plenty of stock-specific activity, not just on the index, but also in the broader markets, Ritu.
That's right. Good morning, Hormaz. Not much happening in the markets this Tuesday morning, but for now it's flattish, down about 14 points on the frontline index, 24,088. The markets are holding up above that 24,000 mark at least. So we'll take what we get. For the broader markets, like you highlighted, it's marginally in the red, down about 0.1% or even lesser. The market breadth also tells you there are more stocks that are declining than advancing on the National Stock Exchange. So we'll have to see if that line converges, so to speak. On the macro front as well, oil prices are again down today. There was a bit of volatility in the morning, but now below the $78 a barrel mark. And the rupee has been flattish as well, 94.68 against the greenback. And some of the move has also been capped by the dollar index strengthening, which has been a theme we talked about yesterday as well. So the macro setup looks all right. Not much happening there or in the markets this morning. But Hormaz, you've still been able to pull together a list of some of the top movers. Tell us about those.
Oh, yes, indeed. And just as we were about to say that the fact that the index continues to remain in a narrow range, but as you mentioned, yeah, to take what you get, the fact that you're holding on to 24,000, it's a positive, at least for now. The bulls would look to defend that level, come close as well. So that's the index picture, not much to talk about there. But the one headwind that is possibly trying to play spoilsport currently is the dollar. We're talking about falling oil prices. That's a good thing. But the fact that the dollar is continuing to strengthen, that is not something that will please a lot of the metals and the precious metals as well. 101 now on the dollar index. It continues to strengthen, and that is having an impact on the metal stocks as well in today's trading session. Be it Nalco, be it Hindalco, and Hindustan Zinc as well. Hindustan Zinc, of course, for the fall in the silver prices as well in the global markets, that's having an impact as well on Hindustan Zinc. But most of the other metal names not doing very well for themselves in today's session. What is also sulking today are the IT names. There is no let up here whatsoever. They continue to underperform. Infosys ahead of its AGM later this evening. The stock is down 3%. TCS is down 3%. And LTM too continuing to underperform. And Infosys and TCS are the big culprits that are keeping the Nifty upsides in check in today's trading session. But on the flip side, take a look at how the pharma stocks are doing. Look at Cohance, 18% higher now on the stock. Of course, mind you, the fact that the stock has corrected all the way from levels of 1100. So there is some bit of buying coming in at lower levels. So 18% higher on Cohance, 8% higher on Piramal Pharma as well. A 5% advance on Newland. Sai Life Sciences doing well. Almost every constituent on the Nifty Pharma Index is trading with gains in today's trading session. Look at the newsmakers today. Kirloskar Oil was up 20% yesterday. At one point was up almost 10% today as well. Has now narrowed its gains down to around 5.5. After a 50% rally in the last 7 sessions, New India Assurance is seeing some profit booking today. The fall in gold prices is impacting Muthoot Finance from levels of well over 4,000. The stock is now nearing the 3,000 mark on the downside. And Blue Cloud Softtech was up 20% yesterday, another 19% today. The deal is with a company called SpaceX International Limited. It's not the proper SpaceX that is associated with Elon Musk. It still remains to be seen who's the actual owner of this SpaceX International. But the one stock that has stood out all through the morning is Vedanta after the block deal. Of course, Nigel will talk more about that in just a bit. But 7.5% lower now on Vedanta. The top underperformer on the Nifty 500 in today's trading session. And lastly, look at stocks that are at 52-week highs today. Look at Sansera Engineering, AIA Engineering, a lot of these capital good names doing well today. Laurus Labs, as I mentioned, the pharma names, and GE Vernova too is at a 52-week high today, Ritu.
All right. Thanks very much, Hormaz, for running us through that list. But let's focus on Vedanta. That stock's been reeling under pressure today. Why is that? Let's bring in Nigel to understand what's triggering the decline. Nigel, over to you.
Well, there was a large trade on Vedanta earlier today and closed on 7.3 crore shares worth around 2,150 crore rupees. They changed hands at an effective price of around 292 rupees per share. Now, that was at a discount of close to around 5% in comparison to yesterday's close price. Sources indicate that the promoter entity could be the likely seller out there. Remember, the promoter entity held close to around 56.38% as of the last disclosed shareholding. That's on March 2026. The net debt at Vedanta Resources, which is the parent, that's been coming down over the last few years. So from a peak of more than $10 billion, it's come down to around $5 billion. And, Mr. Anil Agarwal had told us that he intends on bringing that down further to around $3 billion or thereabouts. In fact, when I spoke to him a couple of weeks ago, he told us that relisting of Vedanta Resources could be in the offing. That's a potential option that he laid out, and it could be valued at $100 billion or thereabouts. That's what Mr. Agarwal expects. He also said that the net debt number even after so much of deleveraging, it could come down by another $2 billion or thereabouts. So the stock is under pressure because the promoter entity has come ahead and sold some stake. We'll have to keep an eye out on who the buyers are and what the promoter wants to do with this sort of money that they're going to be raising. So that's a stock in focus today. Back to you guys.
7.5% lower on Vedanta, of course, not doing very well for itself in today's session. It'll be interesting to see if there are any buyers in that transaction as well. A couple of other names that are grabbing the spotlight in the broader markets today. Sirma SGS is one of them after the JV that it announced with the Japanese company. 5% higher on that one as well. And of course, most of the other gainers on the Nifty 500 today are dominated by the pharma names, be it Emcure Pharma and some of the other mid-cap pharma names as well. Prestige Estates has made its move in the list of gainers today, 4% higher on that stock. Lodha is doing well. So real estate as a sector, for one, is bucking the trend in what otherwise is an underperforming broader market, with the advanced decline also turning in favor of the declines. The lines having converged, but the real estate index is at the highs of the day. Take a short break, put the spotlight on the bond markets with Manisha Gupta on the other side. Welcome back. As promised, shifting focus to the bond markets then. Manisha Gupta is here with the latest. Manisha.
Well, thank you so much for that. It's a steady market really, because there are no major cues coming in from the domestic or the international markets, at least for the next couple of days. And then, of course, Thursday and Friday would bring a lot of international data coming in there. But the crude oil prices also are trading below $80 a barrel. It's a third straight day that we're looking at those kind of prices coming in. That is ease the fears a bit as well. What we do understand from various treasury guys that we've been speaking to is that there is a lot of portfolio reshuffling happening, and that has led to higher secondary market volumes coming in. If you look at the overall secondary market right now, the Monday's volume, that is yesterday, was 141 billion versus 164 billion that you saw on Friday. Overall, bond issuances have been on the higher side as well, and nearly 117 billion is what is scheduled for today as well. And that brings us to the private bond issuances, and there's a list of it and bigger names coming into this market now. You have Torrent Pharma, which is looking to bids today and looking to raise a total of nearly 38 billion by the issuances of 4 bonds with different maturities therein. Bajaj Finance should come in on your screens as well, and they have invited bids to raise up to nearly 20 billion, and they are doing this via issuing 5 bonds. LIC Housing Finance is also seeking bids to raise nearly 35 billion. They are doing this through issuances of bonds which are maturing in 2029. So 3-year bonds coming in there. Utkarsh Small Finance Bank should also come in on your screens because they're looking at unsecured, subordinated, redeemable Tier 2 bonds in the form of NCDs, and they're looking to raise nearly 5 billion via this route. MAS Financial Services, Credit Access Grameen and Credile Financial Services also have invited bids for today, and they are also looking to raise funds. The amount, of course, is slightly smaller on that side. But what the street will also watch out for is the PSUs and large state-owned agencies announcing their borrowing plans soon. And that number, it's expected to be within the range that they have been talking about, but that number would really set course for further direction.
All right, Manisha, thanks very much for bringing us that update. And we'll slip into a short break on that note. But our big story comes up next, so stay tuned for that and more on the markets.
Welcome back, and well, the markets continue to remain where they are right now, 24,112 on the index. So of course there is the dips are getting bought into, yes, but there is supply that is emerging at higher levels as well. But you know, there are some names that are continuing to grab the spotlight, a lot of the financial names as well. The board of IIFL Finance is set to meet later this month to consider fundraising proposals. Let's go across to Ritu for all of those details. Ritu, tell us more on that.
That's right, Hormaz. I mean, financials once again in the market to raise capital, and it's two of them this time around. IIFL Finance and Bandhan Bank both are looking to raise money, even though keep in mind, when it comes to capital adequacy, both are pretty well placed. For IIFL Finance, I'll start with that. The board is meeting on the 27th of June to consider raising funds through equity shares or other eligible securities as well. They could raise this money through a QIP or a preferential issue or a rights issue or a private placement or a combination of these in one or more tranches as needed. Apart from this, the board is also going to consider upsizing its existing global medium-term note program, which is essentially debt borrowing overseas. So giving it the flexibility for both equity and debt, and the proposal, of course, will be subject to regulatory and shareholder approvals as well. Now, keep in mind, as of the end of March, IIFL's capital adequacy was well above the regulatory minimum at about 17.8%. So clearly, this is not some immediate need of capital because of which, the lenders coming to the market, but more from a, growth point of view. As far as Bandhan Bank is concerned, their board is meeting earlier on the 25th of June to review the bank's capital raising plan. They've not really disclosed in what shape or form and when they could raise this money, but the board is going to meet on the 25th to discuss this. Again, their capital adequacy at about 18% with Tier 1 capital at 17.3% as of the end of March. So keep in mind, both of them are very adequately capitalized, but this is coming at a time when credit growth is running at almost 18% year on year. So it's very strong growth, and perhaps that's why you're seeing lenders like these come to the market beforehand, to get these enabling resolutions to raise money for growth that comes up ahead. So that's as far as that fundraise is concerned. We'll slip into a short break. As promised before, our big story will be coming up next, so stay tuned.
Welcome back. A couple of names from the broader markets though. ZF Commercial, that stock is set to have its record date this week for the bonus issue that it had announced. That stock is up around 4.5%. ZF Commercial Vehicle Control Systems Limited, that's the name of the stock. Some flashes at the bottom of your screen though. Sterling and Wilson along with the Hassan Alam joint venture has bagged a $560 million West Minya solar power project in Egypt, and the stock has seen a big up move after that announcement. I think Hassan Alam has also made this announcement on its social media pages as well. We are awaiting an official announcement from Sterling and Wilson as well on the exchanges, but a big order win coming in for Sterling and Wilson in Egypt, $560 million. We'll await more details on that, but for now the stock trading 7% higher. Nagraj Shetty of HDFC Securities is joining in now for a quick chart check and some trading ideas as well. Nagraj, well, you're holding on to 24,000 at least for now, even though the range on the Nifty remains very narrow. Where do you see the Nifty headed now? Do you believe that 24,000 will be held on to until we end this June series next week? And of course, your stock recommendations for the morning as well.
Hi, good morning, Hormans. Yes, Nifty has been in a consolidation phase. Overall, near-term trend remains positive. Market is showing choppy trend between the ranges of around 24,200 on the upper side, 23,900 to 800 on the lower side. I'm expecting this consolidation movement is likely to continue at least for the 1 or 2 sessions. I'm expecting this. This is just a preparation of a base for the further breakout for the Nifty. The near-term trend remains positive for the market. I'm expecting more upside in the longer term. And I have 2 stocks from the long perspective. First one is Pharma front, Biocon. After a downward correction and a range-bound action, this Biocon has witnessed a sustainable upside breakout in the last couple of sessions and placed at the higher levels. The overall chart pattern is indicating the formation of higher bottom and more upside is likely. Currently trading around 429.15. One can look to buy at this point of time. Immediate target would be around 450 and one can place a stop loss at 420. Second one is from a real side, Oberoi Realty. Oberoi Realty has been in a larger consolidation phase over the last couple of months. We recently made an attempt of breakout of this consolidation somewhere around 1730, 1735, currently placed at the higher levels. I'm expecting a decisive breakout in the short term. Once it moves above 1740 levels, I'm expecting more upside in the near term. So overall chart pattern is looking positive. One can look to buy at this point of time. Current market price is around 1735. The immediate target would be around 1835 levels, and one can place a stop loss at 1690.
All right. Thanks very much for joining in with that. We'll move on, as promised, to our big story. You have an Indian startup founder who's set to take charge of one of the world's most widely used technology platforms. Crut's founder Kunal Shah takes over as the global head of WhatsApp, succeeding Will Cathcart. And at the same time, Meta is investing $900 million in Cred, while Miten Sampat takes over as the interim CEO, and the company prepares for an eventual IPO. Now, the scale of the platform that Kunal Shah inherits is enormous. Take a look at it. WhatsApp has more than 3 billion monthly users globally, making it the world's largest messaging platform, and India is its biggest market with more than 500 million users. But WhatsApp today is much more than just a messaging app. It now includes WhatsApp Business, messaging services, click-to-WhatsApp advertising, payments in select markets like India, the Meta AI integration, of course, and the merchant engagement tools as well. The importance of the India market, therefore, for WhatsApp and that broader ecosystem around it perhaps could help explain why Meta has turned to a founder who's known for building consumer internet businesses. Now, under Kunal Shah, Cred has grown to 17 million monthly members. It processes more than 40% of India's credit card bill payments. They've expanded into lending, into insurance, wealth and commerce, and reported their first profitable quarter this year as well. Kunal Shah's own entrepreneurial track record stretches back even further. He founded FreeCharge in 2010 before launching Cred in 2018 with his own personal capital, and since then, as we know, he's built it into one of India's most prominent fintechs. Now, speaking about this appointment, Mark Zuckerberg said that Kunal Shah has built Cred into one of India's most important tech companies and brought the kind of, and I quote him, builder mentality and global perspective that is needed to run the world's biggest messaging app. For Kunal Shah as well, the opportunity is pretty clear. In his words, the delta between what WhatsApp is today and its full potential is massive. But there's also this larger India story at play here. Of course, we have several Indian tech leaders that have made their mark. The Satya Nadellas, the Sundar Pichais, Arvind Krishnas of the world. They've built their careers inside global technology giants before rising to the top. But Kunal Shah's path has been different. He's a philosophy major, an MBA dropout. He built this startup from scratch and now becomes the first Indian non-Silicon Valley founder that's stepping into a leadership role at one of the world's biggest consumer tech platforms. And that is what makes this appointment noteworthy, not just for WhatsApp or for Kunal Shah, but for India's startup ecosystem as well. So that is our big story for today. Let's bring in our guests to discuss this further. Nikhil Pawar, the founder and editor of MediaNama.com, is with us, as is Mohandas Pai, chairman at RN Capital. Gentlemen, thank you very much for your time here today. Nikhil, let me start with you while we await Mr. Mohandas Pai. To your mind, how important is this appointment for the startup ecosystem, for Indian entrepreneurs globally? And the way that I was just talking about Kunal Shah arriving as a founder to lead this, does it mark a new phase for tech leadership in India?
Look, I don't know about what this means for other people, but I think Kunal's a great fit for this role. In fact, Meta had tried to hire Kunal as a WhatsApp India CEO before he started Cred, but he chose to build something again after Free Charge. So this is a bigger role. It gives him a new opportunity. It gives him a new space, a new place, a new city, a new sort of ecosystem to build in. So it's a new challenge, and Kunal has always looked at doing something different, right? So he's built, but also what's important over here is that Kunal has a history of building platforms that enable marketing. Both FreeCharge and Cred have used payments as a mechanism for customer acquisition and to then market opportunities for broader businesses to them. So Cred has shopping, it has payments which enable loans. So it's a loan marketing platform. And there's an opportunity to build that business side of WhatsApp, which I agree with him hasn't reached its full potential yet. And so it has the highest daily active user base in the world in all probability. So it's a great opportunity to build a business around that user acquisition that's already in place, because Kunal's primary focus has been about building marketing opportunities for businesses on a platform and then monetizing it. Miten Sampath, who takes over from him, is actually, he's sharp, he's straight talking. I've known him for just as long. And he's frankly the kind of guy who can take Cred to an IPO, in my opinion. Meta has also been hiring entrepreneurs left, right, and center, right? Because they have, as a $1 trillion company, they basically have that capital to spend a few $1 billion to acquire companies just for people. This is an investment in Cred, but I think this is basically a payoff to allow Cred to bring Kunal to WhatsApp. And it's a highly competitive environment for tech companies in the Valley because of what AI is doing and the battle for talent and entrepreneurs in particular, right? So great entrepreneurs like to hire entrepreneurs in their team because they are self-starters. They see the opportunity. They build for growth. They're not maintenance people, right? So you ask a founder to maintain a business and he'll get bored. So Kunal is a great fit for that. And Will has built and run WhatsApp for many years now. I think this is now like an opportunity to build the next level of growth. I'd like to see actually WhatsApp at some level separate from Meta and have its own unique sort of setup, because in countries like India, there's an overlap between the Meta and the WhatsApp teams. And that sort of single line of business focus with an entrepreneur at the helm will be a real unlock for WhatsApp, in my opinion. So I think this is a great opportunity both for Meta and for Kunal.
Absolutely. Do hold on, Nikhil. We also have Mr. Mohandas Pai joining in. Mr. Pai, first thoughts, the significance of this appointment, and I don't just mean for, what Kunal Shah has done, what his journey has been, or what WhatsApp gets, but rather the larger messaging as well. Paying $900, to get a founder on board from India, not from Silicon Valley, from India, to lead this global tech platform. What is the message it, sends across for the startup ecosystem in India?
Well, I think Meta has realized that growth for WhatsApp will come from countries outside America and Europe, and it'll be very global. So to get more people to come, they need somebody who has worked in emerging markets, done extremely well, and build a company from scratch. I guess they need entrepreneurs who can handle scale, who can handle the desire of people very different from people in America, because Meta is a very American company. So I think it's a great move for Meta. They put in 900 million, I think, in credit. I think that the price they're paying to get Kunal, because Kunal has to deliver value for his shareholders, and possibly he'll buy out many people here. And I hope credit does well. But I think it is a indication that globalization is very important for big tech players like Meta, and that too outside the United States. And in the age of AI, I think being very global and growing numbers outside is important. And they got a great entrepreneur. Kunal has done very well, in credit. And I guess he required a bigger platform, and Meta seems to have identified a very good person.
Interesting, Mr. Pai, you talk about this. It's been debated a lot on social media as well, whether that $900 million check where Meta is getting no board seat, no access to credit data, it is ultimately, the money they've paid to get Kunal Shah on board. Is this, successful founders becoming new acquisition targets for big tech, exactly like what Meta did with Scale AI, bringing Alexander Wong to lead their new AI lab?
No, I wouldn't make a general statement that everybody is going to do that. I won't say that, because Kunal has done a great job and is very unique. He's a great entrepreneur, and I think he requires a larger platform. And probably Meta was in discussion with credit to invest, and they probably said, hey, the biggest asset there is not the business. The biggest asset is the entrepreneur. Let us get him. And I guess that what Kunal negotiated in terms of investment, primary and secondary, was the price they had to pay. So they'll get a good investment. They got a lot of money, so money is not a problem. And they'll get a good entrepreneur. And what they're seeing is how to build value globally. And the growth coming from markets outside the United States means you require a different kind of person who understands markets outside the United States. And India is certainly a very, very big market for WhatsApp. It's become the dominant player. And now they have to compete against Tencent. Remember, Tencent and others of the like are doing very well in Southeast Asia, possibly in Africa. So the global battle is going to be between Tencent and Meta for this kind of apps. And maybe, even TikTok is going global. TikTok has conquered America. I guess they're conquering Europe too. They'll be very global. So I think they're seeing it as a fight between the Chinese for global domination, and they require a player who can compete against that, and they found a great guy in India.
Nikhil, the one statement that Mr. Pai also made is the fact that they had to look for somebody from India as well, right, for the powering the next leg of growth. The question that I wanted to ask you is that, as Mr. Pai was also mentioning, that this is a race between the US and China for global dominance here. But at the end of the day, I guess both realize that if the fact that if they need to find a next growth engine, it has to come not from their parent market, but it has to come from emerging markets like India, because even for Meta and a lot of their platforms, be it WhatsApp, be it Instagram, India is possibly their largest market.
India is the largest market, and let's face it, WhatsApp has struggled to grow in India beyond, they've grown WhatsApp for business, but really the full potential in the way that WeChat has grown in China has been missing in case of WhatsApp in India, because it's a team that's largely been reporting to Silicon Valley, and they've not had the freedom to innovate for India. Like WhatsApp Pay was the only thing that really they did differently in India, and that too was stuck because of an RBI regulation. And RBI limited the growth of WhatsApp payments in India by design, and they largely targeted WhatsApp for this, right? So an Indian founder talking to an Indian regulator also makes it easier to have that conversation. And we've seen with this government that they have often demanded that there's an Indian who talks to them essentially. So look, I don't see this as a China like a WeChat versus WhatsApp battle. I think great products compete against their own opportunity rather than compete against each other. Except when the stakes are, when it's really, really early. And at this point in time, I think WhatsApp has to come out of its maintenance mode, like I said, and move into a growth path. And Kunal, with his understanding of what platforms can do in terms of marketing and in terms of payments, is a great fit for them more than anything else, right? So I would very clearly say that this is not like the investment in Cred was in order to help Kunal get to convince his investors to that he can move on to that.
Okay, Nikhil, if you can still hear me, I just read your post on social media where you say that, Meta tried recruiting. Okay, we'll try and reconnect with Nikhil in just a bit. But Mr. Mohan Daspai, if you're still with us, for Cred, what does this mean? You have a founder that is very much associated with the company as being the company finally being able to report one profitable quarter and immediately exiting then for this bigger role, leaving the company in the hands of, his team members, while also preparing the company for an IPO. Do you think a bit of a challenging time for Cred as Kunal Shah moves on?
Yeah, I think it's a very challenging time for Kes. I think we've got to be very honest about it, because Kunal was the entrepreneur who made things happen.
All right, we're having a bit of a technical glitch there connecting to our guest, but nonetheless, an important story there and some interesting comments coming in from both the gentlemen. For now, we'll do one thing. We'll thank our guests and take a short break, but don't go anywhere. When we return, we'll get you more on the markets and some stock-specific news.
Back, the markets, the broader markets are the ones that are taking the moves right now. The Nifty Bank has moved to the lows of the day, still holding on to that 57,750, 57,800 range. Even the Nifty Bank today has traded in a very narrow range. It's just 130 points for the Nifty Bank. The Nifty continues to remain in a range as well. But look at the flash at the bottom of your screens. The Kospi is down 8% and the trading has been halted there in the South Korean benchmark. The circuit has been triggered, the lower circuit in fact, and trading has been put to a halt because of that for 20 minutes. So a 9% circuit now on the Kospi. The Nikkei is down 3% as well. It's a big tech sell-off that is going across the board. The Nasdaq futures too were down well over 400 points on last check. So it's not good. It's not a good looking screen whatsoever when it comes to the tech names. The Nasdaq futures currently are down 550 points. Devang Mehta of Spark Capital Private Wealth is now joining in to converse more on the markets. Devang, good morning. Thank you for taking our time. Well, you're seeing this AI trade unraveling a little. The optimist would call it profit booking, but let's make no bones about the fact that the street does not like this constant fundraising announcements that a lot of these companies are making right now. Is the street finally coming to realize the fact that all of them ran up too fast too soon? And does that mean that a market like India, perceived to be a quote-unquote anti-AI trade, turns out to be a beneficiary for this?
Thanks, Hormas, for having me on the show. Always a pleasure to be on CNBC TV 18. Yes, I think very clearly we sort of have belonged to that camp. And I'm in no way saying that there is a bubble and the bubble is going to burst. Of course, let's not discuss that. But to be very fair, the last 1.5, 2 years, India has not been a recipient of flows. In fact, it's under exaggeration if I say that India has just seen outflows, while your markets in Korea or Japan or China or even to that matter US has seen inflows. So the sense one gets here is that India has typically been a hello trade, and that is what we have been doing, more heavy assets and low sense type of a trade. Where very clearly we know that on the back of earnings, on the back of capex, on the back of very, very strong discretionary consumption, on the back of credit growth growing or financialization of assets, physical assets happening to financial assets. I think all this are features that only sort of India offers at this point. A strong GDP growth, probably yes. We had headwinds which are now becoming tailwinds. High crude price above 100, 110, 120, which has now settled below 80. And I think if this the narrative of the war also stops, I think we probably can see in good green shoots of even money coming in. But yes, let's make no mistake. There are two types of markets right now. If somebody's in the market, if you are in the typical banks, if you are in typical IT stocks, if you are in typical FMCG stocks, the old world, I think you are in the bear market. And if you are in typical good mid caps, small caps, you are in power, ancillaries, HDVC, HVDC type of businesses, you are in a lot of new age type of businesses, you are in the bull market. So I think there is so much of divergence. If I give you a figure, this year itself, the financial year, starting 1st April, the Nifty is just up by 8%, but your mid-cap index is up by some 19% and small cap is up by 26%. So I think the broader markets have done relatively very well. And why? Because two things. One, the FII actually had outflows from the large caps, whereas we saw some bit of good inflows from the domestic, even in this companies, the mid and small. And also the earnings for mid and small have been starkly very different and a lot better than what we saw in the typical large caps.
So Devang, if not in these typical names, that you spoke about across IT, financials, consumer, etc., and let's leave new age aside for a moment. But in these legacy companies, what is the contra bet you would make today then?
I think, yes, what we have always been saying is that a lot of money is to be made out of the index, right? So index today does not represent the true picture. So there are a lot of companies, there are a lot of capex related companies, engineering companies, manufacturing related companies, financials, and by financials I'm not talking banks, but a lot of NBFCs, a lot of financialization plays like wealth management, AMCs, depositories, exchanges. I think all these are plays. A lot of this would find index participation in the next 3-5 years. We always been talking about capex, right? HVDC type of companies, power automation, cryogenic equipments, cooling equipments, a lot of this consumer durables, wire and cable companies. I think these are typical companies where they are not index participants. Yes, they are index participants in some lower index, but not participants of Nifty and Sensex. So the point that I'm trying to make, yes, legacy business today can make some money for you at a rate of say 10-12% compounding. I'm not even denying that banks and a lot of IT companies would make that type of a CAGR for somebody wishing for the next 5 years. But if you're probably wanting to sort of command an alpha or the index returns, 15, 18, 20% type of returns, you need to be in the spaces which are probably small in terms of their market cap, but small in terms of the market size, but huge opportunity size beckons them. There is huge market share companies, and these companies also have good margin of safety.
Oh, wow. Look at the nosedive that the Nifty bank has taken right now. It's down around 200 points now as we speak. The only bank that is trying to hold on to some semblance of gains is ICICI Bank right now, still up 1%. But the market, though, the Nifty Bank has slid to the lowest point of the day, while ICICI Bank is at the highest point of the day as we speak. You know, Devang, a lot of these new age companies, there have been a lot of brokerage reports that have been coming out recently on a lot of them, be it the likes of Meesho and Urban Company and so on and so forth. Where does your preference lie in a lot of them? Because at the end of the day, for all of these companies, if not more, everything boils down to numbers. And if they don't show the numbers, the street has punished them. Urban Company being a case in point, right? They smashed it down from 200 to sub 100, now seeing some semblance of recovery. What about these new age companies?
So in fact, I wanted to make this point. So when I mentioned the term called new age companies, my meaning was not the typical companies who are still burning cash, or companies which are probably right now in a way where there is a lot of capex going to be done, and still the payback periods would be far ahead. So I'm not meaning those companies who are burning cash. Still the listed equity markets in India values companies on profits, values companies on EPS, values the companies on cash flow. So my typical examples here are companies which are very new age in the sense that these companies are from a universe which does not find representation in the indices. That is what I was talking about. So typically giving you certain examples of sectors. Now there are sectors like air cooling equipments, right? So there are three companies which exist here: Kirloskar Pneumatic, Ingersoll Rand, Elgi Equipment. Now these are into air compressors, the centrifugal compressors and rotary screw compressors. Most of these companies have ROE in excess of 25, 30, 35%. And these companies are growing at a very rapid pace. And a lot of industrialization, a lot of manufacturing going to happen. So this is one segment that one should look at. There are power equipment companies. There are HVDC companies we have been talking about last 5-7 years. There is still a lot of steam to go in these companies. There is a segment emerging which is called cryogenic equipment. Just giving examples of companies like Inox India or Linde India, which are into industrial gases and also something in the cryogenic equipment space. Now these are companies which are going to be required everywhere, right? From defense to wherever you need logistics of liquid nitrogen or hydrogen or whatever you talk about. I think these are companies which are sort of new age. These are companies which are still, I think in market cap terms, they're smaller or mid in size. These are companies which I call new age, the typical new age, the niche pharma type of companies, the companies which are into diagnostics. I think these companies are coming of age, and these are companies which probably would find that if you hold it for the next 3-5 years, your 18-20% compounding can happen.
Okay, Devang, run out of time there, but thank you very much for those interesting comments. We'll hopefully pick this up another time. Thanks very much for joining us here. Let's go across now to Mangalam Balu, who brings in the latest F&O trends. Mangalam.
Well, the market's at the low point of today's trading session after consolidating for a bit. So one was, expecting the market to move one side in either direction. But I think given the sort of weakness that we've seen across all the Asian markets and also the overnight sell-off that we've seen in tech index, we've seen the Nifty actually, after consolidating, see a bit of a decline, currently holding just around the 24,050 mark, which is well below the 24,100 mark as well. But the support that the street is eyeing is closer to 24,000. Ahead of expiry, the India VIX was lower, but now has seen a bit of a spike, still a smidge lower from yesterday's close as well. The Nifty 100-day moving average of 24,198 for the last few days has proven to be a bit of a resistance, even though the average has been coming down from 24,250 to now around just below 24,200. It is a mark that is important to track on the way up. But we've seen a lot of writing at the 24,100 put. Let's see if those put writers continue to hold on, or at some point they go ahead and throw in the towel. 5.5 crore shares written out there. They are hoping for some supply support coming in around the 24,075 mark as well. The 24,150 call is fairly active in today's trading session, which tells you that at higher levels we will continue to see some supply come by. But amidst all of this, a couple of sectors doing extremely well. Real estate stands out, and as do pharma. And there as well, we have Prestige Estates as well as Laurus Labs, both of them seeing some long positions being added.
Mangalam, thank you for that update from the F&O desk. Take a short break. On the other side, Sriram Subramaniam of InGovern joins in for his views on Kane's Tech and the governance concerns on the stock. Stay tuned.
Welcome back. For now, let's put the spotlight on Kane's Technology. Pull up that stock for you. It's lost almost 60% of its value just since October. And, you know, it's the guidance cuts, it's the negative cash flow, a disclosure controversy over related party and acquisition accounting. All of that has shaken investor confidence. We now have proxy advisory firm InGovern that says that the real test is whether the company can fix the disclosure quality and execution discipline and not just the growth numbers. Joining us to discuss all of this is Sriram Subramanian, the founder and MD at InGovern. Thanks very much, Sriram, for being here with us. You know, the report you've put out on Kane's, it highlights a whole bunch of issues. A lot of them have been pointed out by Kotak before as well, and the company's come out and clarified. But what, to your mind, remains the one key biggest overhang that investors really need to worry about when it comes to Kane's Technology?
Yeah, good morning. So the biggest issue is about over-promising and under-delivering. They had a guidance miss as of mid-May. There is a leadership churn. One independent director, Heinz, left in May 31st. So all these, I would say, where there have time and again, it's not just one-off issue. Time and again, Kotak pointed it out last year. But subsequent to that, also guidance misses and these. So investors have lost confidence. That's where, and the working capital intensity is one of the highest in the industry. If you compare Kane's with its peers, the working capital industry is very high. In fact, CRISIL and CARE have put the company on rating watch and said that working capital needs to be monitored closely. While the company is profitable, working capital issues could impact the company. So from all these perspectives, the company needs to work towards enhancing its disclosure practices, ensuring that its guidance is conservative, it adopts conservative accounting practices, it ensures that there is a positive outreach to investors. Because over the last 1 year or so, time and again, these issues showing up, missing guidances, ensuring that the quality of disclosures is wrong, etc., takes away investors' confidence in the company.
It indeed does, Sriram. You know, you made that point. Thank you for taking our time today. You know, we had the management of Kane's last month, and from earlier projecting that their cash flow issues would be resolved by the end of the financial year, they are now expecting their operating cash flow to improve by the third quarter of FY27. So when we are about to start off earnings season yet again in just about a couple of weeks from now, what is it that you would want to hear from the management? Of course, you mentioned that their disclosure quality should be better and so on and so forth. But one specific aspect on that you would want clarity on from the management this time around in the first half of the year for allaying investor concerns, and then we talk about bettering them.
Yeah, I would think the one particular thing is operating cash flow conversion, right? I mean, because their cash conversion is very minimal, so they would need to work towards that. They need to work towards where their working capital, how can they reduce their working capital cycle? So investors will be keenly watching that out in this coming month or quarter.
You know, these several guidance misses that you spoke about, and you know, revision after revision throughout the year has been, you said, one of the top concerns. Do you think it's simply a factor of, you know, like what the management says, order cancellations, etc., affecting them, bad business decision, or just not being able to foresee? You know, where do you think the problem really lies, and what will it take for investors to overlook some of these problems, give them the benefit of the doubt?
I don't think, the management obviously has been very aggressive in projecting to investors. It is the onus is on management to be more conservative, to ensure that they are communicating well with investors in a timely manner. So I think, as you rightly said, their investors will be watching these quarters, these coming 2 quarters very closely on these perspectives.
Sriram, thank you for sparing time and joining us. A short conversation, but an insightful one. Yes, on Kane's Technologies has been the one that has been battered from its record high levels and has lost a significant amount of its value as well. But the market has taken a bit of a leg down right now, has slipped below the mark of 24,000. The 23,984 was the low that the index made, and proper expiry trade playing out right now as we speak, as the big tech trade continues to unravel across the globe. Take your leave on this edition of Trading Hour from Ritu and me. Thank you for watching. Halftime report on the other side.
Sharp fall in markets. Nifty falls below 24,000 mark. Realty and pharma are the big gainers, while IT and metals drag.
In a rush of fundraisers, JSW Infra launches a 7,500 crore QIP, while Vedanta Limited promoter Twin Star mops up near 2,150 crore via sale of shares via block deals. The promoter of Craftsman Automation to offload 2% stake.
The US has reached out to Indian drug makers to bridge a shortage of cancer drugs due to disruption of production at the Illinois-based supplier. That's the report coming in from Mint. Analysts suggest that shortages could be wider and pharma stocks see a rally.
Meta will invest $900 million in cred at a valuation of $4.5 billion. But more importantly, it is poaching founder Kunal Shah to lead WhatsApp globally. Mark Zuckerberg lauds Kunal's builder mentality for his decision. Hello and welcome to Halftime Report. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra, with me as always, Vinny Motiwala. Well, it is a fall that we've seen, a sharp one at that in last couple of minutes itself. Look at that, the sharp fall from the highs of the day. 116 points gone on the Nifty. We are below the 24,000 mark. There's something that is happening in the Asian markets as well. Kospi, that index was down around 9% just a few minutes back. A lot of IT-led sell-off is what we are seeing across the globe. That is something that we saw in the US markets as well. Look at that, Kospi down 10%. We have the US futures, which are lower as well. Dow futures are down around 300 points from the highs of the day. The Kospi market trading has resumed after that halt, but there's a big fall. So if you look at what's happening with our own markets, the Nifty, which is down 120 points right now. We have the Midcap index, which has seen a sharper fall. It is down 0.7% in trade as we speak. Bank Nifty is not far behind. That one also is seeing a sharp fall from the highs of the day. Right now, we have HDFC Bank at the day's low, Interglobe Aviation, Reliance Industries, SBI. You name any stock, it is seeing a sharp fall from the highs. Nifty IT should come up for you on the screen because it is led by tech stocks globally, and that could be the reason why we are seeing this fall from the highs for our own markets as well. Not so much IT, but banking index. So there has been a sudden fall, a sharp one, and tracking cues from what we're seeing in the Asian markets as well.
Absolutely, important to know that, like you said, Asian markets also are seeing that sharp fall coming in, and Indian markets obviously the last few minutes have seen that decline coming in. Broader end of the market also is not doing anything great, right? In tandem with the benchmark indices are seeing a decline coming in. IT obviously continuing to see that drag coming in. IT is down 2%. Metals pull that up also. That's down 2.6%. So Nifty Metals is the top sectoral loser. The bright spot today, or some bit of a green that I can see right now, is only Pharma. Nifty Pharma is the one which is managing to hold on to gains. And Nifty Realty is also managing to hold on to gains. We'll wait out and see if there's any specific reason why this is seeing a fall coming in as well. But yes, that's a roundup in terms of the market for you all. But we have Vivek, who's joining us to take us through the stocks that are moving around in the trading session. Vivek, we've seen that fall coming in the markets in the last few minutes itself. Hope the stocks that you're talking about in the green and red are still in the green if we are talking about the green side.
Well, absolutely right. When you're looking at the advance decline ratio, it's deteriorated quite rapidly in the last 20 minutes or so. And, on the back of that, you're actually seeing quite a bit of a drawdown from intraday highs across markets as well as individual names. In terms of stocks that are doing quite well, you mentioned one pack, the pharma pack. Drug shortages in the US is what some of the news reports are indicating. Back of that, the entire pharma pack, especially some of the mid-cap pharma names like Cohance Life, Primal Pharma, Zydus, name like Aarti Pharma Labs, all of these stocks doing very well in the session. The other set of stocks doing quite well that have cooled off a little bit is the entire realty pack. So names like Prestige, Estate, Lodha, all of these stocks up anywhere between 1% to 4%. Aadhaar Industries getting in, one of the companies, Middle Eastern subsidiaries, has gone ahead and signed an agreement with Saudi Aramco base oil company. That stock high by 2%, again cooling off from the highs. Sirma, going up, tying up with the Japanese company for EMS services, are high by 3%. And Sterling and Wilson Renewable Energy, news reports are indicating that the company has received, along with its JV partner, close to $560 million order. That particular stock too saw a very sharp spike, has cooled off a little bit from the day's high. In terms of stocks that are seeing quite a bit of selling pressure, have a look at the metals. Appears to be a meltdown across most of the base metals. Vedanta, after that large block deal, down by over 7%. And names like Nalco, Hindalco, Hinzing, all of these stocks are down anywhere between 2 to 8%. Dixon Tech, continues to be a laggard, one of the top FNOs laggards in the session today. PSU banks, after a brief period of outperformance, again seeing quite a bit of selling pressure emerge today. So most of the PSU banks today, Canara Bank, PNB, all of these stocks down anywhere between 1% to 3%. And Ashok Leyland, one particular name from the pharma pack, clearly underperforming, one of the top laggards in the FNO space as well.
Okay, all right. Some interesting names there. Thank you so much for joining us, Vivek. So those are some buzzing stocks. Of course, the big story continues to remain the big fall that we've seen in our own markets in the last couple of minutes. Let's talk about some more stocks now. Emcure Pharma, that is the one on our radar. It's surging in trade. Jefferies has raised the target price. Vinny, tell us more. Why are they liking the stock now?
So, what is interesting is they're talking about the growth story that comes in for MCure, right? They believe that MCure in FY27 would see good growth. Low to mid-teens revenue growth is expected for MCure. EBITDA margin expansion in the range of around 70 to 100 basis points is what they're talking about. Margin expansion obviously mainly would be driven by field force productivity in India, as well as new launches that they're talking about in key global markets for the company. So that is also going to be a growth driver. And R&D backed products is going to be the focus in the long-term growth story for MCure Pharma. So obviously what has Jefferies done? They've increased the target price for this as well, right? Now the new target price they've given is 2,100 rupees per share. Previous target price was 1,970 rupees per share. They continue to maintain the buy rating on the stock as well. And obviously focus on differentiated products in the long term, global market focus. That is something that will drive the portfolio. Complex injections, that is also something that will be a growth driver for the company. That is why the stock is holding on to gains of 2% right now as well.
Okay, 2%. It was high by 5% at a point in time, but markets have come off and so have some of these stocks. InfoEdge is the other one. It has announced multi-bagger returns from investments. The stock is doing well. This hasn't come off. In fact, it is at the day's high. Tell us more.
Hi, so for InfoEdge, when you talk about it, interesting update that came in, or a shareholders letter that came in last evening from the company. They actually highlighted some of the investments they've made, the startup investments they're making. Now, since 2007, the company has made investments of around 4,900 crores. Now it's at around 41,300 crores, the value of that portfolio investment they've made, and that is 135 startups. Obviously, some of them are shut down, but some of them have had a very good level of success as well. Now, management reiterated that AI, deep tech, and consumer technology will remain the key focus area. Let's talk about these individual portfolios. Like you can see on your screens, right? The amount invested in AI startups, around 600 crores. Today, the value of that portfolio, 1,268 crores. Clearly doubling in terms of the value there. What's interesting there that the company highlighted that several of these portfolio companies have progressed quite well. They moved up from early stage development now to commercial scale. So that will also start seeing, and they'll start reaping the benefits from this as well. Deep tech, 455 crores moved up to 559 crores. This is across different sectors that they made investments, right? Whether you look at semiconductors, robotics, space tech, biotech, defense, healthcare, all of which, and energy, which has been picking up pace also, or which is the interest right now in the domestic front. Consumer technology, that's the last one, and the big share in terms of the investment that comes in. 2,700 crores approximately, they made the investment. Look at the value today, right? 37,214 crores. So that's the investment value that they've made. And that's what continues to be the largest contributor. That's what their focus area will be as well. And that is why InfoEdge today, as of now, also holding on to gains, more than 3% gains. Day's highest point is what InfoEdge is trading at, Sonal.
Okay, in a market like this, the stock is doing well. A sharp uptick from the lows of the day. The markets, however, continue to be under pressure. There's no reprieve from that. In fact, we are seeing lower lows on the Nifty. So pull that chart for us, 23,960, that's where we are. When we started the show, it was down 122 points, another 20-point cut on the Nifty. So we'll keep discussing market fundamentals and technicals for you. It's time to slip into a short break. Up next, we'll connect with Patanjali Keswani of Lemon Tree Hotels as it signs 85-room hotel in Nepal. Welcome back. You're still tuned into Halftime Report. The market fall continues, but a lot of stocks which are on our radar. One of them is Lemon Tree Hotels. The company has expanded footprint in Nepal, signed an 85-room hotel in Janakpur. It will be managed by Arm Carnation Hotels. To discuss this and more, we have Mr. Patanjali Keswani, founder and executive chairman at the company, joining us now to understand this and a lot more on the business as well. Mr. Keswani, good afternoon. Thank you so much for joining us. Well, on recent signings and openings, give us a sense of what's happening on ground. Are you winning more deals because independent hotel owners, they are becoming more willing to affiliate with the brands, or is it because Lemon Tree's market share and branded signings is increasing by the day?
Good afternoon. Well, it's a combination of both. So if you notice, we've been accelerating in the last 3 years post-COVID, the signings of our hotels and going asset light. So last year, we signed about 4,900 rooms. Incidentally, if you look at it on an aggregate basis, we increased our inventory on the 2025 base of 16,000 rooms by 30% by the signings of last year. And the hotels we kind of sign every week or two are just add-ons on the asset light side. And our principle is very simple, actually. It is that we want to go to all the 200 cities in India where there is 500,000 population or more. And we find that there are a lot of opportunities of, well, you know, the ones you referred to are unbranded hotels, but we are looking more at greenfield where people build hotels to our specs, to our brand specs. And that's what we are continuing to do.
Good afternoon, Mr. Keswani. How long before we actually see that Fleur and Warburg deal also come in? When will that come into effect?
The Warburg deal in Fleur is already in effect. They have bought out APG, and they have to put in another $100 million before we list Fleur, which is, you know, probably in the next 12 months, we will list Fleur as an independent asset company. And during that period, we will consume this $100 million. We ourselves will have about $35 million of, retained earnings or cash flow generation in the next 12 months. So put together, it's about 1,300 crores we want to deploy as equity and perhaps an equivalent amount in debt. So bottom line is very simple. There are two types of, Fleur will be basically an asset owning company. It will be an asset development company. Lemon Tree will be a brand owning company and a manager and a tech provider. And Lemon Tree will be the largest shareholder of Fleur, at least in the beginning. So it's a very simple disaggregation, which is quite normal globally, but hasn't occurred in India before.
Okay. When you say at least in the beginning will be the largest shareholder, the shareholding could change over time?
Why not? We could possibly raise additional capital as we grow the Fleur platform. See, the whole business is a very simple business. There is who designs, develops, owns, and finances hotels. That's the asset-heavy side. And then who manages brands, distributes, provides technology platforms to their hotel. That's actually the asset-light business. Earlier, we were an integrated player. We were, starting from designing to finding land, designing it, and then, ultimately branding it and running it. But actually, it's two very different risk-return profiles. So we have just separated the two, like Marriott did in the 60s, Hilton did. All the big global chains have ultimately become asset-light, except for perhaps three, one of which is Accor, one of which is Hyatt. But otherwise, even Taj, which is, I would say, the top 10 global chains or top 10 hotel companies, is still an asset owner come a brand owner. But 7 out of 10 have separated. And we want to go it's a normal playbook, actually.
So, for Fleur, the proposed 3,000 crore deployment opportunity is set, right? So what is your targeted IRR or EBITDA yield that you all would be looking at here?
So when we develop our own hotels, typically our EBITDA or return on capital, assuming EBITDA is the metric, we look for on a stable basis about 17-18% pre-fees. So after fees, it's about 14-15%. And if we acquire hotels, then certainly we will not acquire them below a 12-13% yield. But that is really, that you have to be lucky for, because there has to be an issue with the hotel. Either it's poorly it's not being run properly and not giving the right returns, or its financial structure is such that the present owner has to exit because of some reason.
Got that point. We wanted to understand, Mr. Keswani, what demand in ground is looking like. How has it been in Q1? We did see inflation pressures on the ground, and businesses also must have faced it. What was it like for you as a business owner? What kind of cost inflation did you see? And is this something that impacted the demand as well on the other side?
So see, what we found was that if you go back to Q4 last year, we did very well till end of February. And then in March, we started seeing a slowdown. And in fact, in the second half of March, we degrew, which means if I take the last 2 weeks of March this year versus the last 2 weeks of March the previous year, we were actually negative in terms of, an inability to grow. And this is, I think, obviously because of the war. And then in April, some part of this trend continued. And then we consciously took a call that we would focus on increasing the occupancy. So May went okay. June is also okay. I would have, in a different time, I would have said we would be into double digits. But I think we should be in, mid to high single digits. I'm not very sure, how the rest of India has done. But I do sense that with the impact of oil, with the impact of inflation, these are all obviously second order effects from the war. And with probably El Nino and so on, I do think our current account deficit is under stress. Our fiscal deficit might increase. So it's something we are looking at very closely. Okay. And our view is very simple. We will focus on occupancy. This year, we will not focus on ARR as much as occupancy, and we will continue to grow.
Yes, Mr. Keswani, so when you say you focused on occupancy in the month of May, did you see some tariff cuts? Is that the reason why you could have seen occupancy increase? Or you would do that in the future?
You mean tariff? I assume you are referring to...
Will you cut room rates? Yeah. Will you cut room rates? No.
We have not gone below last year, if that is your question.
Yeah.
Which unfortunately occurred briefly in the end of March. But what we have said is, let's not be aggressive on pricing. Let's try and maximize the revenue per room, which is a combination of occupancy and pricing.
Okay. Combination of occupancy and pricing. So you will maintain your pricing or the average room rate maybe at the levels that you're seeing it right now, right? And occupancy will increase. But any impact that we can envisage in terms of margins because of this in FY27? Or how does that work?
See, we were impacted once the GST ruling changed. And, GST, earlier we were entitled to input credit, but all rooms priced under 7,500 or at 7.5 are entitled to 5% GST and 0 input tax credit. So that affected us quite a bit last year. We explained that, and we expect that impact will continue now. And all we have to do really is to try and gradually increase a larger and larger share of our sold rooms to a rate over 7.5. And I reckon in about 2 years, it will be negligible.
Okay, no, we do get that point, and that was a concern that you had raised earlier as well when the GST changes came. But considering that now there has been a cost inflation impact as well that businesses are seeing, and you are saying that you will not be increasing the room rates at least, do you think there could be further pressure on the margin because of that? Because you're not able to pass on those costs, or you will not be passing on those increased costs to customers?
We will not, I do not anticipate any significant impact on our EBITDA margins this year, because we've taken some steps to ensure that we are able to kind of cancel that impact.
What would those steps be? Are you looking at cost-cutting measures?
It's very funny. There are 3 kinds of costs. Those are what I call essential costs. Then there are nice-to-have costs, which somehow creep into a system. And also there is flab. So at times like this, actually, adversity can be your strength. So we reviewed our costs very closely, and what we have found is an ability to control costs or offset costs from one cost heading because of an increase in another, without obviously affecting quality. But it's learning for us too.
Absolutely, Mr. Keswani. Thank you so much for joining us this afternoon, explaining us the on-ground demand trends, what the strategy of the company is going to be now as well. Thank you so much for joining in and speaking with us. But on that note, we're going to slip into a very short break. After the break, we'll get to you more on the markets, more stock-specific actions. Stay tuned in.
Welcome back. You're still tuned into Halftime Report. The fall in the market actually continues. We are down 160 points on the Nifty as we speak. There's no respite on the levels that we are seeing or the cuts that we are seeing from the highs of the day. For now, we do have TCS, which is at the day's low. There is Coal India, HDFC Bank, you name a Nifty stock, and it is seeing cuts from the highs of the day. So keep tracking the market moves. But Vedanta, which is the other stock which is under pressure today, Nigel is joining us to tell us what is triggering the decline that we are seeing in the stock as we speak. Nigel?
Well, that's right. Earlier today we had a large trade that was seen on the exchanges with close to around 7 crore shares that were changing hands. Now, the trade happened at a discount of more than 5% in comparison to yesterday's close price. And sources indicate that the promoter entity could have likely been the seller. So that's why you're seeing a bit of a drawdown in terms of the stock price in today's trading session, because promoter selling is, normally makes investors a little bit nervous. As of the last count, the promoter entity had roughly around 56% stake in the company. You'll be wondering why exactly the promoters have sold stake. Well, it probably could be to deleverage the promoter entity. Vedanta Resources, remember in the last few years, from around $10 billion of debt, that's come down to less than half of around $5 billion odd. And Mr. Anil Agarwal, he told me just a couple of weeks ago that he believes that this net debt number will go down even further. From around $5 billion, it could possibly go to around $3 billion. Not just that, he could be looking to make Vedanta Resources in a little better shape because, he's not ruling out listing Vedanta Resources on the foreign bourses. And he said the valuation demand was close to around $100 billion or thereabouts. So put everything together, promoter entity selling stake, that's perceived a little bit negative, and that's what's weighing on the stock. However, what this money is going to be used for is going to be important. And who are the entities that bought the stake as well? Those are the two triggers that we'll be tracking from here on with regard to this last trade. Back to you guys.
Thanks so much for that, Nigel. We'll watch out for that in terms of the trade for Vedanta as well. And the buyers will be key as well, like Nigel mentioned. A quick check in terms of the markets, right? We're seeing a further fall that's come in for the markets. Most of the stocks now are trading in the red on the Nifty 50. Look at the Nifty now at 23,949.50. So we saw that bit of an up move that we saw coming in, but slight bit, just few points. Hope that we see a recovery, but at least that's what we're seeing right now. Pharma names are still managing to hold on to that green, while on the flip side, you have the IT pack that's not doing well. And some of the big names like HDFC Bank also on the flip side are trading in the red. But let's move on and go across to Mangalam, who's here to tell us what's happening in the world of F&O after the fall that we've seen coming in the last 40 odd minutes. Mangalam, over to you.
Well, for the last few days, we've been pointing out that the Nifty is in this 23,800 to 23,200 sort of range. And every time the market moves towards that 24,200 sort of mark, we are seeing some supply emanate. And that's exactly what has happened. After testing higher levels of this range in yesterday's trading session, the Nifty is selling off ahead of expiry. And the accelerated decline is also because a lot of the put writers have been caught on the wrong side. So let's explain to you, the Nifty Bank is down about 0.8%. The Nifty is lower as well. The 100-day moving average on the Nifty is near 24,200. And now the 50-day moving average comes into play. That's where support is expected. We're about 100 points away from there as well. So today's accelerated down move has happened because of 24,100 put. If you look at it, there's a fair amount of open interest on that one, the ones that expire today ahead of expiry. And they've been caught on the wrong side. So we're seeing unwinding out there, and that's causing a further downside to the market right now. And as put writers have gotten caught on the wrong side, call writers have come back, and that's telling you that we are seeing a lot of writing at 24,100 call, 24,000 call, and the street expects that every time the market ahead of expiry goes above that 24,000 mark, it will be faced with vociferous selling. However, supports are still intact around 23,850, and the reason why I say that is because if you look at the 23,900 put, there too the premium is around 25, 26 rupees. These are options that expire today. So around 23,875 thereabouts, we could see some support come by. But amidst all of this, a lot of stocks are on our radar. The metals pack not doing particularly well, so a lot of shorts added on Hindustan Zinc. Adani Energy is seeing some selling as well. And BSE, for the last few trading sessions, the stock has been an underperformer. And now as well, a lot of shorts are added in that stock from the F&O perspective.
Okay, all right. So those are some stocks in focus. The high today is at 24,135, and the Nifty has been resisting, as Mangalam mentioned, the 24,190 mark time and again. And of course, it's the weekly Nifty expiry as well. We'll slip into a short break now. On the other side, Manisha will connect with Jur Keener of Swiss Asia Capital Singapore as crude oil extends decline. What's the outlook here? Stay tuned for that conversation.
Welcome back. Joining us now is Jörg Keener. He's Managing Director and CIO at Swiss Asia Capital. Jörg, thank you so much for joining in. I want to talk about the crude oil prices first, and a very sharp decline is what we are dealing with. 40% off from the West Asia conflict high of $120 a barrel. From where we stand right now, and there's a 60 days of negotiations still remaining between US and Iran, would you say a lot has already been baked into the prices?
I think, the market's been now celebrating basically peace, opening up of the straits, and probably slightly weaker economic growth. And that's certainly been resulting in a lot of technical sales. I don't think it's changing the supply side in a short time, as inventories around the world are really low and probably close to record lows. So all these inventories need to be refilled, and I think that should create a nice floor underneath the price.
Yeah, what's your sense on prices going forward for the rest of 2026? And are you also working in a surplus for 2027?
Look, I think it's going to be a capital investment cycle, which is going to be required to fix a lot of that. So it will take a bit of time. I don't know when the market and how much the market will look forward. But overall, we're going to have economic growth. And I think if you're in the low 70s, the support should actually be quietly nice set up in that market.
Jörg, the other, can't say a casualty, but a sharp decline is what we are dealing with in case of gold and silver. Silver especially is trading 4% lower right now, almost ready to break below that $60 an ounce. The narrative hasn't really changed much, has it? Because we're still looking at a deficit, the industrial demand, the renewables, the whole AI story is still right there, but a very sharp profit-taking even then in silver.
Yeah, I think we're going to see how this monsoon settlement will come across around, because inventories are really very, very low. And if you look at the market spread between Eastern pricing, Shanghai pricing versus the West, it looks like day and night. And I think that tells me, how is supply actually going to meet all the obligation when it comes to deliveries in the West? I just can't see it happening without creating significant volatility on both sides. But probably the next level will be on the upside instead of the downside.
So are you saying that 60 will hold as a strong support, or there is a possibility of us seeing a sub-60 level?
Look, I think we're going to try to test that. Everybody likes to test big numbers. I don't think it will fail. Maybe on intraday, but I think we're going to see a sharp reaction on that on the way up.
What is your sense on a longer-term scenario for gold and silver both? I mean, markets already are pricing in one rate hike from US Fed in December. How will that play out for precious metals?
Look, I think that's what actually is being as well driving to a certain extent the sell-off in commodities, particularly non-yielding commodities. And we all know that interest rates are not really the child which is supporting non-yielding assets. I think that's been playing out now for about a month. And I think the next issue will be inflation numbers, which I think will be surprising on the way up. And I think from that point of view, the market might flip-flop back and look at inflation instead of interest rate spreads.
From where we stand right now, Jörg, would you advise buying into precious metals at these dips, or are there lower lows still coming?
Look, I think if you have nice corrections of 30% in gold and a bit more on silver, normally it's a great time to accumulate. I think we always believe in stacking during weakness. I think we have weakness, we have oversold markets, and we have a tight market. So we like accumulating. The same on the mining side, where we're seeing corrections of to 50%, which is normal in a bull market. 50% normally is really high-end corrections. And that environment where you have record free cash flow, it's another reason where it shows actually the markets are right now maybe sometimes a bit irrational, but it offers well opportunity for investors.
And what would you advise as in sense of targets going forward for both of these?
To be honest, I don't really know how excessive central banks will be in stimulating economies which need support. I think wherever you look around the world, we have a lot of economic weakness which requires stimulus. So we haven't really changed the game in that. And so that will create the next upside. And the next upside will probably make new highs.
All right, so new highs perhaps in gold and silver both. Yug, would you say the same for the base metal prices? It started as a very strong day, and then aluminum in some sense started to outperform because of West Asia conflict. But while we're trading in positive for copper, aluminum, zinc, all of these metals, near term has seen some correction. Is it good to buy these as well?
Look, I think we've seen the last few weeks the base metals outperforming the precious metals. I think they're now lagging as well a bit in the correction. I don't expect huge corrections because they have the same demand-supply mismatches and inventory problems there is. So we stay positive on all of them. Maybe normally it's precious metal which bottoms first and the base later. So we might have a bit more time in order to pick that up.
All right.
Okay, Mr. Kina, thank you so much for joining us with your insights. Manisha, thank you so much for taking us through that conversation. That's about commodity outlook. The markets also, in line with what we are seeing in crude oil prices, continue to see a downtrend. IT stocks continue to be under pressure. There's no respite from the lows for now. We'll slip into a short break. When we come back, we'll also speak with Indian Drug Manufacturers Association's Viranji Shah as US FDA seeks Indian pharma companies help tackle shortage of key cancer drugs.
Welcome back to Halftime Report on CNBC TV 18. While the markets still continue to be on the lower end of the side and in the lower end of the trading session, today at the day's lowest point around that level, 23,948. We have Pharma that's managing to hold on to gains in the trading session. Now, US has reached out to Indian drug makers to bridge the shortage of cancer drugs that they are facing, mainly due to disruption of production at an Illinois-based supplier, as well as is according to reports coming in from Mint. Plus, they've spoken about some West Asia supply disruptions as well. Now, FDA has actually reached out to Indian Drug Manufacturers Association. To discuss more on this, let's bring on board Viranshi Shah, who's the national spokesperson of Indian Drugs Manufacturer Association. Mr. Shah, good afternoon. Thank you so much for joining us on the show. Could you start by telling us what has the US FDA asked for? We understand that it's one drug so far, which is mainly used for treatment of testicular, bladder, as well as lung cancer. That is ifosfamide. Anything more also that they've asked for, or is it only one drug as of now?
Right now, this is the only drug for which US has reached out to India, and that includes IDMA and other trade bodies to help them identify alternative sources which can fill the gap that is currently being created due to disruption in one of the manufacturing facilities that supply this drug to the US.
What is that required drug that they're asking? How much do they want of it? Do we have enough capacity in India to actually meet the needs of US as well?
So India is one of the largest suppliers of generic medicines to the US. And there are quite a number of sites in India who manufacture and supply this drug or have the capability to do so. Even in the past, several international agencies have reached out to India. For example, during COVID, they had reached out to Indian government for the supply of critical drugs used in the COVID. In the past, India has also played a critical role in bringing down, for example, cost of the HIV treatments, where in many parts of Africa, HIV was a big issue and the cost of treatment was very huge. Indian companies have brought down the cost of insulin, for example, under $1 a day. So this is something that any agency across the world, when they need affordable medicines, India is the choice of destination for them.
We do get that, Mr. Shah. So if you can just confirm, India does have enough capacity to meet the shortage that US is asking for right now for this particular drug. And interestingly, you mentioned COVID, because during COVID, we did see US FDA approvals come by very quickly, right? Do you think that happens now in case when there are shortages, the FDA approvals, they are fast-tracked because there is a need in the US?
I wouldn't comment on the FDA approvals. Usually, they would be fast-tracked as far as the other quality parameters, etc., are met. We do have 4 leading companies who are manufacturing these drugs and who have the capability. We have Zydus, we have Alchem, we have Aurobindo, we have there is one more manufacturer. So, and there would be more. So IDMA has reached out to these manufacturers, and we are trying to connect them with the Indian government and then to the US government to see whether both sides have they can sit together and close the gap. So
we do have enough capacity is what you're saying.
Yes, we do have.
Okay.
Yes, we do have.
Okay, so you're saying enough capacity. Sir, apart from that, when I was reading it also, it said that, see, there are these registered players also who are there, and they're okay with non-FDA registered Indian plants as well. Are there any names that you all have given on that front, and how will that process work? Because they're not registered with the FDA. So then will you all be judging that and giving them suggestions?
So our role as IDMA is only to facilitate the whole discussion. We reach out to the members, and those who come forward, we pass on the information to the government to further discuss it with the US government. We have seen in the past, in case of certain drugs, when they do not have alternatives, they do consider non-registered drugs as far as they have the necessary technical documentation to prove that the drugs complies to the US standards.
Got it. So, Mr. Shad, right now they have spoken about this particular cancer drug. Do you think we are seeing more shortages across various products, considering that we were going through West Asia crisis, supply chains were being hit? Do you think there is a possibility of more such conversations? What are you seeing in terms of, what are you anticipating? Let's put it that way.
So, see, these are not events that could be very easily anticipated. Otherwise, the US government itself would have prevented it. But drug shortages are not uncommon. If you go through the websites of many of the European regulators, for example, you will find over 200 drugs in shortage because there are very stringent regulatory processes through which the drugs are registered. And in many drugs, you have a very limited number of players who are able to vet through the process and supply. So whenever there are issues with some specific sites, these issues come off, and as IDMA we try to ensure that the Indian manufacturers could get into action and try to provide such drugs that would ultimately save lives.
So just the last word. In terms of, like you were addressing and like we were talking about West Asia supply concerns, right? Now, that's the issue that even the US drug maker has highlighted in terms of a disruption. With the members on the Indian front, are you seeing similar trends? Is that a concern for us as well, or it's not a worry for us in terms of the supply chain?
I think as far as India is concerned, we have managed this crisis, I would say, in a much better way than many other countries would have done. Even during the worst phase of the crisis, there were issues of costing pressures because the cost of many of the APIs and packaging materials, which are ultimately petroleum products or derived from products that are derived from petroleum, were impacted, and many of them are even currently impacted. But as far as the availability is concerned, there was not a single shortage in India or for that matter for our exports for any of the drugs. So I think as far as India is concerned, we do not anticipate shortage of drugs. There could be impact on the cost.
Got it. So have you already seen increase in costs? Just a follow-up on that. How much higher are they? Are there already big increases in costs that we've seen? We were talking to some companies about it. Has that continued now as well?
I think the pressures have come down in the recent past. So we hope that going forward, it will improve.
Okay. All right, Mr. Shah, thank you so much for joining us today with your thoughts on what's happening on ground, and more importantly, the country's capacity to supply this cancer drug to the US. We'll slip into a short break now. When we come back, we'll get you more on markets and stock-specific action on the other side. Welcome back. The selling pressure continues. We are at that 23,900 mark, 925 mark, very close to the 23,900 mark for now. Midcaps and Bank Nifty underperforming. It's only the Pharma index which is in the green. Barring that, metal seeing a big hit. So is the IT index. We'll keep tracking market moves for you. For now, we'll take your leave on halftime report, but do stay tuned. Business Lunch will take all the action ahead.
Markets witness a sharp fall. The Nifty declines below the mark of 24,000. Pharma is the only sectoral gainer. IT and the metal stocks are the ones leading the losses. In a rush of fundraisers, JSW Infra has launched a 7,500 crore QIP, while Vedanta promoter Twinstar mops up nearly 2150 crore via sale of shares via block deals. The promoters of Craftsman Automation 2 offloads a 2% stake. The US has reached out to Indian drug makers to bridge a shortage of cancer drugs due to the disruption of production at an Illinois-based supplier. Analysts suggest that the shortages could be wider. Pharma stocks are the only sectoral gainers today. Meta will invest $900 million in cred at a valuation of $4.5 billion. But more importantly, it is poaching founder Kunal Shah to lead WhatsApp globally. Mark Zuckerberg lauds Kunal's builder mentality for his decision. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Hormas Fatakia, and what a difference 120 minutes make. Just as we begun trading hour at 11 a.m., we are mentioning the fact that the markets have done precious little, but over the last 60 minutes, the markets have done anything but precious little. 180 points lower now on the index, fighting to defend the mark of 23,900 on the downside, and it has now come down to a point when from defending 24,000 on the downside, it is now about saving the 23,800 mark on a closing basis as well. Today, of course, being the weekly expiry of the Nifty contracts, that is in itself playing a part on this fall. But the bigger trigger is the fact that there has been a global meltdown across all AI-related trades, and that is led by a 10% fall on the Kospi in today's trading session. The trading had been brought to a halt for a brief period of time as well, and at the close of the trading session in South Korea, the Kospi has ended 10% lower in a lower circuit. The Nikkei 2 in Japan ending 3.5% lower. Both of the leading contributors to the Kospi's up move recently, Samsung and SK Hynix, were down over 12% in today's session, and that has had an impact on the US futures as well. The Dow futures are down almost 250, but the Nasdaq futures, the Nasdaq in itself was down over 1% in yesterday's trading session, and today the Nasdaq futures are trading with losses of well over 600 points. Now, leading the losses today on the index, all the index heavyweights. Infosys ahead of its AGM is down 3%. HDFC Bank is trading with losses of close to 1%. TCS2 trading with losses of around 3%. So all of them among the big contributors to the Nifty downside in today's trading session. But the one sector, if you could say, that is bucking the trend in an otherwise weak market is pharma. And most of these stocks are outperforming, and that is after the US FDA has approached Indian companies over a shortage of a key cancer drug in the US. Vinny is joining in with more details on this. Vinny.
Hi, afternoon. So obviously US FDA approached the Indian pharma manufacturers for this specific drug which is used for testicular bladder as well as lung cancer. It's called ifosfamide, and this drug is mainly a shortage caused because of a technical disruption in one of the manufacturers there, that was Baxter International, which was a contract manufacturing site. So they were facing some technical disruptions. So that is one reason. Other one is West Asia war. There was supply chain disruptions that came in. So two reasons that they highlighted here. Now, obviously, the supply is expected to remain limited through 2026. That's what we understand. And FDA had reached out through the Indian Drug Manufacturer Association. Now, obviously, the FDA has already highlighted two interesting things. One, the FDA said that they're okay with FDA-registered facility. They prefer them, but they are open to non-FDA registered Indian plants with good compliance history as well. And when we spoke to the IDMA just a short while ago, they said that India has enough capacity for this. As of now, doesn't seem like we are facing any supply issues that are coming in on that front. So we have enough capacity to manufacture this drug shortage. They also highlighted some of the names that would benefit, right? We see Alkem, Zydus, Aurobindo, Cipla also among the names who are on the drug or for cancer drug side as well. So these are important updates. We'll see finally who is going to be manufacturing this. But as of now, these are the names. We're seeing pharma is in focus today.
The one sector that is still in the green and the entire market is in a sea of red. Vinny, thank you for putting that for us. The Tata Motors Commercial Vehicles in its investor day today has released its outlook for FY28, and there are some targets that have been laid out by the company as well. Sudarshan is joining in with more on that. Sudarshan.
So Tata Motors CV Investor Day conference is underway, and company has talked about current performance, FY26 versus FY27 target that company had given, also the opportunity from Iveco acquisition and FY28 outlook. So as far as current performance is concerned, company is saying that demand is anchored by Vahan tagged FY26 market share. Margin has been sustained in teens across the cycles, and it has de-risked the profile through digital and downstream services. As far as FY26 performance versus FY27 target that company had given is concerned, margin FY26 was at 13.2% versus the target of teens. Investment spends was at 3.6% versus the target of 2 to 4% of total revenue, and on free cash flow it was at 12% versus 7 to 9% of the total revenue that company had given the target for FY27. From Iveco acquisition, acquisition is expected to be completed by Q2 of FY27, and most of the regulatory approvals are already in place. And from this, company believes that there is an opportunity to become the fourth largest global CV player. On FY28 outlook, it's targeting domestic CV market share of 40% versus current market share of around 36%. On the margin front, it's targeting double-digit margin through the cycle, and if there is an up cycle, margin can be in teens, and investment spends would be 2 to 4% of total revenue, free cash flow 7 to 9% of total revenue, and on ROCE it would be 30 to 35% post Iveco deals, and non-cyclical business growth will be 1.5 times cyclical business growth. And recently also you would have seen that Tata Motors commercial vehicle has been outperforming its peers like Ashok Leyland and Force Motors, even on the market share front, and outlook also for FY28 so far is looking good.
Looking good so far, but in line with the market sentiment, the stock not doing very well for itself. Darshan, thank you for that update there. Now, Meta is betting big on Cred founder Kunal Shah. The Indian startup founder is set to take charge of one of the world's most widely used technology platforms, WhatsApp. Now, let's go across to Ritu, who's here with all of those details. Ritu.
Well, an Indian startup founder is set to take charge of one of the world's most widely used technology platforms. Cred's founder Kunal Shah takes over as the global head of WhatsApp, succeeding Will Cathcart. And at the same time, Meta is investing $900 million in Cred, while Miten Sampath takes over as interim CEO and the company prepares for an eventual IPO. Now, the scale of the platform that Kunal Shah inherits is quite enormous. WhatsApp has more than 3 billion monthly users globally. That makes it the world's largest messaging platform, and India is its biggest market with more than 500 million users. But WhatsApp today is much more than a messaging app. It includes WhatsApp Business, business messaging services, click-to-WhatsApp advertising, payments in select markets, Meta AI integration, and merchant engagement tools. Now, that broader ecosystem may help explain why Meta has turned to an Indian founder who is known for building consumer internet businesses. Now, under Kunal Shah, Cred has grown to 17 million monthly members. It processes more than 40% of India's credit card bill payments. It has expanded into lending, insurance, wealth, and commerce, and reported its first profitable quarter this year. Now, Kunal Shah's entrepreneurial track record stretches back even further. He founded FreeCharge in 2010 before launching Cred in 2018 with personal capital and then building it into one of India's most prominent fintechs. Now, speaking about the appointment, Meta's Mark Zuckerberg said Kunal Shah had built Cred into one of India's most important technology companies and brought the kind of quote-unquote builder mentality and global perspective that was needed to run the world's biggest messaging app. For Kunal Shah as well, the opportunity is quite clear. In fact, he himself said that the delta between what WhatsApp is today and its full potential is massive. And then there's also the larger India story here. You know, we have lots of Indian tech leaders, whether that is Satya Nadella, Sundar Pichai, Arvind Krishna globally, building their careers inside these global technology giants before rising to the top. But Kunal Shah's path has been different. He's built a startup from scratch and is now stepping into a leadership role at one of the world's biggest consumer tech platforms. And that is what makes this appointment noteworthy, not just for WhatsApp, but also for India's startup ecosystem.
Ritu, thank you for bringing that for us. Take a short break. On the other side, US Trade Representative Jameson Greer is in India to further the trade talks between the two countries. Stay tuned. Welcome back. Now on to the latest in the trade negotiations between the US and India. US Trade Representative Jamieson Greer is in the country to meet Commerce Minister Piyush Goyal in New Delhi for further trade talks. Now this comes just a week after another US trade delegation held talks for 4 days with Indian officials in the capital. Commerce Minister Piyush Goyal says that a deal with the US is likely to include preferential tariffs for India. Abhimanyu is joining in with the latest update. Abhimanyu, tell us what's the agenda on Jamieson Greer's visit and what's the latest that you're picking up? Abhimanyu, if you could hear me, what's the latest that you're picking up from this visit from Jamieson Greer and what's on the agenda?
Well, discussions are underway between the USTR and India's Commerce and Industry Minister Piyush Goyal. It remains to be seen how early both the sides are going to finalize the interim trade deal, and also talks are likely for the larger trade agreement, the larger BTA, which is under discussion between India and the United States. Now, both the sides are looking to expand overall cooperation across several sectors like defense, critical minerals and investment cooperation. And also, India's Commerce Ministry had earlier indicated that discussions are likely on several issues like preferential tariffs, rules of origin and investment provisions. Also, India is looking for a larger energy cooperation with the United States. The US was also quite keen on expanding energy exports to India during the current geopolitical crisis. It remains to be seen how early both the sides are going to finalize and thresh out all the remaining issues, since only 1% of the issues are left as per India as well as the United States as far as the interim deal is concerned. Now, moving forward, the interim deal is going to provide a benchmark, an architecture, a tariff architecture for levy of tariffs for exports into US exports into India as well as India's exports into the United States. Now, as of now, 10% tariffs are levied on all exports into the United States by several countries, including India, and this tariff window is going to lapse on the 24th of July. Now, in case there is no deal by then MFN tariffs will continue to apply. So both the sides possibly would like to reach some finalization of tariff architecture to ensure that before the 24th July deadline there is certainty in terms of tariffs. Meanwhile, India is seeking preferential tariff access for its exporters, for its industry, not just to provide certainty but also to provide competitive advantage as far as India's labor-intensive exports and agri-exports into the United States is concerned. So all these issues are going to be discussed as part of the talks which are taking place right now. They are expected to continue till tomorrow, and more details are expected to emerge as the day progresses.
Abhimanyu, thank you for that update there. Now, at least 15 students were killed and several others injured after a fire broke out at a coaching center building in Lucknow's Aliganj area on Monday. A preliminary probe into the incident has found that the building was drawing power far beyond its sanctioned load. Now, 3 accused have been arrested in connection with the case, while efforts are underway to trace others named in the FIR. Take a short break. More news and updates follow on the other side. Stay tuned. Welcome back. Now, the United States has partially lifted sanctions on Iranian oil exports following encouraging talks over ending their conflict. The U.S. Treasury issued a 60-day sanctions waiver, paving the way for production, delivery and sale of Iranian oil to the U.S. CNBC's Dan Murphy is now here with the latest updates. Dan.
The U.S. Treasury Secretary Scott Bessent has issued sanctions waivers, letting Iran sell its oil freely and also authorizing Iranian crude and refined products into the U.S. through at least August. The new waivers and the gradual reopening of Hormuz are genuine supply-side easing for the oil markets and bearish for crude at the margin. But there's also growing concern about what happens with the money. President Trump saying proceeds from oil sales and from Tehran's unfrozen funds will be used to buy agricultural goods from the US. Iran's central bank governor pushing back on that, saying Tehran is under no obligation to buy what the US is selling, prompting a sharp reaction from Trump.
Use profits from oil sales to rebuild their military.
Well, they're not supposed to be doing that, so we'll see, but they're supposed to use money to buy food for their people, because right now their people are very hungry. And they're buying it exclusively from us. Corn, soybeans, should be a lot of money. I hope it's a lot of money. If Iran doesn't live up to their agreement, or if they're not behaving, I will do what I have to do.
Meanwhile, Vice President J.D. Vance wrapping up technical talks in Switzerland and sounding positive on what could be accomplished over the next 2 months.
We have the Iranians allowing weapons inspectors, nuclear inspectors into their country for the first time in a long time. We're obviously going to bolster that inspection regime to make sure they can never have a nuclear weapon. And finally, we continue to make progress on these technical negotiations. We left a lot of our team. The Iranians left a lot of their team at the resort there to keep on working at it. So all in all, a very productive 36 hours.
And with phase 1 of the peace talks over, officials from both sides are now taking their next steps. Iran's President Masoud Pezeshkian will be heading to Pakistan today, accompanied by high-ranking officials. He'll be meeting Prime Minister Shehbaz Sharif to discuss both the peace deal and bilateral relations. Meanwhile, the U.S. Secretary of State Marco Rubio heads to the UAE, Kuwait and Bahrain to gather more support for the MOU. A White House spokesperson saying he'll also meet the GCC while in Bahrain. It'll be a crucial test of sentiment, especially some of the more unpopular aspects of the deal, like the $300 billion restructuring fund. Meanwhile, Iran says it has agreed to set up a communication line over ship passage through the Strait of Hormuz in an effort to prevent conflict and incidents in the key waterway. Top negotiator Mohammad Ghalibaf confirmed the move on state TV after talks with the US in Switzerland. At the weekend, Iran said it reserved the right to impose a mandatory local insurance for vessels transiting through the waterway after the 60-day period. And according to the Persian Gulf Strait Authority document seen by Lloyd's List, the move could also translate to further fees after the 60-day negotiating period with the US ends.
Dan Murphy there with the latest. Now, at least 13 people have died and another 66 have been injured following an explosion and fire at Qatar's Barzan gas supply facility at the Ras Laffan industrial city. Qatar's Energy Minister Saad Al-Kaabi said that the incident was an accident and not an act of sabotage or a hostile attack. Now, as per a statement made by the Indian Embassy in Qatar, 12 Indian nationals lost their lives in the incident. Now, those injured in the blasts are also stable and are receiving treatment. Now, the FIFA World Cup also delivered another action-packed day of fixtures. Defending champions Argentina have stormed into the round of 32 after a 2-0 win over Austria. Now, Lionel Messi scored twice, taking his all-time World Cup tally to 18 goals, breaking the record previously held by Germany's Miroslav Klose. Elsewhere, France beat Iraq 3-0 with Kylian Mbappe on the score sheet, while Norway edged Senegal out 3-2 and Algeria just edged past Jordan 2-1 in a gripping clash that was decided deep into extra time. On to day 13, all eyes will be on England taking on Ghana and Portugal taking on Uzbekistan as the group stage heats up. We'll keep you the latest from the World Cup. Moving on then, former Federal Reserve Chair Alan Greenspan, who presided over nearly 2 decades of American economic boom, has died at the age of 100. He was suffering from Parkinson's disease. Hailed as the maestro, Greenspan presided over the Fed during one of the longest economic expansions in American history. The Dow rallied over 305% during the 18 years that he was at the helm. Greenspan was later criticized for his easy money policies and unwavering faith in lightly supervised financial markets, which critics say sowed the seeds of the global financial crisis. Still 180 points down on the index, so there's no let-off there. So at least the only solace, if you could call it that, is the fact that the 23,900 level is emerging to be a bit of a support for the Nifty, and the bulls would want to hold on to that 23,900, 23,800 zone, at least on a closing basis. We head into the final 120 minutes of the weekly options expiry session, so expect some volatility to take place in the final few minutes of the trading session as well. Now look at all the metal names, they are having a proper meltdown now. Vedanta is down 8% at the lows of the day. Nalco is down 7%. Hindustan Zinc is down 5%. Jindal Steel is down 5%. NMDC is down 4.5%. And of course, a lot of the other gold financiers as well, Muthoot Finance too, trading with losses of around 4%. So gold price is falling, silver price is falling, the dollar is strengthening, not good for metals and for the precious metals as well. Take your leave on this edition of Business Lunch from me and the team. Thank you so much for watching. Midcap Radar on the other side.
Good afternoon. Welcome to Midcap Radar. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, Vivek Iyer. Well, we started flattish. We did see a recovery from the lows of the day, and then there was a sharp fall around 12 p.m., and that has continued. We are very close to breaking that 23,900 mark. 23,850 continues to be an important support, and it's the weekly options expiry. Could see some volatility.
That's right. Like you mentioned, taking negative cues from the Asian markets and sharp midday fall, especially driven by the kind of fall that we've seen in the metal pack. There's been a meltdown, especially in that particular space. But a lot lined up on the show, so let's start off with the top headlines. Sharp fall in market sees the Nifty fall below the 24,000 level. Pharma is the sole sectoral gainer. IT and metals lead declines.
The US FDA has reached out to Indian pharma companies for a key cancer drug as it grapples with supply shortages. Stocks of drug makers surge, with supply likely to remain limited through 2026.
Electronic manufacturing firm Syrma SGS ties up with Japan's Kaga Electronics for a joint venture in India. The two sides will co-develop a state-of-the-art EMS facility, with Syrma holding 60% stake and Kaga's Indian arm the balance 40%. Stock steady.
Sterling and Wilson Renewable surges after company secures a $560 million EPC order contract from a West Minya solar plant order in Egypt.
It's a confirmation of a CNBC TV 18 news break. JSW Infra has launched a QIP to raise over 7,500 crore rupees. The issue is priced at 285 rupees a share, a 7% discount to yesterday's close.
All right, those are the top headlines that we are tracking. All the sectoral indices are in the red as we speak. It's only the pharma index which is holding up. And as Vivek mentioned earlier, it's the metals pack which continues to be under pressure. It's down around 3.5%. And the broader markets, they are underperforming the benchmark as well. So a good time to get a check on what the mid-cap movers are like. We have Upasna to take us through that list. Upasna.
Well, the sell-off certainly in the market continues to intensify. So now let us look at some of the key movers that continue to remain in green despite such huge market pressure. Now, first up, topping the list is Cohance Life Sciences. The stock is up nearly about 13%. It's one of the key volume buzzers, with volumes up 26 times the weekly average. Physicswala continues to remain regular in this list this month around. The stock is up 21% this month and up 3% as we speak. Pace Digitech is also up more than 10%. And also Kirloskar Oil Engines, which was in focus yesterday, also continues the rally today as well, with an uptick of nearly about 4%. And lastly, coming to Syrma SGS, the company partners with Japan's Kaga Electronics, and on the back of that, the stock is certainly surging with an uptick of nearly about 4%. Now let us look at some of the stocks which are at an 52-week high. Sansera Engineering up 3.5%, AI Engineering up nearly about 2%, and GE Vernova did hit a 52-week high but has certainly cooled off in tandem with the market. Now on the flip side, let us look at some of the key top losers in today's trading session. All the consumer durable stocks are under pressure, which saw a sharp surge in yesterday's trading session. So they have certainly flipped today. Voltas is down about 3%. EPAC Durables, which was up about 10% yesterday, has taken a sharp hit, down nearly about 6.5%. Dixon Tech continues to remain a top F&O laggard today with a downtick of nearly about 4%. Sign DLM down about 3%, and Acus is also down 3% in today's trading session.
Well, thank you so much, Upasna, for joining us. More laggards than gainers in today's trading session. Well, it's now a good time to welcome Saumil Mehta from Mirae Asset Sharekhan for a quick technical check on the market. Well, Saumil, a very sharp decline compared to the kind of strength that we were seeing yesterday in Nifty below the 23,900 levels. Further downside from here on, where do the supports lie?
Good afternoon to everyone. Of course, the metals and the IT pack are losing gains, and they've been, forming low tops, low bottom, and that's the reason probably we are getting these sharp moves on the market right now. Nifty at this point of time is at a very crucial level, around 23,850, 23,900 levels. These are very crucial levels. Now we have been forming higher tops, higher bottom on the daily charts for Nifty, and the next level on the downside is 40 daily moving average, which is 23,780, and 23,640, and I'm expecting a sideways movement, sideways correction till maximum. The worst case scenario probably would be 23,600, 23,650, which is 20 daily moving average. However, the overall trend still remains positive, and my targets would be 24,400, 24,600 levels, which is the previous swing high, and the 200 daily exponential moving average. At this point of time, I'm focusing more on pharma. Pharma is doing really well from here, and a few of the financials which are looking good on the charts. Heavyweights like ICICI is looking good as well. So I'm focusing more on financials and pharma pack. I have two stocks. One is Oro Pharma. It has broken out of a small consolidation on the daily charts, already in the uptrend. I'll be expecting this uptrend to continue. My target for Oro Pharma is 1650, and my stop loss is 1490. My second stock on the list is HDFC AMC. HDFC AMC has taken support at 200 daily moving average. Already, started, making higher tops, higher bottom formations, and the momentum indicators have given a buy signal. So this is a good buy for me at this point of time in the medium term outlook as well. Stop loss would be 2620, and my target would be 2850.
Okay, all right, Saumil, thank you so much for joining us with your specific picks and the Nifty levels to watch out for as well. With that, we'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific action on the other side. Welcome back. You're still tuned into Midcap Radar. Let's talk about an important story. Sources say Raymond nears an acquisition in the aerospace business. Yash is joining us with more details on this one.
Well, this is quite an interesting development for Raymond. What we've been given to understand is that the company is nearing an acquisition when it comes to the aerospace business. Remember, this is a new vertical where the company wants to expand its specialized business. The company's been talking about it. Very recently, it announced a 330 crore, fundraising through a preferential issue, out of which about 248 crore was earmarked towards acquisitions. What we've been given to understand in terms of being more specific about this particular acquisition is that the company is in talks to buy a German engineering player, which is called the Herard. Now, the company has identified sectors and like aerospace and space tech for acquisitions, as I just mentioned. As far as the acquisition itself is concerned, according to sources, this is likely to be in an advanced stage. And what is particularly interesting is this target entity's client base right now. The Herard's existing clients include majors like Boeing as well as Airbus. So, of course, those clients and the supply chains towards those clients from India, if the acquisition indeed goes through, will come towards Raymond. As far as the company, the target entity is concerned, it's a German precision engineering and manufacturing company, primarily making assemblies and components for aerospace and aviation. And as I said, two star clients for the company include Airbus and Boeing as its prominent client base.
Well, thank you so much, Yash, for joining us, giving us all of those details on that exclusive news break. The share price of Raymond has spiked immediately post that particular story. Raymond now nearing the green tech. Well, moving on, a major order win boost coming in for Interaj Building Solutions. The company won a 165 crore order from a Vadodara-based energy company. We are joined by Arvind Nanda, MD of Interaj Building Solutions, to discuss the three key focal points. Number one, the current order book post receiving the new orders, the FY27 margin outlook, and the order inflow outlook for FY27 as well as FY28. Well, good afternoon, sir, and thank you so much for joining us. Last time when you joined us, you went ahead and raised your FY27 revenue guidance by 10% from 2,200 to 2,200 from 2,000 crore rupees. Currently, where does the order book stand at post this particular acquisition, and any tweak in guidance?
Thank you for having me on the show. For the order book, it is increasing. We had declared an order book of 1,700 crores in early May, and we have got good orders since then, and of course also made some good sales after that. So we haven't got the net order book, but it is certainly higher than the 1,700 crores order book that we had declared. Normally, we try to keep our order book keeping in view what our expected sales revenue will be in the following 8 to 9 months. This order from the energy company is a little longer schedule. 10 to 11, 12 months would be the supply period for this. So therefore, it will add to our order book. Generally, if we are going to say 2,200 crores, 2,150, 2,200 crores of sales in this financial year, then 8 to 9 months of order book is good, unless the orders come long term, which is this order is a little long term. The order book will go up. I don't have an exact figure right now for my current immediate order book, but it will be higher than the 1,700 crores because we have booked good orders. And the pipeline also looks still very good. But we have to match our capacity, capability to deliver the project. Well, that is the most critical aspect in pre-engineered building business. Orders are not very long term. Very few orders you get long term like this one, but you have to deliver. So we have to always keep our capacity in mind. While we are adding capacity, we've got the full Andhra Pradesh plant in play this year, which came up the second phase only in September last year. Gujarat plant will come into play very soon in early July. By the time both phases come up, it will be maybe October, November, but that will also be contributing to this year's sales. So I think we are trying to add capacity as fast as possible so that the order book remains robust and we can pick up more orders from the market.
Take that point. So, Mr. Nanda, you are adding capacity. This is a long-term order which doesn't come very often. What happens in long-term contracts then? How do the margins work? The last time we spoke, you were not very sure about a margin guidance because things were very uncertain. Now there is a possibility of things changing for the good. Are you in a position to tell us what kind of margins are you looking at, and what are the cost pressures that the business is still facing?
Well, the margin guidance we had given earlier was very similar to last year. Maybe a little bit of increase, which we are expecting from better internal economies. Larger orders do normally lead to better margins because they don't have similar cost to small and medium orders. But the actual fact comes out only when we are, when we have the results with us. The additional aspect, which is a pressure on our margin, is because we are trying to go in for exports. So a lot of certifications are required, which we took last year. Export also involves expenses like travel, participating in conferences and exhibitions. While the turnover still needs to build up, exports, we have started getting orders, but of course it will take a year or so to speeden up. Then also because of the heavy structures plant that we are setting up for steel, heavier structure, that also requires a lot of expense, not only capex, but a lot of opex in terms of people going in the market, selling, marketing, engineering, whatever aspects are required, that have to come into play much earlier before your production really comes into play. So those are the additional costs which we will have to bear. I don't see any other margin hit in terms of sudden steel price increases after we have taken. They are pretty benign and they are now following a certain pattern. Our costs should go down. Last year we had an additional cost loading of the labor codes as well of 3.5 crores or so, which we don't expect this year for it to happen. So I think we are well on track to do the similar margin as last year, if not better. We are, as the turnover goes up, I think operational leverage also kicks in a little better.
Okay, Mr. Nanda, you mentioned two very interesting points. First up, you said that there will be certain marketing expenses involved in order to go ahead and get those order wins. We assume that this is mainly for the export market that you're talking about. You've also mentioned that, you expect to hit an order inflow run rate of close to 600 crores per quarter. So that leads us to an FY27 order inflow hope or a guidance, you could say, of 2,400 crore. Is that on track? What will be the split between the domestic as well as the international market?
Well, the order book will get gradually built up because we are targeting for 2,500 crores for 27-28. So I think going towards the later quarters of this financial year, the order book will pick up to reflect that kind of turnover. We are aiming for 500 to 600 crores a quarter now, but we have to deliver. So I think the real effect of coming to 600 crores a quarter should come up maybe by actually the first quarter or last quarter of the financial year. Exports will not be a very large chunk of this. We have got recently good orders of exports in the last couple of months, about 35-40 crores, which we feel are very good. We are playing a little long-term game in exports by establishing good partnerships, by establishing good contacts there with people who will bid with us, our items, will take our expertise in engineering and production in bidding for their project. So we are playing a little long-term game. Last 1 year, we have spent more in getting certifications, participating in fairs and conferences, meeting a lot of people, establishing certain partnerships like you have already seen one with a Canadian company. We hope to have more such arrangements with other companies in Canada and US. So I think the real export we will see will be probably in the next financial year. This year it will be a large chunk.
Last time we spoke about, your partnership with ER Steel. One other thing which we want to talk to you about is, you did mention briefly that you're expecting new capacity to come on board. When can we expect this capacity to come? Number one is the Andhra Pradesh heavy steel structure facility as well as the Gujarat PEB facility. With that, what is the incremental capacity that will come on board? And when you look at the asset turn, how is it typically for the new capacity that is coming in?
So the Gujarat phase 1 should come up next month, as we had indicated earlier, in the first half of July. Second phase, because we have done most of the work for second phase already as a part of phase 1, like the building is already done, a lot of the internal works are already done, machineries are already ordered. So there's very little work except to get the first phase going completely in terms of getting the labor, getting the people, and getting it into a full commercial production. Then we'll go into the second phase, which will should happen by September, October, is my estimate right now. The total plant will add around another 40,000 tons to our capacity. But the full year, of course, is not there, and both the phases coming at different times. But certainly, this full 40,000 will be available to us for 27-28. Heavy structures will add 20,000 tons annually for the phase 1, which will be also operational by early August, as planned earlier. That will be a little slow in the offtake because it's a little newer item. Some of the production will be used for our existing buildings, but our idea to also deal in heavy structure as a commodity structure and supply to large orders from steel plants and power stations, etc., will take a little longer. High-rise buildings as well. So I think it will be a 20,000 ton capacity, which will be, I think, fully utilizable in the following year itself. This year, we don't have much expectations from that plant.
All right. Okay, thank you, Mr. Nanda, for joining us today. Had a lot more questions, but completely out of time. But thank you so much for joining us with the insights on the business going forward. With that, let's move on. InfoEdge is the stock which is on our radar. They've announced some multi-bagger returns from investments. Vinny is here to give us all the details. Vinny.
Hi, afternoon. So yes, multi-bagger returns is what they've seen, right? Since 2007, they've made around 4,900 crores of investment in 135 startups. Today, that value of that portfolio stands at 41,300 crores. Management has spoken about the focus continuing to be on AI, deep tech, as well as consumer technology, even going forward as well in terms of the future investment strategy. Now, talking about the AI startup portfolio, it was at around 600 crores investment they made. Today, it stands at 1,200 crores, and this is in 28 startups. They started making this investment since 2020. So doubling in terms of the value over there. Several companies in this portfolio, obviously they were in the initial early stage development, have now reached that commercial scale as well. So that will be interesting to watch out for. Apart from that, deep tech portfolio, 455 crores of investment that they made in 30 deep tech startups. That value stands at 559 crores. Deep tech startup include robotics, whether you see semiconductors, space tech, biotech, defense, healthcare, energy and mobility sectors are where the investments have been made in this sector. Apart from that, consumer technology, that's a large contributor for them, right? They made a large amount of investments in this space. When you talk about it, 2,700 crores approximately is the investment they made. And today the value stands at 37,000 crores, 37,200 crores to be precise approximately. So that's where the growth came in as well. Huge chunk of the portion and huge contribution comes in from consumer tech, and that's what they'll continue to focus on. And that is why we're seeing the stock is managing to hold on to strong gains in today's trading session.
Thank you so much, Vinny, for joining us and giving us all of the details on InfoEdge. Well, we'll now slip into a short break. We'll get you on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Midcap Radar. Well, just have a look at the market. The Nifty has slipped now and trading firmly below the 23,900 mark. The Nifty Bank underperforming, down over 1%, down over 660 points. And the Midcap index continues to languish, down over 1% with a 670-point drop. The small cap index relatively insulated, down just 0.7%. But when you're looking at the market breadth, skewed in favor of the declines. It's a very weak trading session, especially that we've seen a sharp fall since 11:30. But with that, it's all the time we have on this edition of Midcap Radar. MF Corner when we return.
Hello, good afternoon. Welcome to MF Corner on CNBC TV 18. I'm Vinny Motiwala. With me is my colleague Sonal Butra as always. Sonal, and today we're discussing something exciting, right? What everyone wants to know about, and that's SIFs.
Yes, that's exactly what we'll do. Good afternoon, Vinny. And we put spotlight on one of the most talked about shifts in India's investment landscape. That's the Specialized Investment Fund, or SIF, positioned between mutual funds and PMS. They are giving investors access to a wider range of strategies. There's long-short equity, hybrid plays, sophisticated debt structures. So who should invest in these funds? What makes them different from mutual funds? And there's been a lot of queries that are sent to us as well. So to understand all of it and understand more about it, We are now joined by Mohit Gang, who is the CEO and co-founder at Moneyfront. Mohit, good afternoon. Thank you so much for joining us today. And it's always interesting and exciting to know about new categories. I know SIFs have been there for a while, but we are seeing multiple introductions from different AMCs come by as well. So let's start with the basics first up. What are SIFs? Just to break it down for our viewers. And we do have some long short strategies which these advisors or managers talk about. So tell us more about that as well.
Yeah. Thank you, Vinny and Sonal. Thank you for having me on the show. Look, I think SIF is the new kid on the block, right? And I think after a very, very long while in the Indian mutual fund industry, you've seen something really innovative come out of the SEBI's stable. So as the name suggests, it's a vehicle which sits right above the mutual fund in terms of pecking order, both in terms of risk and return, right? Now, whether the returns will fructify or not, that only time will tell. But it's a specialized vehicle where mutual fund houses under a different brand and a different label are allowed a little more flexibility and liberty to structure their portfolio. So they can go derivatives, they can go naked shorts, up to 25% of their portfolios, and they can structure it more aggressively, or they can hedge their positions more meaningfully. Right? So that's the whole spectrum. The ticket size starts at 10 lakh per AMC. So which means that any new investor who wants to invest into an SIF will have to put in 10 lakhs for that particular brand of the AMC, which means if I really want to invest into an Altiva fund, I can invest into 3 different SIFs of Altiva. Cumulative, the amount has to be 10 lakhs. So the minimum ticket size is only 10,000 rupees, but cumulative, it has to cross the threshold of 10 lakh rupees, which is what SEBI is trying to say, that you need to be a little more sophisticated than a normal retail mutual fund investor to be able to invest in these products and to understand the risk-reward matrix thereof.
Sorry, so you said minimum is 10,000, but the corpus together has to be 10 lakh. How does that work?
That's a little tricky part. So what happens is, let's say if I have to invest in SBI SIFs, I have to pool in, or my first investment has to be 10 lakh. So let's say if I have invested into equity long short fund, my first investment has to be 10 lakh rupees. Then if I want to invest into X top 100 long short of SBI only, then I can do that from a 1 lakh ticket size or a 10,000 ticket size also, because I have invested 10 lakh minimum corpus in that particular brand. Under the SBI
banner. The first one has to be 10 lakhs.
Yes, the first one has to be 10 lakhs.
And is it like a limit of combined also? You were saying that, if you have all together, pool in together in the same SBI SIF type 1 and type 2, that can be 10 lakhs together, or one only has to be 10 lakhs?
No, it could be. So my first investment on a physical form, let's say if I were to invest first day, I can make a single application of 443. Across 3 different SIFs of the same fund house. It can't be Altiva and Magnum. I can't have 5 lakh invested across them. It has to be all the funds of Altiva. I can split my 10 lakhs as I want, but has to go in all together. If it goes separately, then the first one will get rejected because the minimum amount was not 10 lakhs.
Okay. So all together you can go for 10 lakhs in the investment. Okay. Mohit, there are different types also which are approved by SEBI, right? 7 types.
Absolutely.
Help us understand that also. What are these 7 types which are permitted by SEBI?
Okay, look, first things first, very simple. Everything is long short, which means under every category, the differentiating part in an SIF is that they are allowed shorting. Up to 25% of portfolio is allowed naked short, which means they don't have to be, it need not be a covered position or a hedged position, right? Now, under equity, you have 3 categories, which is equity long short, which is like a flexi cap kind of a fund. You can do anything under that. Up to 80% of the corpus has to be equities. Then there is X top 100 long short, which means beyond the first top 100 stocks in the by market cap. So that's like a mid and small cap strategy. And then you have sectoral rotation long short, which means you're rotating across sectors. So these are the 3 specific strategies in equity. Then you have 2 under hybrid, which is a hybrid long short, which is a simple vanilla product. Now, all AMCs run it very, very differently. It sounds very simple, but every single AMC has a very different strategy under the hybrid long short, which is in fact the largest category under the SIF banner. And then you have asset allocator long short, which means that you're rotating between debt, equity, commodities, REITs, InvITs. You have some 3-4 assets in the portfolio, and then you're rotating between these. You have 2 categories under debt, But unfortunately, there hasn't been a single launch in debt. So you have a debt long short fund and you have a sector rotation long short in debt also. But apparently, as I get to understand, I think shorting is not allowed in Indian bonds.
That's what I was just wondering.
And
yeah.
it's a little funny though. The categories were launched, but I think this was some basic homework which got missed out. And I think shorting is not allowed. So till such time there is clarity or there is a new category which evolves around credit or something, I think the debt piece hasn't taken off.
Maybe that's a precursor to something. You would never know.
Yeah.
But let's talk, when we spoke about the threshold to invest in SIFs and how it is different from mutual funds because they're shorting, the liquidity aspect would also differ versus a mutual fund. How does one understand that?
Oh, absolutely. This is again a very tricky part out here. Look, on the equity category, most of the SIFs are giving you daily liquidity, which means you have redemptions daily. Though some might have a weekly frequency or maybe a couple of days in a week kind of a frequency. In the hybrid category, most of the funds have 2 days in a week kind of liquidity and not every day. There are few funds which have once a month kind of liquidity. Now, that is done to categorize the hybrid SIFs as interval funds. The moment you get that categorization of interval fund, you necessarily have to list the SIF on the exchange because it is an interval fund. It's not a daily liquidity. You get it listed. The moment you get it listed, you get equity taxation above 12 months. So again, a very tricky roundabout way of doing this entire thing. I think the hybrid category guys have devised a formula to provide the funds long-term capital gains taxation of 12.5 above 1 year by getting it listed, and that they have done by making those interval funds.
Okay, so those interval funds, but that would happen only if there is redemption or there is those multiple level of liquidities done by the funds, or is it done at an investor level? I just want to
At an investor level, so if you want redemptions, basically you can submit your redemption request twice a week.
Okay.
Typically, most of the hybrid categories operate like that.
And if you do that, then it goes for, then it depends on the fund if it has to go for, okay.
Then it's a normal redemption window,
Got
like
it.
a T+2 kind of a cycle. So that's how it is.
Mohit, talk to us more on the taxation part, right? How is the taxation working here for SIFs? As well as, is there any specific advantage over maybe a PMS or an AIF?
Oh, absolutely. So look, on the SIF side, if you are an equity SIF, then the taxation is as similar to a normal equity mutual fund, which is 1 year 12.5 long-term capital gains and short-term at 20%. But if you are a hybrid SIF, then over 1 year, the taxation is 12.5, which is LTCG. But below 1 year, it's the slab rate, right? So it could be as high as 30% or even higher for a particular category of HNIs below 1 year. Only the ISIF SIF has, under the hybrid category, has a 2-year 12.5% long-term capital gain taxation. So they are a little different because I think they are not an interval fund. Right? So the structuring is a little different out there. But typically, most of the hybrid funds have adapted to this method of being an interval fund and giving you a 12.5% tax above 1 year this thing.
Okay. So, we are talking about the 10 lakh limit again because, we do get a lot of questions and how you can invest in a mutual fund with just 500 rupees. That's not something which is possible here. In that case, how would you look at the limit being breached of 10 lakh rupees? Is that a problem? Do you have to refill it with more money? Tell us more about that.
Got it. So look, if it is because of market movement that your 10 lakh invested has fallen below the market value, as in below whatever, it's come to 8.5, 9 odd lakhs, then there is nothing to be worried about. So that's allowed in the hybrid, in the SIF category, because that's because of market fluctuations. Having said which, you cannot redeem your capital and make it lesser than 10 lakhs of the invested value. So that's not permitted, right? So if your invested value is only 10, which by virtue of, let's say market has gone up to 12 odd lakhs, you can't redeem beyond 2 lakhs. So you are permitted to redeem only that much, which will take your overall value to around 10 odd lakhs. So that's the thing. One small thing, sorry, which I missed out in your previous question was the taxation as compared to PMS part. Sorry, I just skipped that part. Now, look, I think PMS is a highly tax inefficient kind of in structure, because of simple reasons that it's held in your name, the demat is held in your personal name, and the stock trading happens in your personal name, right? So whenever a fund manager of the PMS is buying or selling stocks, that's like me buying or selling stocks in my own name. Even if I don't redeem the PMS or even if I don't liquidate my holdings from the PMS, every year I will have to file my short-term, long-term capital gain taxes, right? So every year I keep filing those. But in SIF, it's held in a trust structure. So the trust is exempt from taxes whenever it trades in equities. So which means whatever is the tax implication, I don't have to pay any tax till such time that I redeem my units. So the tax incurrence happens only at the incidence of redemption. Unlike a PMS where even if I don't redeem, I'll have to keep paying taxes. If you compare it with an AIF, SIF to my mind is a smaller baby of AIFs. AIF also under Cat 3 honestly is taxed at a very high level if they're using derivatives and it's MMR, which is the maximum marginal rate, or otherwise it's long short equity, the way they tax, with the fund manager pays the tax and the investor is then exempted out here. But in case of SIFs, I think it's even more structured because you're just paying 12.5%.
It's like mutual funds.
It's like mutual funds.
Mohit, I just have one question. We were talking about the redemption. If it goes below 10 lakhs, supposedly someone does, then is there a time to, add back or get back the investment to 10 lakh amount? Is there any clarity on that front yet?
I think the redemption, though operationally my sense is the redemption will get rejected. If you are trying to redeem a smaller amount, let's say we invested 10 lakhs and you're trying to redeem 4 lakhs out of it, I think the redemption will get rejected. You will have to redeem all or none.
Okay.
Take that point. So we have a lot more questions, a lot of follow-ups on your answers as well. But we have to take a quick break and we'll continue our discussion and understand more about SIFs on the other side.
Corner, we still have with us Mohit Gang, CEO and co-founder of Moneyfront. We're discussing SIS today. We have a lot to discuss. We've discussed a lot, but Mohit, first up, who should not look at SIF investments? Let's clear that out also. Who should avoid this?
Okay, look, I think if you're happy with your mutual fund portfolio, honestly, I don't think so. You need to experiment a lot. But unless you have the ticket size to kind of live with that volatility and the higher risk kind of instruments, then you should not be going into it. The third way of looking at it possibly can be that, let's say 10% of my portfolio goes into an SIF, which a typical ticket size is 10 lakhs, which means I should at least be having a crore plus portfolio to be able to start investing into SIFs and have a meaningful allocation there, at least one product, and also not cross over allocation, which is allocating just 10% in a strategy to try and tactically think as to what can be the added advantage of my portfolio. So I think below 1 crore in a mutual fund portfolio, if you have a corpus, then you should not be any which ways experimenting into these products. And last one could be if you have specific reasons. Let's say you're looking for arbitrage plus kind of returns, or you're looking for equity savings product with a slightly plus kind of a return profile or a hybrid plus kind of a return profile. I think these are all very different mixes of the funds. So you will have to be very cognizant. Investor will have to know exactly what the detailing of the fund is and then perhaps try and get one.
I think the 10 lakh is sort of an entry barrier which SEBI has created, that you need to be very mindful. Only at this level you should be investing into an SIF because high risk also exists when you're investing here. Is that a fair way to assume that?
Absolutely, absolutely. I think they're trying and creating a ladder because most of the investors were rushing into these HNI products which are PMS and AIFs without understanding the complexity and the risk involved. So I think SEBI is just giving them a gateway to it. They're giving them a glide path that if you really want to get into such products, you first try your hands with SIF, understand the complex world and then go a step forward.
And you know, it's interesting because when we ask for a lot of mutual fund queries in last couple of days, we've received a lot on SIF itself, even though the initial mutual fund investments wouldn't have taken to a level where you have spoken about at least 1 crore of portfolio there for you to invest 10 lakhs into SIFs. But there is definitely a lot of interest, I would say. So let's talk about individual SIFs now, because there's SIF by Quant Mutual Fund, which was India's first SIF. Let's talk about what made Quant go first and what is the strategy that they are running. Does it make them different because they had a first mover advantage here?
I think Quant and Alteva, both were like the first movers. Quant, I think, went live in October of 25 and Alteva just followed maybe a week or 10 days later, right? So yes, of course, Quant is the first one to go under the, I think, Pioneer umbrella. They got the first licenses from SEBI. And Sandeep Tandon himself is managing the SIF piece, though he has a battery of co-fund managers, some 3-4 other names, but those are more names. Someone is managing debt, someone is managing the derivatives part of it, but I think the equity portion is directly being managed by Mr. Tandon himself. And I think what they did smartly was they launched, I think they launched 3 or 4 together under one shot itself. So they have all the 3 categories of equity. I think they are the only fund house other than ISIF, if I'm not wrong, which is ICSI Pro, having all the 3 categories of equity under their banner. And they also have both the hybrid funds. So typically they have covered all the 5 spaces. They've covered the entire 5 space. They have the product on the shelf. Performance, I would say, is thereabouts. On the hybrid one, they have done exceedingly well in months where markets have done well. Where the markets have fallen, I would still say Alteva has done much better than any other product in that category in terms of managing the risk part of it. But when the markets are going up, which also kind of ties up with the Quant philosophy of being a momentum kind of a fund house. So my sense is eventually they should do well under the equity banner, but I think only time will tell. It's too short a time frame for us to make a judgment.
So what has worked well for Alteva in that case?
Okay, I think, look, if you break down the composition of Alteva, it's a pretty interesting composition. On your 100 rupee, they typically take an exposure of around 110 to 115 odd rupees, right? Which is the max permitted under these kind of categories, because the 10-15 rupees they park under cash, which is like T-reps or repo, and they do derivatives using that as margin money. So that portion of cash is not counted in your overall 100 rupee allocation. So that's why they can get an additional allocation. So in effect, your 100 rupees is not 100 rupees, it's 115 is playing for you. So that's part number 1 for an additional alpha, right? They are using some special sits. So today the portfolio has very little of it, but I think they have moved that composition in their portfolio very smartly. They can go to as high as around 10% in special sits, derivatives and arbitrage situations. So I think that's also helping them a bit. So the overall hedged portion or the derivative portion is around 53% of the portfolio. Then you have around debt, which is minimum 25% requirement, but they have gone pretty high on that, considering the 15% margin money also. So they are around 45-50% there. And then you have special sets and some other derivative positions. So overall, I think the mix is pretty smart. They've been very smartly moving across the special sets part and the derivatives part, which has given them the edge in the falling markets. So in the falling markets, I think the risk-adjusted return is pretty nice. If you see only 2 months in the market, which is March and April, and that gives you a very clear picture. March month, Nifty was down 11%. Most of these funds were down 1.5%, 2%, not more than that. In the month of April, Nifty was up 7.5. Most of these long short hybrid funds were up around 2%, 1.5%, 2%, barring 2, which is Quant and ISIF. Both were up a little higher in tandem with the market. So that shows that they are more tilted towards like a balanced fund plus category. and Alteva is more towards an equity savings plus fund or like an arbitrage plus kind of a category.
You know, Mohit, what about the Magnum SI fund by SBI, right? SBI, obviously, that largest AMC there. They've gone for that hybrid approach. So could you talk to us more in terms of this, as well as what sort of investors who are looking at it should look at this one?
Okay, look, again, SBI has I think the massive reach and the distribution and the brand typically gives them that kind of heft in the market. They are the second largest player on the SIF category now, almost like 3,700 odd crores of AUM out of the overall, my sense is 16,000 crores of AUM in the category, right? So again, they've gone with Magnum as the brand and the long short hybrid fund. My sense is that's more like a equity savings fund category ka plus version. So it is more like an equity savings fund plus version. They are akin to an Alteva when they use special situations in their portfolio. They use some merger and arbitrage situations, and they also use REITs and InvITs in the portfolio to create that extra amount of money. I would place Alteva little lesser on risk and return both, and Magnum a little higher on risk and return both. Now, for an investor, it is extremely critical to understand what kind of an hybrid fund you want in your portfolio. If I don't want any open equity, any kind of risk, then I go at the lowest spectrum, which is Aruda Hybrid, which is just an income plus arbitrage fund, no equity. If I want a little equity exposure, very little risk and a risk profile, which is kind of an arbitrage plus, then I go with Alteva. If I want a equity savings kind of a risk profile, a little higher return profile, let's say around 9 to 11 odd % maybe, then I go for a Magnum or an ISIF. And if I want a slightly higher risk profile with a balanced fund kind of an approach, then I go for a QSIF. So that's the spectrum.
So more on the risk profile that one can decide and select which fund you want, which SIF you want to go for.
For an investor, it's very important to know what underlying strategy they are using, right? So let's say Geo is coming up with Prism, which again will use merger and takeovers as a special situation kind of a scenario. So they will do a lot of arbitrages and positions around some mergers and special situations, right? So everyone's coming out with a very different strategy and a different approach of using derivatives in the portfolio. So investors will have to know the underlying
what do they want from this investment?
Yes.
We have 28 SIFs now across 15 AMCs, and you answered our next question already and made it easier for viewers as well to understand which SIF to go for. Depends on the risk, depends on what kind of objective you have before investing into SIF. Mohit, always a pleasure speaking with you. Thank you so much for joining us on the show now and making this topic easy for us and for the viewers as well. And with that, we'll take your leave on this edition of MF Corner today. Stay tuned for Closing Bell to take you through the last hour of trade.
beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
4.5% lower on the Kospi. The Nikkei is down almost 1%.
The food's going to be bought exclusively through the United States from our farmers.
On the way down, it is tech and metals. So the overnight sell-off on NASDAQ playing out in the same direction in our markets as well.
As long as we have monsoons which are in line with the forecast, I think that's fine. I don't think the markets have any additional reason to worry about.
US FDA has approached the Indian pharma manufacturers for a cancer drug, which is mainly used for treatment of testicular, bladder, as well as lung cancer. The company has made an investment of around 4,900 crores. What's the value of that portfolio? It stands at 41,300 crores.
It was a 90-point range yesterday. It's an 80-point range today on the index. It's the weekly expiry of the Nifty.
They changed hands at an effective price of around 292 rupees per share. Now, that was at a discount of close to around 5% in comparison to yesterday's close price.
A sharp one at that in the last couple of minutes itself. Look at that. The sharp fall from the highs of the day. 116 points gone on the Nifty. We are below that 24,000 mark.
The US was also quite keen on expanding energy exports to India during the current geopolitical crisis.
Very close to breaking that 23,900 mark. 23,850 continues to be an important support, and it's the weekly options expiry. Could see some volatility.
Well, that was the day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel and with me is Manglam. And Manglam, the markets after a while actually are down. But we need to take a look at it in terms of what's going on in the global markets. And maybe things not so bad. But the final 60 minutes are coming up, and it's going to be a fairly volatile, final 60 minutes because you have the weekly expiry as well. That'll play out.
Yep, all said and done, we've tested both ends of the range. The lower end is where we are at right now. The higher end of the range, closer to 24,200, is what we tested yesterday and this morning, as well as we moved towards that 100-day moving average. And in the absence of any major big positive cues coming in from the world, maybe the street believes that we would be in this 400-point range. Where it goes from here, obviously, we'll track as the weekly expiry comes by. But let's tell you what we have on the show today. There's weakness which sets in following the sharp fall that we saw in Asian indices. Nifty has given up that 24,000 mark, closing in on that 23,900 mark as well. Bank Nifty, Nifty Midcap Index, all of them are down over 1%. And there's broad-based selling seen across sectors. The sole outlier of today is pharmaceutical. All those stocks are actually doing well. The index up over 1%. What's keeping these stocks afloat amid weakness? We'll take stock of those triggers in just a bit. Then we have 7.5 crore shares worth nearly 2,100 crores changing hands in Vedanta. The stock's extended its losses to sulk at around 8% lower. Alongside that, we have all the other metals which are not doing too well as well. So we'll talk about that. And InfoEdge up 3% as they've reported nearly 41,000 crore rupee portfolio value across 135 startups that they've bet on. So we'll discuss that too. But let's kickstart the show with the F&O pack. Nigel, we have an hour to go for the weekly options expiry.
Well, that's right, Manglam. As someone who's waking up right now and looking at the markets, they'll say, well, the Indian market's under big pressure. Actually, we're relative outperformers. Remember, year to date, actually, we're underperformers. But in today's trading session, we're outperformers. You'll be saying, what's wrong with you? How can you say we're outperformers? Well, we're outperformers because we're down less than 1%, and other Asian markets have got absolutely slammed in today's trading session. So not so bad, and a relative outperformance after the sharp underperformance is what we have seen in this year so far. Now, looking at the options data, well, the call writers, they have come back in style in today's trading session. And that's why the PCR has come down to around 0.65. Because there's been aggressive call writing through the trading session. 24,000 call. Take a look at the premium is down to $4-5. Start of today it was $150 approximately. So that's, now it's come back up to around 25 points odd because we have recovered a little bit from the lows. But it's a sharp decline from the top. Even the 23,950 call, the premium at the start of today was around 180 rupees. That's come down to less than 10 rupees. So there are signs of writing at both those two strikes. So the bounces actually are going to be met with some kind of resistance. But that's the important level. Earlier today we went down all the way to around the 50-day MA. And from the 50 DMA, we have seen a bit of a bounce. So that's the crucial band that you're looking at. On the downside, you don't want the 50 DMA to break on the downside. And I'll tell you what, from this 23,910 odd mark, either by the end of this trading session, we could be closer to around 24,000 odd, or maybe we go and revisit today's low, which is at around the 50 DMA. So we're looking at a swing of close to around 80 to around 100 points in either which direction. So just keep an eye out on those levels. Individual stocks, well, you have MCX. That's coming for some fresh shorting in today's trading session. It's been a big outperformer. Open interest is up more than 5%. But InfoEdge actually was seeing shots get into the system. With the news flow that we've got, some of those shots, they are scampering for cover because there is a bit of a short covering bounce that's seen. And the pharma sector has been the toast of the day. You know, it's looking pretty good. A lot of buying interest out there across the sector. And auto pharma, there's a mix of activity out there because the open interest hasn't swelled up, but the stock is up. So some signs of fresh buying. There's a bit of a short covering bounce as well that's playing out. But weekly expiry, it's a Tuesday, final 60 minutes. Expect to hit 80 to around 100 point swing from these levels of around 23,900 odd Manglam.
You know, just two data points that I'm looking at right now, Nigel. One, the US futures, the Dow futures down about 800 points. So we saw third day of sell-off coming in SpaceX as well. So let's see whether that continues in today as well. And I'm looking at our own markers here. One is the India VIX, which in the morning was down by about 3% when we were absolutely flat around, you know, Chartbusters, where we ended the show with no move on any of the major indices. And now that's spiked to around 7% higher, though it has been very benign for the last few trading sessions. In fact, you know, during the war crisis, it was up and closer to the 20 mark and now down below that 14 mark as well. So maybe some bit of complacency was being priced in. So now it's come back to tell you, okay, we are here and there is still some volatility in this market. And the second part is the rupee. We've seen a lot of strength in the rupee from higher levels, stability if you must. But today, we've actually seen the rupee weaken a little bit. So to that extent, even the flows will be very crucial to track. We moved closer to 95 than what we were earlier. So, you know, twice in today's trading session, we've tested levels closer to 95. The high today was, or rather low today, was 94.91 thereabouts. And thereafter, we saw some strengthening, but back again around that 94.83. So that makes FII flows very crucial to track in today's trading session. But how should you position yourself in this last hour of trade? Bonanza Portfolios, Mitesh Thakkar joins us now with closing strategies. Mitesh, you've been saying that, you know, maybe we should use dips to buy. Is today's dip a comfortable enough dip for one to buy? Or do you think this is a little more than just a dip?
Yeah, good afternoon. So I think, you know, there are two levels which I'm watching on the downside. The first is about 23,850 and the second one is 23,770. We got a low of around 23,862. I think very clearly, I think this is a big support band, and the way traders should want to get into fresh positions is that you start buying around 23,850 odd levels, give and take 15, 20, 30 points. And add slowly as you get close to about 23,800 zones and keep a stop below 23,750. So in that sense, you know, I would be comfortable buying into this dip. We've recovered by about 50 points, but in case we go back to test the day's low or trade around that, I think that be a welcome buying opportunity, and add more near to levels of 23,800 and keep a 23,750 on this spot as your stop loss. So still maintaining a positive buy despite that there has been some cracks in the global markets, but the Nifty chart isn't damaged as yet.
Right. You know, just your stocks for the next hour or so, is there anything that stands out for you?
I have two recommendations, not for the next hour, but a couple of days. DMart or Avenue Supermart is breaking out. That's a buy with a stop at 43.45 for targets of 4,500. And Canara Bank, surprisingly, it's a banking stock which has turned slightly negative. Some multiple crossovers in the hourly chart on the negative side. So Canara Bank is a sell with a stop around 133.5, 134. Look for a target of 120.
Got it. Okay. All right. Thanks a lot, Mitesh, for joining and giving us those calls. We'll revisit them at around 3 p.m. odd. By the way, from the broader markets, those select stocks are doing well. Ola Electric, one of those rank underperformers, they've received the BIS certification for its 46,100 LFP cell. So, you know, that's why that stock has perked up. Remember, a few sessions ago, it was actually around 48 rupees, came down to around 40 bucks odd, and it's seeing a bit of a pop post this news flow that came on the BSE. Pace Digitech, that's up more than 10% in today's trading session. So sharp uptick is what we're seeing out there. And Enviro Infra, that's the other stock actually that was up. It went into the red and now it's seeing a bit of a pickup. But the stock that's really standing out today is Meesho. Mangalam, tell us more. I think there's a brokerage note as well.
There's a brokerage note, and Meesho, the thing is that there were a couple of industry reports that came over the last few days which suggested that maybe e-commerce activity is still fairly strong. Why do I say that? Because, a lot on the street were worried whether e-commerce activity is stalling and quick commerce activity is growing. So is that shift taking place or not? But recent industry reports suggest that maybe e-commerce is still stable. The parcel volumes are fairly strong. And if you look at Meesho post-listing, it's had a fairly rocky ride. It went all the way up to 254 thereabouts, and from there it saw a big correction too. Then there were a couple of supply events that took place from the early investors in the company, and thereafter it's seen a recovery from almost 164 to about 185. Today's up move obviously can be attributed to what Citi is saying. They've initiated coverage on the stock with a buy rating, target price of 210 rupees. They're saying it's a value-focused e-commerce platform where there are several vectors of strategic differentiation versus other e-commerce platforms. The first one obviously is the fact that it is more Bharat-focused as against metro-focused. So the average cost of purchase or average ticket price is a lot lower. And more importantly, they don't charge any commission to any of the buyers, etc. as well. So all these things are making it a lot more differentiated as an e-commerce platform versus the others. And they are serving as an infinite and accessible store to a massive audience. So they're not looking at, pockets of affluence in the metros, but they're looking at a higher number of orders and lower ticket prices per order, which would mean more volumes as against value. They valued the company at 50 times FY29 EV to adjusted EBITDA. And for here, remember, the company on a reported basis is still EBITDA loss-making. But the metric that the company keeps insisting one should track, and that's what we've been looking at over the last many quarters as well, is the free cash flow. If they are free cash flow positive, then maybe all the money that they're taking is used for investing in future growth opportunities, which is why EBITDA is still loss-making. So if free cash flow so long as free cash flow is positive, the unit economics are in place, and that explains why Meesho's seen a bit of an up move right now. Though, remember, it's been fairly volatile and at the same time not averse to any sort of further liquidity event happening as well on the stock, given the sort of institutional interest and institutional holding that we have on the stock.
Got it. Thanks a lot, Mangalam, for explaining that to us. Let's go across to Dilip Bhatt, who's joining us to help us out with his view. Hi, Dilip. Good afternoon. Good to see you in Meesho. Any view on that name?
Always a pleasure, Nigel. Thank you so much. No, I think as far as Meesho is concerned, I think basically the challenge is how to value these stocks, because so long as you have enough cash in the books and you are in a position to raise further cash, I think that is how it will be seen. But in the immediate future, to value this company and to see that as an investment proposition, I think it's something which I'm not able to understand, nor I would like to get into that. But I would prefer to avoid this particular name, not necessarily, because if at all I have to get into this kind of name, I think it's better to stick around with some of the better known names, whether it's Zomato or Swiggy or whatever that is. That appears to be much better than this kind of a name.
All right. Before I ask you about the pharmaceutical space and your call here, Dilip, I wanted to understand whether you have a view on DMart or not, because DMart, again, it's such a polarizing name, and at lower levels there are always those who defend the moat of the company, and at higher levels those who always argue against the valuations of the company, slowing growth, etc. But now as we speak, the stock's done well. In fact, this year it's managed to outperform a lot of the other peers as well. Store expansions have increased, but as soon as the stock moves to higher levels, the valuation argument comes back again. So while Meesho, it's difficult to value these stocks as per your metric, for DMart, how do you ascribe the valuation that you look at, and what's your call on DMart?
Well, I think as far as DMart is concerned, without any doubt that this year they have really performed quite well, whether it is the store's expansion or even, the growth in the profitability, whether it was top line or whether it was EBITDA. The question now comes is that of valuation. I think definitely DMart is one of those stocks like Hitachi Energy or, Siemens Energy or whichever it takes some of those names where there is a scarcity premium. I think it is getting a good scarcity premium at the moment, and that is how one should view the stocks. But whether DMart one should buy at this level, no, I'm not too sure. Maybe one argument could be that in this market where there is a paucity of good stocks with clear leadership, I think this stock at best can come into your portfolio as a defensive stock which can provide some resilience to the portfolio. But apart from that, I think very difficult to justify buying DMart from the current levels for a proactive returns.
Got it. Dilip, just throwing this at you. Ola Electric, you're interested? That's one of the big movers, actually. It's from bombed out levels, but they've got some certification with regard to cells. FTP cells, I think so, is what I could see flashing on the screen. What's any take on the stock, or you would avoid it?
Well, I think Ola was the one which where we also invested, but haven't got any returns in that. But I think after having invested and having found that there are too many ifs and buts in that, and there are quite a few spate of negative news or negative reports about some of their stores, some of their dark stores. And I think those are the ones which really cause a lot of apprehension in the minds of the investors. But surely, post the Middle East war that we saw, I think Ola as well as Aether have been quite very active in terms of the volume number. And we have seen that even in the registration for the month of June, they have taken the lead. Having said that, no, I don't think I would recommend this particular Ola or even Aether from the current levels. Because on a standalone basis, whether they will make enough profits without the support from the government, one is not too very sure. And the cash flow issues will come sooner than later for all these companies.
All right, take that point. As of now, both these stocks higher by almost 3.5% to 4% each. Ola Electric up around 2.5% right now, off marginally off the highs of the day, but still holding well in the green. And we have Aether as well, which should come up for you, which is trading with a gain of almost 3.5%, 4%. Let's also take note of what the Israeli PM is saying. They're saying that they've appreciated the support they've received from their American friends, but they need to free themselves from the American dependency and build an independent system, basically trying to hold on their own in this war of words which is currently taking place between Israel and the US right now. This is with regards to the Lebanon issue, which would perhaps be a contentious talking point for all the negotiations that are going on between US and Iran. So while we're talking about some geopolitical uncertainty and perhaps some finality when it comes to resolution here, this could be one of the things that could throw a bit of a spanner in the works, and that's something that we will monitor fairly closely. But it's the pharmaceutical stocks which are buzzing around in an otherwise weak trading session. In fact, right from the word go, it's been the pharmaceutical stocks which have been firing ahead and currently nearing the high of today's trading session. Vinny joins in with what's causing these pharmaceutical stocks to do well.
Hi, thanks so much for that. Yes, pharma stocks are buzzing since the word go today. What we're seeing is coming in is that US FDA has approached the Indian pharma manufacturers for ifosfamide, which is a cancer drug, which is used for testicular, bladder, as well as lung cancer treatment. Now, this is an important drug because why they're facing a bit of a shortage on this one. There's a technical difficulty and disruption they faced in Baxter International's contract manufacturing site. One more other reason that they're facing a shortage is the supply chain concerns, right, that come in because of the West Asia war. So they're facing some bit of an issue on that front as well. Now, the supply is expected to be limited and remain limited through 2026 as well. They've come in and they've approached, the FDA has approached the Indian Drug Manufacturers Association, and they've asked for FDA registered facilities to maybe the companies which are FDA registered, as well as they're open to non-FDA registered Indian plants as well if the compliance is good. So that is the main reason that we're seeing a run-up coming in most of the stocks. Some of the names that are on this cancer drug side as well are Zydus Life, Alkem, Cipla, Aurobindo. Some of these names are in focus because of this as well.
All right, Vinny, thanks a lot for that. So those are a bunch of the pharmaceutical stocks which will be in focus. In fact, let's listen into what the Indian Drug Manufacturers Association had to tell us on the US FDA reaching out to them. We'll hear that bite out and then go back to Dilip to get his view on this space.
India is one of the largest suppliers of generic medicines to the US. And there are quite a number of sites in India who manufacture and supply this drug, or have the capability to do so. We do have 4 leading companies who are manufacturing these drugs and who have the capability. We have Zydus, we have Alkem, we have Aurobindo, we have There is one more manufacturer. So, and there would be more. So IDMA has reached out to these manufacturers, and we are trying to connect them with the Indian government and then to the US government to see whether both sides have they can sit together and close the gap.
Well, Dilip, this is just one of the triggers for the pharmaceutical space. It's been a relative outperformer lately. Is there any particular stock here that you like, both something that is export facing and something that is domestic pharma as well?
So I think what you said is quite right, that pharma has been a good outperformer as far as the markets have been concerned. And I think maybe this thing which has happened is an event which possibly will give them a short-term opportunity to companies like Cipla, maybe Zydus. That is what we understand. But on a broader basis, I think in the pharma space, we do like companies like Divi's Laboratory. I think they are doing pretty well. There's a good visibility. There's a good long-term view on this particular stock, which can continue to do well over the next couple of years. I think that they are going to benefit both from US as well as from Europe, without any doubt. And I think even the mid-cap space, we have seen companies like Venus, Orchard. I think all of them have really done pretty well, even in terms of the drug discovery and the kind of stages that they've gone up to at the moment, which is what we can see. So I think some of these names really stand out quite a bit. But overall, I think in the front line, we still like Cipla, we still like Sun Pharma, because I think these are some of the names, they have really withstood quite a bit of their time tested once against US FDA. And with the kind of plans that they have spread out all over India, now they are not so very vulnerable to US FDA inspection and get derailed. So I think the names which I suggested, Sun Pharma, Cipla, Divi's, are some of the names that we like in the pharma space.
Got it. Okay, all right. Let's turn our attention to InfoEdge then. That stock is also rallying after it announced multi-bagger returns from investments. They put out a note yesterday. Vinny joins us to fill us in with more details. Vinny, good afternoon.
Hi, afternoon. So for InfoEdge, obviously since 2007, they've been making investments. They invested around 4,900 crore over the years across 135 startups. Today, the value stands at around 41,300 crores. That's the multi-bagger that they are talking about as well. Now, obviously, the management reiterated that AI, deep tech, consumer technology, that will continue to remain the key focus area for them in terms of future investments as well. Individually, talking about these portfolios. AI portfolio, they've invested 614 crores across 28 AI startups since 2020. And today, the portfolio stands at around 1,268 crores. That's the value of that portfolio. A lot of their portfolio companies have moved from early stage development to now commercial scale as well. So clearly, in terms of the value also, you've seen doubling in terms of value. Deep tech portfolio, that they invested around 455 crores across 30 deep tech startups. Value today stands at around 559 crores. The portfolio is interesting, right? Robotics, semiconductor, space tech, biotech, defense, healthcare, energy and mobility, all of this which has picked up pace in the country as well. So it will be interesting to see from here on how this portfolio moves. Other than that, consumer technologies, for them, it's the largest contributor in terms of the portfolio value. The amount they invested was around 2,755 crores across 45 consumer technology companies and consumer AI companies. Today, that value stands at 37,214 crores. So clearly, that's also seen a very good increase in terms of value. And that is why, you know, the portfolio companies are doing well. The investments they've made are doing well. It'll be interesting to see from here on how it's going to go. As of now, the stock is passing it.
Thanks a lot for that, Vinny. Dilip, I wanted your view on InfoEdge, but by the way, just pull up the auto index. You know, the auto index actually is staging a bit of a recovery in the last few minutes. I think we should get that up for you on the screen. And Tata Motors PV, actually, that's a stock that's, cut its losses. It was down more than 3%. So that's cutting its losses. And Maruti actually has moved to the high point of the day. So these auto stocks are seeing a bit of a move in trade, particularly in the last 30 minutes or so. So just keep an eye out on them. Dilip, your view on InfoEdge?
I think InfoEdge has really created a very nice niche for themselves in terms of, seeding the investments and just trying to ensure that they invest in the right businesses. And most of the investments have really paid off. So I think you can't really fault them. And I think they continue to do that. And as what I can see, that some of the investments have really, even the recent investments have really given them a very handsome return. So I think apart from the core business, the investment portfolio is something which is complementing their overall performance quite a bit and complementing the overall confidence into the company. Yes, that's a stock which one should have on a long-term basis. But Nigel, just a point over here, the way the InfoEdge has really, invested in some of the startups, I wonder what stopped some of the leading IT companies also to follow a similar model. Instead of giving away almost 2 lakh crores by way of buyback, instead they could have seeded some of the few companies and they could have set aside a few thousand crores of rupees every year. And who knows, they would have built a nice AI model.
Yeah, true that. I mean, you could look at it either ways. Damn if you do, damn if you don't as well. But we get that point. Maybe they could have used, the money more effectively and build an AI model. Dilip, before I let you go, I think Genius Power is a stock that you used to track in the past. I'm not too sure. The smart meter player. The Adani Group went ahead and they have picked up that IntelliSmart smart meters, I think so. And it appears from there actually Genius Power has moved up. There were two ways of looking at it: more competition in the system or consolidation. It seems the street has latched onto the consolidation bit because that stock, in fact, is now at the day's high in a market that's otherwise wobbly. At 346 rupees, what's your call?
So, Nigel, I think Genius Power was one of the companies that we liked and we were tracking it quite a bit. But I think the problem was that of the receivables and the inventories that they had. They had a good order book position. So I think somewhere they got derailed because of the high receivables and high inventories, and the existing management was not able to take it forward. So that's why we found that the other investors also came in. But I think going forward, we don't know how this issue has been sorted out, whether this continues to be chronic in terms of the inventories or receivables, because so long as your cash flow from operations continue to be negative, you may have a very big order book, but it will be very difficult to take it forward without diluting yourself in a big way. So I'm not too sure. I've not done the latest study as far as the receivables and the working capital cycle is concerned, but I remain apprehensive on that front.
Okay, got it. All right. That receivable days, cash conversion has been a bit of an issue. So that's why Dilip remains apprehensive. And I think the other problem, Dilip, is that the order inflows actually that were coming thick and fast, that had slowed down as well. But for the time being, the stock is up and about. Thanks a lot for giving us a view on that stock, and wish you a good remainder of the day, Dilip. Well, time to slip into a short break. On the other side, Mirai Assets Mutual Fund Manager, we have Varun Goel, who's waiting for us. Stay tuned. Welcome back. Well, South Korean stocks witnessed a brutal sell-off in today's session. In fact, the Kospi, hit low circuit in trade today. It was the biggest decline that was seen this year itself. Let's hop across to Hormuz. He's joining in to put all those moves into perspective. Hormuz.
The root cause of everything that you're witnessing on the screens right now could well be attributed to the unraveling of the AI trade that you're seeing in the Asia Pacific. And the Kospi, the principal culprit of that, the index was down 10% in today's session itself. And the two stocks that contributed to the index rising 100% in just the first 5 months of the year were the reason behind this 10% fall as well. Both Samsung and SK Hynix were down 12.5% each in today's trading session, but there were reasons behind it as well. What led to this sell-off in SK Hynix? Now, there was this local media report that said that the company is slowing down the production of its 6th generation high bandwidth memory, the HBM4 chip, and it's slowing down the conversion of the 5th generation production line into the 6th generation one. Why is it doing so? Because it is now shifting focus to the lower priced DRAM chips. Now, it is said, the report further stated that the HBM sales had already formed 40% of the overall top line, and therefore it is adjusting its resources to secure additional profits in the DRAM market, where the supply shortage is even more severe when compared to the high margin chips market as well. Now, despite this sell-off that you have seen today, look at the returns that both SK Hynix and Samsung has delivered. At one point yesterday, SK Hynix had a market cap higher than Samsung. It's still up almost 280% this year. Samsung is up almost 150% as well. Then look at the impact as well. Look at the Nasdaq. The futures are down over 800 points as we speak. The index itself was down over 1%. Of course, issues related to Alphabet and so on and so forth. That is having an impact on the futures market in the US as well. The other thing that the market does not like in the US is this fundraising spree that all of these big tech companies have embarked upon. Look at the amount of money that they have raised. Meta raised $25 billion. Amazon has raised 80. Alphabet has raised almost $100 billion. A sum that Oracle raised all through its fiscal year of 2026, and this is what is contributing to this soured sentiment as well. As SpaceX itself, the new listing was down 16% yesterday after it said that it is proposing a $20 billion bond sale, and all of these companies have operating cash flows anywhere between $50 to $100 billion. Despite that, they are engaging in such heavy fundraising is something that the markets did not like. Of course, SK Hynix had issues of its own. The stock crumbled, the trade crumbled, and that is having an impact on global tech as well.
All right, take that point. Hormaz, thanks a lot for that. Let's see whether this is just a flash in the pan or at some point in time we, get some more clarity on where the AI trade goes from here. But the experts that we've been speaking to throughout, this up move see no signs of dissipation on this rally yet, though there would be some intermittent decline. So let's see how that goes. But we focus on our own markets here. Varun Goyal, who's the senior fund manager of Mirae Asset Mutual Fund, joins in now. Good afternoon, Varun. Not a particularly good day of trade if you're a bull in today's trading session, but not so much for you. You have been sitting on serious monies on the investment that you've made in Kirloskar Oil Engines. I'm looking at your top 5 holdings. About 3% of your portfolio is comprised of Kirloskar Oil Engines. You look at the stock price move today, you look at it yesterday, you look at it this entire year, it's done extremely well. Though yesterday's and today's move could be attributed to the fact that they've, started looking at data centers as an opportunity here as well. When you chose to invest in this, was this a part of your thesis, or this comes as an additional positive surprise? And if it's an additional positive surprise, how much bigger do you think could the returns opportunity be?
Yeah, good afternoon. Thank you so much for having me on the show. I would not like to go into specific details of a particular company, but I think broadly, if you look at the data center story, I think generally we do not have direct plays, we do not have chips, we do not have the Magnificent Seven here in India. But what we do have is component suppliers, which means people making wires and cables, gensets, engineering equipment, cooling equipment and cooling towers, the balance of plant, civil construction work. These are some of the things that will be done by Indian companies. And we, as you know, next 4 or 5 years, we have almost 3 to 4 lakh crores of capex plan on the data center theme. And all these ancillaries, companies which in some way geared to capture the demand will be a big beneficiary on this. So we remain positive on genset companies, we remain positive on wires and cables companies, and some of these other companies which can contribute in their own way to the overall story. I think we have a long way to go from a theme perspective, and I think the earnings growth will remain strong for most of the players in this segment.
All right, Varun, just hold that thought. When we started the show, we were saying that we should see a swing on the Nifty, maybe 80 to around 100 points in either direction. And it appears the direction is on the downside. Because the Nifty in the last few minutes, it appears this is the weekly expiry factor. Sharp decline, we were holding at around 23,920. And suddenly we have fallen closer around 100 points. And now we're seeing some kind of stability. So I think that intraday chart, actually, we should just refresh it because we saw a sharp decline on the Nifty itself. It should refire, and that will give you a better picture with regard to the kind of fall that we've seen in the last few minutes. The Nifty Bank as well. Yes, that's the refreshed one. Director doing a superb job out there. Suddenly we're seeing a sharp downtake, and even the Nifty Bank, actually. Pull up the intraday chart. That's down now close to around 750 points or thereabouts. Hi, Varun. Good afternoon. Good to see you win. Well, some of those good, solid stocks actually have got in this sort of a volatile market. Mangala mentioned Kirloskar Oil. Then one of those pipe makers were there, the Welspun Corp. Suddenly the pieces came together. They had a year where there was no orders coming from the United States. Those orders came in there. They started executing. And now, post this war, there's going to be a lot of focus on oil and gas movement. And also, there's going to be a play with regard to the data centers. So that one appears well placed, and you'll have a fair bit of weightage on that one. You like this theme? Pipes, and maybe with the water play, maybe oil and gas as well, and maybe cooling products as well could move through here. What's the rationale out there?
Good afternoon, Nigel. Thank you so much for having me on the show. So I think broadly, yes, the oil and gas capex stories will continue to do well. I think in US, if you see, there'll be large data centers which will be set up, and these big pipelines will need to set up to make sure that there is enough infrastructure power which is made available for them. And as such, there is a big capex story which will play out. Also, I think Middle East, we will see some reconstruction happening post-war, and I think there is more diversification of infrastructure in terms of getting those economies less dependent on oil and getting other sectors of the economy to also kick up. So those companies which can participate in some of these oil and gas capex stories, some of the water stories. I think in India too, we had this Nal Se Jal program, which kind of slowed down in the last 1.5 years. But from what we hear, it should get further accelerated in the next 12 to 18 months. And there should be further opportunity coming in from that side. So I think as a theme, this looks pretty interesting. We have several companies participating in this growth story, and hopefully earnings should stay strong in the next 12 to 18 months.
All right, earnings stay strong in the next 12 to 18 months on this theme as well. Let's talk some of the bigger sectors here now. Telecom is one, and the reason why I ask you is because you have exposure to that via Reliance in your portfolio and Bharti Airtel as well. But Reliance, obviously after the annual general meeting, the plans that they have of the IPO for Jio and the commentary that they made around their retail business, the consumer business in particular, AI, and the new energy businesses. Do you think it's a place from where fresh investments can be made in a stock like this? And your call on the telecom space in general, do you think the Jio IPO could be momentous for not just Jio but also the others in the sector?
I think the telecom space continues to be very attractive. There are only 2 to 3 players, serious players now left in the industry. There is serious pricing advantage that the incumbents have. We believe there will be scope for further price increases in the next year or so, and the profitability per person will continue to increase. I think the amount of data that all of us consume, this can only go up, especially when the AI services become available to most of us. So I think as a secular theme from a medium-term perspective, the telecom story continues to be extremely attractive, and as such, we'll remain positive on that.
And you're fairly positive on the other, segment where we're going to see a big IPO. That's NSE will be coming out with an IPO, and I think you're fairly optimistic on capital market plays as well. If you could drill it down a little bit for us, what do you like out there? Exchanges? Will it be brokers? Will it be wealth management companies, depositories? What is it?
Yeah, so I think this theme, the financialization of savings as a theme is a multi-decade theme. I think we saw a similar thing in US from 1985 till 2007. As the interest rates went down, people shifted a large amount of their savings to equity markets, and all the participants in the value chain, be it exchanges, depositories, insurance companies, market infrastructure providers, all of them benefited. I think we have seen the first 5-6 years since COVID, since this boom really started. We think this has a long way to go, and exchanges, of course, will remain a big beneficiary of that. I think both equity and commodity exchanges, we will continue to see volumes increasing. I think so from that point of view, and this remains extremely capital efficient, capital light business, and therefore it remains very attractive. For those players which have good market share, we believe they will continue to hold on to that going forward too. So we continue to be overweight this theme in both our flexi cap and small cap funds, and we believe this has a lot of legs going forward.
All right, just a final question before we let you go. A sector that's been doing well today and over the last few days has been the pharmaceutical space. It's been a relative outperformer. I wanted to know if there's something in particular that you like out there, because I do see some of the healthcare names in your portfolio, the likes of Krishna Institute of Medical Sciences, etc. So are you playing this theme via hospitals, diagnostics, or are you looking at some of the pharmaceutical companies who have international exposure and the domestic-facing pharma companies?
Yeah, so healthcare and pharma remains a overweight space for us. I think the domestic-oriented companies, both hospitals and diagnostics, are seeing big growth drivers. I think while there was some price competition in the diagnostic space post-COVID times, but now I think situation has stabilized, and the incumbents are seeing significant pricing power, and we continue to see healthy volume growth. So we remain constructive on that. I think hospitals, again, is a shift from unorganized to organized, where most people now shifted from the mom and pop neighborhood nursing homes to well-run corporate hospital chains, since healthcare remains extremely critical part of all our lives. So, and I think that is again going to be a 5-year story. We are going to see more and more formalization, and we are going to see these formal chains gaining more and more market share. So we remain positive on health insurance, hospitals, diagnostics. We also remain extremely constructive on contract research and manufacturing, that whole CRAM space, which is a big export opportunity. I think if you see, there is almost 15% depreciation that Indian currency has against the Chinese currency. And China, of course, by and large, remains the largest player in the CRAM space. We expect more Indian companies to get a higher share of business from the US, which remains a very large market. And more new research is happening in India. And this remains, I think, a very, very promising theme from a future perspective.
Right, Varun, thanks a lot for joining in and giving us your view on a whole host of sectors and investment themes. As of now, as we speak, the market has made a slight recovery from the lows. Just trying to jostle with the 50-day moving average on the Nifty. 23,847 is where we are at. At the lowest point, we moved closer to the 23,800 mark. 23,810 thereabouts could be the low of today's trading session, but we've managed to recover a wee bit from there. Let's see whether we close above the 50-day moving average or not. Maruti is a stock which is trying to do a bit of fighting for the bulls, currently at the high point of trade. What we'll do is take a short break, come back on the other side. We'll get you more on the markets, get you the buy today and sell tomorrow calls from our technical experts, and a lot more as we speak individual stocks.
Welcome back. You're tuned in to Closing Bell, and we have a fairly volatile end to the trading session. Yes, the Nifty is down, but you have taken a leg down yet again. We're closer to the lower point of the day, and I think we've taken out the 50-day MA as well. If you pull up the intraday chart with the 50-day MA, that should be mapped at it. Let's find out from Mitesh Thakkar. What should you do? Mitesh, this market's breaking down, you think, or is it a one-day phenomena that, in line with what the globe has seen? We also, as well as seeing some kind of profit taking, and fill us in with your fresh trades.
Nigel, my initial feeling was that we will, possibly see a support between 23,850 and then 23,770. I think that still remains, but I haven't got any longs yet because a lot of stocks are breaking down. I have a STVT on IndusInd Bank, which I would recommend taking STVT with a stop at 916 for targets of 890 thereabouts. And metal stocks, I think that's another pain point. The metal index, the metal stocks are breaking down. So JSW Steel is a STBT with a stop at 1255 for targets of 1215.
Right. Nilesh, Laurus Labs, do you have a view on that one? That's seeing a bit of buying right now. Currently moved towards the higher end of today's trading range so far.
See, Laurus actually met all the targets, which I was looking at. So right now I don't have a view. In case you get a pullback, maybe you would want to buy it then for the timing of it.
Looking at Misho, 9% higher now.
Yeah, Misho is some kind of a breakout today. I think it's heading towards 210, 215, which was the earlier high. So quite positive on that.
Got it. Okay, all right. Thanks a lot for that, Mitesh. Well, I believe we have Sudarshan. You can't keep that man out of the action. He's joining in to tell us about Tata Motors. The passenger vehicle arm has announced targets for the next few years. What are those targets looking like, sir?
So remember last week JLR had Investor Day and they had given the outlook, and after that we had seen a sharp fall in Tata Motors passenger vehicle stock. But today Tata Motors passenger vehicle has given the outlook for FY29 and FY31 for India business and the consolidated business. So first talking about the standalone business, they believe that revenue by FY29 is going to almost double from the current level of 58,000 crore. Revenue they are targeting of 1.15 lakh crore by FY29. And by FY31, that should increase to 1.40 lakh crore. If you talk about margin, currently the margin for standalone business is around 6.9%. That should increase to 8% by FY29 and further to 10% by FY31. Now, what all would be growth drivers? So, EV business. So, currently, Tata Motors passenger vehicle has the market share of almost 40% in the electric vehicle segment. They believe that penetration, if you talk about the penetration, just companies' penetration in EV segment is going to be more than 30%. Another growth driver is going to be CNG segment, in which companies targeting market share of almost 25% by FY31. If you talk about volume growth, they expect volume growth to be 15% CAGR by FY31, and from the current level, it should increase to 12 lakh plus units. Market share, overall market share, current market share is around 8 to 9%. That should, as per company, increase to 20%, and that would be an increase to almost 600 to 700 basis points. Now, new portfolio. So overall total portfolio would be 15 nameplates, of which 6 would be new and 20 plus would be facelifts and refreshes. So just on the standalone business, company is doing good. Even the outlook that it has provided for FY29-31 is looking encouraging if it manages to achieve.
Right, so thanks a lot for that. So that's about Tata Motors PV. They believe the EV penetration could be over 30% by FY31 as well. But let's move on. Let's talk markets further now, as the Nifty is taking another leg down, closing in on the lower end of today's trading range as we close or come closer to the end of today's session. 23,819 is where we are at right now. So recoveries are being sold into. Jay Bala, CMT of CashTheChaos.com, joins in now. Jay, we had seen a rally from what, 23,100, 23,200, all the way up to 24,200, roughly a 1,000-point rally. Do you think this is just a pullback of that and we're making space for a higher move? Or maybe a rally is complete and now markets seeking lower levels after completing that rally?
Hi, Mangalam. Thanks for having me on the show. See, I anticipated the markets to cross 24,090 and signal that it has turned around from the recent low. But unfortunately, the short-term structure from 23,070 hasn't signaled that yet. So the markets can do two things. The bearish thing is from a very short-term perspective. It can go back below 23,000 one last time, and then it can turn very bullish for the medium term. But the shorter term bullish case is that if the markets were to hold about 23,455, and rally about 24,200. That itself will signal the earlier low that we saw at 23,070 is a important low, and the markets are pushing on the next leg higher. What is working against the market is the dollar index. I didn't anticipate it to go past 100.64, and it has. So the next higher resistance for the dollar index comes at about 102.5 to 103. So that being the case, probably the markets dips one more lower seems probable. The very short term is a bit ambivalent, but the medium term undertone is very bullish. I still maintain that the markets are heading for fresh all-time highs by September to December of 2026.
Okay, all right. So we are still popping the champagne by Diwali, right? Champagne for me, and for Mangalam, some nice tea.
Green tea.
Yeah?
That's right, Nigel.
Okay, all right. But, the dollar index is going to strengthen from here. It's going to be a little bit tricky for emerging markets, India included as well, though we would like to believe that we'll outperform. But we got that, the dollar index, since it's crossed that 100.6 mark, then we'll have to keep an eye out on a bit of an up move from there. Jay, we'll get back to markets and indices. But what about the calls on individual stocks? If I'm not mistaken, Jay, in the last 1 year, you have spoken about Kirloskar Oil a couple of times. And that one, it's in a party of its own. It's not waiting till Diwali. The champagne has popped. The best food is doing a bit of a breakdance as well. Congratulations on that call. If you could tell us, when did you first recommend that stock? I can't recollect. And also give us 2 fresh calls.
Sure, Nigel. Yeah, thank you for that. Yeah, Kirloskar was about sub 9,930 odds the first time, and then the second time it was about 1,000 odds. I anticipated fresh all-time highs to come through. So that was first was in September 2025, and the second was in October 2025. And it's done that. And the objective seems to be right now somewhere about 3,400. But the risk rewards are very, very skewed. It's not sensible to make fresh commitments here. But if you're already holding, you can trail this position and probably anticipate somewhere close to 3,400. For the 2 new calls today. One from the pharma space, one from the gas space. Both have short-term similar price action. MGL from the gas space has broken out of an inverse head and shoulders pattern. The stop loss here at about 1,100. I'm anticipating this to cross about possibly 1,700, but it may not. In the short term, can deliver lesser upsides. But in the medium term, I'm anticipating to cross all-time highs past 1,700. And the second is on Cipla. Cipla, again, inverse head and shoulders pattern, but it pulled back to the neckline of the inverse head and shoulders pattern and is going back up. Stop loss here at about 1,360, probably going to about 1,700.
I want to ask you about the metal stocks as well as copper. But I'll tell you what, we'll slip into a short break. You come back, we'll get those calls coming in from Jay. We'll also wind down the markets for you. Stay tuned. Welcome back. Well, that 100-point move has happened on the downside. The Nifty has breached the 23,800 odd mark in today's trading session. The call writers were on top, and clearly at higher levels we were seeing a lot of supply. But Jay, I wanted to come across to you with your call on two indices. One is the metal index, which has been under pressure. Today, basically, global-facing themes are under pressure. Whether it's metals, whether it's tech, both of them have got slammed. What are the levels you're looking at both these two indices? And if you could tell us, particularly on metals, what are the charts telling you?
Hi. Yeah, Nigel. I discussed on markets forward last week with Mangalam that, if copper had to break below 6.14 on high-grade copper on COMEX, that will signal a short-term double top at least. So be very, very cautious on the metals sector on the short term. I'll be bullish if the Nifty Metals Index pulls back somewhere close to 11,000 mark. I'm not completely sure it's going to get there, but high-grade copper would be a very important signal. So like I pointed out last week, a close below 6.1475 on high-grade copper on COMEX will signal probably other base metals also to drag lower. So avoid fresh bullishness on the Nifty metal space right now. But the medium term looks positive. I'll reevaluate if the metals index were to come closer to 11,000. And when it comes to precious metals, I think we are on a very important time pivot today. If the markets were to see a washout low today, that will be a very strong, reversal potential. I would expect silver to drop to somewhere close to about 58 to 57.75, and gold somewhere about 3,900 to 3,800. That will be an important reversal potential for the precious metals. So important day ahead for the metals.
Important day indeed. Some of the stocks are getting beaten out of shape, and these are ones which have outperformed. New India Assurance for one, which is up 30% this week. Going into trade today is now down about 8% with a lot of volumes piling on, and has actually turned negative for this week with today's trading losses. And Bajaj Consumer as well, a stock that has been flirting with 52-week highs all through the last few trading sessions, down about 7%. Just a final word on Reliance, Jay, because that's a stock which is, which tried to make a pullback in yesterday's trading session, but has been fairly weak. Sold off today as well. Now just about holding on to 1,300 by the skin of its teeth.
Yeah, I would like Reliance to dip below 1,300 and touch somewhere close to 1,297 to 1,288. That will be an important signal for me. It needs to turn around there. I pointed out that 1,370 is an important level for Reliance. Now, if it does this 1,297 to 1,288 and then turns around and comes back about 1,370, that's a bit of a distance. But if it might do that, that'll be very bullish for Reliance in the medium term. I'm bullish on Reliance for the medium term, but I want that endorsement from the markets to come through. So watch for supports to come through around 1,297 to 1,288. But there's an intraday, what we call as a 5 up from the recent low. So that's a normal, normally that's a 5 up doesn't occur in isolation. You get another 5 to confirm that. So watch for a cross of 1,370.
Jay, very quickly, the Bitcoin party is over?
Yeah, the short term is over, but I think the medium term it's going to revive. You can anticipate some decline closer to 56,000 to 52,000, and then there is a possibility that Bitcoin will go back to fresh or record highs. So wait patiently in the short term. Once that's done, we can look for the revival of the bullish.
So could pull back 15% from here before doubling. Is that correct?
Possibly tripling.
Probably tripling, all right. That's some call that you're making. Not for the faint-hearted again. And obviously not legally tenable in India as well, as we've spoken about cryptos. So,
but Mangalam, at least Diwali is going to be good for us.
He's
Jay.
promised
it's on Jay.
matcha and champagne to you. Thank you, Jay. We'll take your leave for now on closing bell, but await your conversation on markets forward as well with our team. As we start winding down, the Nifty is going home with a cut of nearly 300 points below the 23,800 mark. Way more stocks declining than the number of stocks which are advancing. We are down on account of the weakness that we've seen in the Korean markets and the Asian indices, largely the tech sell-off that has taken place. And as we ended, the decline was further accelerated by the fact that it was also weekly options expiry. The Nifty below 23,800, below the 50-day moving average now as well. Among the top losers today, export-facing names, we had Infosys, Wipro, TCS, all the tech names, and metal names as well. The dollar strength not doing well for those stocks. So We had, even in the broader markets, cuts for Nalco, Hind Zinc, or something like a Vedanta, which was down by about 8%. On the way up, however, the lone warriors for the market today were the pharmaceutical and healthcare space. So we had Piramal Pharma, Laurus Labs, Aurobindo Pharma. Even in the frontline end, we did see some gains coming by for Cipla and Dr. Reddy's, which managed to go home with a mild green tick. Among the broader markets, however, there were some stocks that saw a big move. Misho, for one, was up around 8%. We saw some traction build on Genus Power as well, which gained about 8% to end trade. And then we had some big notable losers, which include the likes of New India Assurance and some of the Realty Pack as well. But all in all, a weak day of trade, but we outperformed the other Asian indices where we did see an even bigger cash. With that, we wrap up on this edition of Closing Bell. You don't go anywhere because our weekly special, Markets Forward, right after this short break.
Markets see broad-based selling pressure ending at the day's low. The Sensex tumbles nearly 1,000 points, while the Nifty slips below the 23,800 mark. Metals lead the decline among sectoral indices, with weakness across most pockets of the market.
Fundraise rush on D Street. JSW Infrastructure has launched a 7,500 crore QIP, while Vedanta promoter Twinstar has raised nearly 2,150 crore rupees via block deal. Separately, the promoter of Craftsman Automation has spared a 2% stake in the company.
Pharma stocks bucked the trend this after the US FDA turns to Indian drug makers to help ease a cancer drug shortage triggered by production disruptions at a key supplier. Analysts warn supply constraints could be broader than initially estimated.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Vivek Iyer, and with me is my colleague Ritu Singh. Good afternoon. Well, first up, have a look at the markets. The Nifty ending well below the 23,900 and selling pressure actually accelerated in the last hour of the session. The sector that took it on the chin was the Nifty metal. Most of the metals names melting in the session, and names like Vedanta that saw an overhang of a block deal ending lower quite significantly. The mid-cap and small-cap index too ended lower. Ritu, not a very good session. Advanced decline ratio quite muted.
Yes, I like how you said the metals are melting. The IT pack as well, not really helping here. Pretty much that also, dragging the markets lower. IT pack closing down by more than 2%. That tech rout continues, and broader markets as well, feeling the pressure, the macros as well. It looked like an even-Steven setup when we started the day, but didn't end so well, with the Nifty falling below that 24,000 mark as well. The advanced decline ratio also shows you, you had more than 2 stocks that were falling for every 1 stock that was advancing on the National Stock Exchange. Some of the names that did relatively better was the Pharma pack, Cipla, Dr. Reddy, Sun Pharma, holding up relatively better, EMS, Misho. These were also some of the other names that were okay, but yeah, a lot of the concern remained in the metal and the IT pack. But we've got you covered for the next 20 minutes with all of these big news, the key developments in the last week, and the top corporate voices and key events to track, for your next trading session. So let's get straight to it. Here's a lineup of what we have in store for you. We'll start with the top movers and shakers of the day with Sudarshan Kumar. From US supply boost to pharma stocks to stock-specific action, we'll take a closer look at the key stocks that are buzzing in trade. Last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading session, as always. And to our first segment of the day then, Sudarshan joins us now from the big wall with the top movers and shakers.
So it was a weakness across the board, and Nifty has given up majority of the levels at the end. It has managed to close about 23,800. And as I've told you, 90% of Nifty stocks closed in the red. And if you talk about the top Nifty losers, majority of them were IT packs or the metal names. Infosys, JSW Steel, Infosys down more than 3%. JSW again more than 3%. TCS again has fallen more than 3%. Wipro, Adani Enterprise, similar move. And just if you talk about all the metal names, Vedanta down almost 8%. Nalco, Hindustan Zinc, JSPL, NMDC, all these stocks have seen a sharp fall, falling somewhere in the range of 4 to 7%. There was a news also about Vedanta. In all probability, promoter is likely to have sold around 2% stake via block deals. Now, one sector that has supported or that has lent the support to market was the pharma, and that was on the back of the news related to cancer drug shortage in the US. And Cipla was the top Nifty loser at the end. It did come off highs, but managed to close with a gain of more than 1%. Piramal Pharma amongst top mid-cap gainers closed with a gain of 7%. Aurobindo Pharma, Zydus Life, Cohance Life, all these stocks have seen healthy gains. Now, some of the stocks have reacted to news flows. First on the list was InfoEdge. There was a positive commentary related to the returns on the investment that company has made in the startups over the last few years. And on the back of the stock, closed with a gain of almost 3%. Ola Electric has issued BIS for its battery cell, and because of that, stock was up almost 3%. Lastly, on the back of order wins, Sterling and Wilson has closed with a gain of more than 2%.
Well, thank you so much, Sudarshan, for joining us and giving us a neat wrap of all the top movers in the session today. Well, one particular stock stood out, and that was JSW Infra. The stock gained in the session after the company announced a fundraise via the QIP route of over 7,500 crore rupees. Remember, this is a confirmation of a CNBC TV18 news break that we had done on June 12th. Now, let's have a look at the details of this particular QIP. It's a very large number there, a large fundraise that the company is going and doing, over 7,500 crore rupees. The fresh issue is of over 6,500 crore and an offer for sale of close to 1,000 crore rupees. Now, the indicative issue price at which institutions will be able to participate is 285 rupees a share, implying a 7% discount to yesterday's close, or even higher discount when you're looking at the up move today. Now, in terms of the dilution, a little over 11% is the kind of equity dilution that will happen, helping the promoter go ahead and meet the minimum public shareholding norms of 75% as per SEBI. What will the company use the proceeds for? Well, number one, for CapEx spends. Remember, the company has extremely high CapEx plans and CapEx spends envisaged till FY30, debt repayment, as well as inorganic growth that the company would be looking at through acquisitions. They've not named any acquisitions, Ritu, but JSW Infra, it's almost the size of a very large IPO. Over 7,500 crore rupees is what the company is planning to go ahead and raise.
Well, thanks very much, Vivek, for bringing us that story and bringing us that story first here on CNBC TV 18. But let's take the discussion forward. We're now joined by Sudeep Bandyopadhyay of IndiTrade Capital and Jay Bala of Cash the Chaos. Gentlemen, thank you and for joining us again here today and for staying on. Jay, what a day. I mean, just yesterday we were talking about where Nifty goes from these 24,000 levels. You were talking about 24,500 or so in the near term. Now we've slipped below that. Tomorrow, do you see the markets recovering to those kind of levels, or what are the near-term levels you will be keeping an eye out on?
The short term is a bit ambivalent, but the medium term is bullish. So in that backdrop where the medium term is bullish, the short term becomes something that you can let it go and then not participate if needed. So the markets the Nifty can do two things. Either it holds about 23,455 and goes back about 24,200. If it does that, that's bullish. If it doesn't do that, what the Nifty could alternatively do, it could go back one more time below 23,070, the low that we saw a few weeks ago, and then turn bullish. So the medium-term structure is to me, there is no ambiguity there, but only the short term. So watch 23,455 in the short term. If the markets doesn't drop below that, that itself is bullish.
Yeah, well, thank you so much, Jay, for that particular view. But Sudeep, let me come across to you first. And let's talk a little bit as far as liquidity is concerned in the market. We're seeing block deals almost on a daily basis, by companies, by promoters. You're seeing QIPs, as we saw in the case of JSW Infra, 2 large IPOs in the works. Are you a little worried that liquidity could get sucked out of the market and that may halt the rally?
Well, I'm definitely not worried about liquidity, and I'm definitely know that the liquidity will not be a problem for the market. Look, there is an NSE IPO lined up, and then there's a Geo IPO. We'll see a lot of money coming in from global investors as well. So we have been cribbing that, foreign investors are exiting, FIIs are selling continuously. You'll see a reversal of that trend specifically for these two IPOs. So I think investors are there for good issues. Investors are there for good investments. I don't think there'll be a problem in some of the QIPs as well, and we will see a lot of foreign investors participating. Fundamentally, I think there are challenges. We have a monsoon issue. We have a problem that we don't have AI companies having AI models, LLMs and things like that. So investors are not very comfortable. And of course, the valuations in India are still definitely not attractive if you compare with Southeast Asia or US. So these are the reasons for money moving out or not coming. But if there are good issues, money will come, investors will bring in money, and there is no dearth of money.
Okay, with that, Jay, quickly your view on Nifty IT. The IT pack itself, it's around that psychological 27,000 kind of a level, but the short-term trend has clearly been negative, making lower lows, lower highs. In the near term, where do you see this settling?
Yeah, see, the Nifty IT breaking below the low of May, that is a disappointment. I didn't anticipate that to happen, but clearly the Nifty IT stocks, the large caps, are closer to a selling climax. But I've been pointing out that you should wait for this climax to happen and then act on it and not preempt the market. So let it go down for a few more days. But Infosys, which forms a major part in the Nifty IT index, it's showing a terminal pattern. But once again say that I want this to play out and then turn around. Once that happens, we can get more bullish. At the moment, the supports for the Nifty IT index is closer to about 26,500 to 26,000. Which is the April 2023 low, if I recall correct, or 2021 low. So basically, the supports are very nearby, and I would assume that the Nifty IT stocks are close to a selling climax, but I want markets to signal that and endorse that.
Well, thank you so much, Jay, for your views as far as the Nifty IT pack is concerned. But moving on, the USA is grappling with a shortage of a key cancer drug, prompting the US FDA to reach out to Indian manufacturers for supplies. How big of an opportunity could this become for India's pharma sector? Winnie joins in and decodes the math.
So, pharma is one of the sectors that was buzzing in trade today. Now, especially the news flow came in that US FDA has approached Indian pharma manufacturers for a drug which is used for treating cancer, testicular, bladder, as well as lung cancer. It's called ifsafamide. Now, this drug, they said they are facing a shortage. Why? Because there's a technical disruption in one of the contract manufacturing sites, that's Baxter International, and the other reason is West Asia war. Because of that war, there was a supply chain disruption that came in. So because of these two factors, they're facing a shortage of this drug. Now, obviously, supply is expected to remain limited through 2026 is what we understand. Now, the FDA has received and reached out to the Indian Drug Manufacturers Association, and what they highlighted was interesting, that they prefer FDA-registered facilities but are open to non-registered Indian plants as well with good compliance history. So that is a key update, and some of the companies that are in this portfolio, Zydus Life, Alchem, Cipla, Aurobindo, are some of the ones that we'll keep an eye out on.
All right, Winnie, thanks very much for running us through that. Let me get back to Sudeep and Jay on that note. Sudeep, quick thoughts on the metal space as well. I mean, among the worst performing sectoral indices easily, and they've been under pressure despite, some bit of a recovery that we saw earlier as well. Do you think this is a buying opportunity for, some of the stocks like Tata Steel, JSW, Hindalco, etc., or, the stronger dollar, softening commodity prices? Do you think that will continue to weigh on the sector in the near term?
Well, Ritu, I think it's a buying opportunity. We strongly believe that there is a positive momentum as far as metals are concerned. Leave aside what's happening in the last 7-10 days, the end of West Asia conflict and certain other pulls and pressures. But fundamentally, we believe metals are in for good time. These kind of dips are an excellent opportunity for buying into metals. You mentioned Tata Steel. Definitely, it's a good buy. I'm not sure about Hindalco. Fundamentally, Hindalco, as far as India operations are concerned, looks good, but their US operations had multiple challenges on account of the fire incident, and not sure whether still they are out of the woods or not. But if I have to look at aluminium, I think I will go for a Nalco or a Vedanta aluminium. I think both are good buys at current levels. JSW can also be looked at from a steel point of view. So fundamentally, buy metals at dips.
Okay, Sudeep, so metals you're buying at dips. Well, Jay, a quick word as far as the pharma pack is concerned, one of the sole sectoral gainers today. Do you feel there is further upside from here on? Of course, a weak rupee does help them.
Yeah, I'm very bullish on the pharma names, and I think, the pharma index broke out in July, August of 2025, but it was constrained until April 2025, 2026 because of Donald Trump's whims. So, and it's that structure which signaled a breakout in August 2025, that is still playing out, but slower than anticipated. So I wouldn't be surprised if the pharma index rallies to about 30,000 in the next 3 months.
Okay, thank you so much for that. But moving on, from joint ventures and project wins to analyst upgrades and acquisition finance, it's been a busy day on the corporate front. Pasna joins us now and will take us through the key stocks that were in news today.
Well, certainly. First up, let me start with Syrma SGS. The company partners with Japan's Kaga Electronics to establish EMS manufacturing facility in India focused exclusively on servicing Japanese customers. While the company inks 60-40 JV with an initial capital infusion of nearly about 25 crores, out of which 15 crore will be put in by Syrma and 10 by Kaga Electronics. Next up is Sterling and Wilson Renewables. The company secured $560 million EPC contract for a solar power project in Egypt. Hence, the stock certainly remained in focus on today. Emcure Pharma also in focus on the back of that brokerage note, as Jefferies has given a buy call with the target price raised to 2,100 per share. The brokerage says that it expects low to mid-teen revenue growth in FY27 and even expects the EBITDA margin expansion of nearly 75 to 100 bips out there, and expects a 20% EPS CAGR over FY26 to FY29. And lastly, Raymond remained in focus, a CNBC exclusive story according to the sources that the Raymond nears an acquisition in aerospace business. Company is in talks to buy engineering player And remind you that the Raymond's 330 preferential issue was earmarked for acquisition worth nearly about 248 crore. Raymond has identified sectors like aerospace and space tech for acquisitions is what the company is what we are gathering from. So all in all, these are the stocks that certainly saw big moves in today's trading session.
Thanks very much for bringing us that update. Sudeep, actually, let me pick up the renewable themes with you. Actually, more specifically, the EV theme. I think Ola was one of the stocks today that was doing pretty well in trade despite the downturn in the market. It got that BIS certification. How are you looking at this space? Any names that stand out for you? Thoughts on companies like Ola, for instance?
Well, I do like this space. I think a lot of action is there. And as you rightly said, some of the developments on the Ola front are interesting. But I would still stay away from Ola. I think we have seen multiple phases of Ola. Ola touching 140 after the IPO, then it going down to the 20s, and multiple challenges which the company faced. Things are improving, and price has also moved up. So I think it's definitely good for Ola Electric. But I would still not recommend. Let's wait and watch how things move out. From a market leadership position, they have moved to 4th or 5th position. The number of vehicles sold per month have now moved up to 10,000 plus. But still, I think it's a long way to go before they can go back from where they started. Having said that, specifically on this entire two-wheeler EV space, we do like Bajaj and TVS as well. I think they are number 1 and number 2. They are doing pretty well. They have established the servicing and sales network. So they probably are at a much better position to ride this EV wave than these players like Bajaj. Aadhaar, of course, being a standalone EV two-wheeler manufacturer, is doing well, but we'll rather wait and watch than buy into these standalone EV manufacturers.
Well, thank you so much, Sudeep, for your views there. Jay, look at the chart. In terms of the auto pack, where does your preference lie? Is it the four-wheeler space, is it the two-wheeler space, or some of the newer age companies like the two-wheeler electric vehicles? Where would you place your bets on?
Yeah, Ola, I don't have enough data to take a view on the medium term, but the short term from the recent low of 2026, it's looking bullish, but I'd wait for Ola to drop to somewhere close to 33 odds. That will make me bullish, but I wanted to drop in a choppy fashion. But that's not my top pick. My top pick is Bajaj Auto there. I've been bullish on it since mid of 2025, but it's been a slower mover. I anticipate Bajaj to take out all-time highs past 12,000 to 14,000. So I would, to a pointed question, I would say I would be more bullish on the two-wheeler space from a short to medium-term perspective.
All right, Jay and Sudeep, thank you so much, both of you gentlemen, for joining us here today and sharing those thoughts. We have to slip into a short break on that note, but don't go anywhere. We'll get you top corporate voices along with the key market events to watch out for when we return from this break. Welcome back. Let's get you corporate voices. Lemon Tree Hotels is eyeing a presence in 200 cities across India. Speaking to CNBC TV 18, the management said its SPV Fleur could list within the next 12 months, post which it will look to raise additional money. The company plans to deploy about 1,300 crore rupees in equity, along with a similar amount of debt to fund these expansion plans.
In a conversation with CNBC TV 18, LG Equipment's MD said that the company is targeting mid-double-digit growth in Europe and USA. He added that the aftermarket business, something that is doing very well, contributes 17% to the revenue and is expected to grow to 22% over the next 5 years. On the leadership side, the company expects to appoint a new CFO in the next 6 to 7 months after the current CFO was moved to a different role.
And we also had Aadhaar Housing Finance. Now, Aadhaar Housing Finance expects interest rates to rise by about 25 basis points, that is from the RBI, but they remain confident of sustaining the net interest margins that they currently have at around 9% or so. Speaking to CNBC TV 18 earlier, their management reiterated the FY27 guidance that they have, which is 22% growth in both assets under management as well as profits, along with another 17% increase in disbursements that they're eyeing.
And before we wrap, we bring you the key market events to watch out for. Upasna Bhatt is standing by the wall with all the key events to focus for on tomorrow's trading session.
Well, first up, let me start with the global economic cues. US home sales data and even crude oil inventory data is something that we'll be keeping an eye on. And mind you that the Federal Reserve Board releases annual bank stress test results tomorrow. So that is something that we'll be keeping an eye out on as well. Now, the most important NVIDIA AGM for global shareholders will be taking place tomorrow night, that is around 10:30 IST. So certainly a key important event on that front. Now let us come to the domestic cues, some of the key important stocks in focus on the back of corporate action. First up is Bajaj Auto will be in focus as the company turns X date for its share buyback. And also ZF Commercial Vehicle Control Systems India, the bonus issue will take place in the ratio 5:1. Equitas Small Finance Bank will also be in focus as the board will consider fundraising plans here. And lastly, IEX and UTI AMC, both these counters will be in focus as the analyst meet is scheduled tomorrow. So certainly we'll be looking for all the key updates coming in from both these counters. And lastly, on the IPO front, CSM Technologies IPO to open for subscription tomorrow onwards. So that is also on our radar. So all in all, looks like quite an eventful day tomorrow.
Well, eventful day tomorrow, but for today, it's been a bit of a washout for the markets, an all-around fall, ending, the frontline index below 23,850 kind of levels. The metals pack that we told you about saw a rout, as did the IT pack. What held up relatively better was the pharma stocks in today's rate and individual names that we've been highlighting across some of the new age companies and other spaces. But on that note, Vivek and I take your leave. That's all we have on this edition of Markets Forward. We will be back with more news and updates on the other side, so stay with CNBC TV 18.
Hello and welcome to Business 360. I'm Shireen Bhan. The big stories that we're tracking for you this evening. The US eases sanctions on Iran, allows the sale of oil and petrochemicals for 60 days. Iran's chief negotiator Ghalibaf says the Strait of Hormuz will be administered by Tehran and the waterway will never return to pre-war conditions. Iran's foreign ministry also rebuts US claims on allowing nuclear inspectors back into the country. A tech sell-off rattles Wall Street and global markets. Elon Musk's SpaceX suffers a $400 billion wipeout. South Korea's Kospi plunges 10%, triggering a trading halt. European markets also trade with sharp cuts. Weak global cues spark a sell-off on Dalal Street. The Sensex down nearly 900 points. The Nifty drops below 24,000. 41 out of the 50 Nifty stocks close in the red. Top U.S. trade negotiator Jameson Greer meets Commerce Minister Piyush Goyal to hammer out the final details of an interim trade deal. Both nations are looking to formalize the agreement before the 24th of July, when a temporary 10% tariff architecture enacted by Washington earlier this year is set to expire. The southwest monsoon arrives in Mumbai 2 weeks after the usual onset. Agriculture Minister Shivraj Singh Chauhan warns that Kharif sowing may be impacted as 315 districts are likely to receive less rainfall. Tata Electronics suffers a cybersecurity breach. A ransomware group posts more than 2 lakh files on the dark web, claiming to expose the trade secrets of the company's partners Apple and Tesla. Tata Electronics says operations remain unaffected and rules out any impact on its businesses. Bajaj Auto is likely to expand the next phase of its electric vehicle capacity outside Maharashtra as subsidy issues with the state government remain unresolved. Sources say the company is in talks with multiple states and Tamil Nadu has emerged as the frontrunner. That's an exclusive. Can Kunal Shah turn WhatsApp scale into revenue? The newly announced global head of the world's largest messaging app will need to deepen business adoption, expand payments and find new ways to generate revenue from the large user base of 3 billion people worldwide. Messi scores twice as defending champions Argentina beat Austria to book their place in the round of 32, surpasses Klose's record to become World Cup's all-time leading goal scorer. Mbappe grabs a brace and closes the gap with Messi as France trounces Iraq and qualifies for the next round. Well, let's go straight to the top story this evening. The U.S. has eased oil sanctions in Iran for a 60-day period after negotiating teams from nations held in-person talks in Switzerland. Now, here are the latest developments. Iran's chief negotiator Mohammad Ghalibaf has said that an agreement has been reached with the U.S. to release $12 billion in frozen Iranian funds. Speaking to Iranian media, Ghalibaf also claimed that the Strait of Hormuz will be managed by Tehran and the management of the waterway will never return to the way that it was before the war. According to Iranian state media, the country's foreign ministry has also claimed that Tehran has not made new commitments on nuclear inspections. Washington has confirmed that Tehran has agreed to allow international nuclear inspections. President Trump also suggested that Iran will spend its released frozen funds on buying food exclusively from the U.S., which will include purchasing corn and soybean. Trump said, and I quote, "If Iran doesn't live up to their agreement or if they are not behaving, I will do what I have to do," end of quote. Now, despite U.S. and Iran agreeing to negotiate to end the war in Lebanon, Israel has reiterated that it will not vacate southern Lebanon. In a video message overnight, Israel's Prime Minister Netanyahu said that Israeli forces will remain in the security zone of southern Lebanon for as long as necessary to protect citizens. In a separate message, he also said that Israel needs to free itself from American dependence and build its own independent weapons industry. In the oil market, prices of Brent continued to ease as investors remain cautiously optimistic of a breakthrough in the negotiations. According to maritime data, 2 crude tankers with 2 million barrels of oil and 2 super tankers with 4 million barrels of crude transited the Strait of Hormuz yesterday.
Profits from oil sales to rebuild their military.
Well, they're not supposed to be doing that, so we'll see, but they're supposed to use money to buy food for their people, because right now their people are very hungry, and they're buying it exclusively from us. Corn, soybeans, should be a lot of money. I hope it's a lot of money. If Iran doesn't live up to their agreement, or if they're not behaving, I will do what I have to do.
The Israeli Prime Minister Benjamin Netanyahu said his forces are not leaving Lebanon. That is a sticking point.
Who did he tell that to you?
He said it publicly in Israel.
Well, we're going to take a look at it.
Well, what would you do to make sure that he doesn't?
Well, I'm not going to
sabotage
tell
the
you
deal?
what I'm going to do, but it gets solved. I'm a problem solver. I get problems solved real fast, including with Bibi.
I may have been among the first to say this, right at the beginning of the war, before there was even a ceasefire. I posted on X and made it clear, everyone should know that the administration of the Strait will never return to the way it was before the war. Of course, we will fully comply with international law. People should understand that this should not be turned against us. In full observance of all international laws and through the Iranian arrangements that are also reflected in Article 5, this approach will be implemented.
I greatly appreciate the support we have received over the years from our American friends, but we need to free ourselves from dependence and build our own independent weapons industry.
Well, that is the latest there as far as the US-Iran truce is concerned. But let's talk about the other big story tonight. The global tech sell-off has deepened, sparking fresh concerns over the sustainability of the AI-led market rally that's driven equities higher this year. Nasdaq futures down more than 2%, signaling another weak start for Wall Street. Elon Musk's SpaceX shares plunging 16%, marking a third consecutive session of losses, down 30% in the last 3 sessions. The tech rout has spread across global markets. The sharpest decline has come in from South Korea. The Kospi down 10% almost, the Nikkei down by 3.5%, and the Shanghai Composite down by about 1.4%. In fact, the Kospi saw trading halt temporarily. The sell-off was led by heavy losses in chip makers SK Hynix and Samsung Electronics. And back home, the Wall Street saw an all-round fall as well, ending near the day's low. The Nifty fell below the 23,850 mark, with 41 stocks closing in the red. 278 lower on the Nifty. The Sensex down almost 900 points, 750 down on the Nifty Bank. The Midcap index down by about 658. So our markets reacting in tandem with the global markets. Pharma names bucking the trend today, and we'll tell you why in just a bit. But Hormuz is here to decode the global tech rout. Hormuz, what led to this 10% crash on the Kospi?
Both Samsung and SK Hynix were down 12.5% each in today's trading session. But there were reasons behind it as well. What led to this sell-off in SK Hynix? Now, there was this local media report that said that the company is slowing down the production of its 6th generation high bandwidth memory, the HBM4 chip. And it's slowing down the conversion of the 5th generation production line into the 6th generation one. Why is it doing so? Because it is now shifting focus to the lower priced DRAM chips. Now, it is said, the report further stated that the HBM sales had already formed 40% of the overall top line, and therefore it is adjusting its resources to secure additional profits in the DRAM market, where the supply shortage is even more severe when compared to the high margin chips market as well. Now, despite this sell-off that you have seen today, look at the returns that both SK Hynix and Samsung has delivered. At one point yesterday, SK Hynix had a market cap higher than Samsung. It's still up almost 280% this year. Samsung is up almost 150% as well. Then look at the impact as well. Look at the Nasdaq. The futures are down over 800 points as we speak. The index itself was down over 1%. Of course, issues related to Alphabet and so on and so forth. That is having an impact on the futures market in the US as well. The other thing that the market does not like in the US is this fundraising spree that all of these big tech companies have embarked upon. Look at the amount of money that they have raised. Meta raised $25 billion. Amazon has raised 80. Alphabet has raised almost $100 billion. A sum that Oracle raised all through its fiscal year of 2026, and this is what is contributing to this soured sentiment as well. As SpaceX itself, the new listing was down 16% yesterday after it said that it is proposing a $20 billion bond sale, and all of these companies have operating cash flows anywhere between $50 to $100 billion. Despite that, they are engaging in such heavy fundraising, is something that the markets did not like. Of course, SK Hynix had issues of its own. The stock crumbled, the trade crumbled, and that is having an impact on global tech as well.
Yes, the tech crowd intensifying today. Hormuz, many thanks for joining us. Worrying news back home. The southwest monsoon has meanwhile arrived in Mumbai, but nearly 2 weeks after its usual onset date. The Indian Met Department confirming that the monsoon has advanced into the city and it's issued a yellow alert for the next 48 hours. However, here's the big red flag. Union Agriculture Minister Shivraj Singh Chauhan has said that the Kharif crop sowing may be impacted by poor monsoons.
संभावित प्रभाव जिन पर पड़ेगा वो लगभग 315 जिले ऐसे होंगे जहां वर्षा कम रहने की संभावना है। मैं संभावना की बात कर रहा हूं अभी। इनमें से 111 जिले हमारी उच्च प्राथमिकता वाले जिले होंगे, क्योंकि इनमें सिंचाई 25% से कम है।
Well, worrying news there on the monsoon front. Manisha standing by with more. Manisha, the hope is that the situation will improve, but sobering commentary coming in there from the Agriculture Minister on the monsoon, as well as what it means now as far as the Kharif crops are concerned.
Oh, well, absolutely. You know, 52% of Kharif arable land is rain-fed. And as the minister was also saying that 25% of this land absolutely has no irrigation and completely rain-fed. So that is where the problems really seem to be emerging from. Earlier, IMD had put out the rainfall for this year at 92%. They lowered it to 90%. And the SkyMet's statement from a webinar now says that it is expected that you could be looking at monsoon below 90% as well. As of date, until from 1st of June to 22nd of June, the rainfall is 43% below normal, and there are large deficiencies in some of these states as well. For example, you have Maharashtra, Gujarat looking at nearly 70 to 74% of deficiency. There are states like Chhattisgarh, Jharkhand, and these are important states in sense of Kharif sowing as well, which are looking at a monsoon deficiency of anywhere between 65 to 67%. Meghalaya 80%, Manipur is looking at 70%, and there are some 18 states which are also looking at deficiencies anywhere between 20 to 45% as well. So it's not a pretty picture at all. The minister also said that there are contingency plans right now for 12 states, and these are important states. Again, you have UP, Maharashtra, Karnataka, Gujarat, Rajasthan, Telangana, MP, all part of these contingency plan states. So Kharif sowing as of now is at break-even as it was in the last year. But importantly, when you look at the El Nino estimates that have come in from IMD, it's a weak El Nino for the month of June, and we are already looking at 40% below normal rainfall. It's expected to get to moderate in July and August, so you perhaps are looking at lower monsoon and more impact of El Nino at that point in time, and a severe El Nino in the month of September. Now, July, August, September are important months. July and August is when the monsoon is most critical, and August and September is the time when the flowering or the yield can get impacted. So if we are looking at lower monsoon going forward into this season, then that can impact Kharif. While there are contingency plans on paper right now, on-ground execution, whether we have drought-resistant seeds, how much information do the farmers have, all of that, of course, is going to be very, very critical going forward from here.
Absolutely, it will be. Manisha, many thanks for joining us with the Monsoon Tracker. Now, India and the US are inching closer towards finalizing an interim trade deal. US Trade Representative Jameson Greer met Commerce Minister Piyush Goyal in New Delhi. Both sides are looking to formalize the agreement before the 24th of July. That is when a temporary 10% tariff architecture that's been enacted by Washington earlier this year is set to expire. Abhimanyu joins us now with more. Abhimanyu, tell us more about the items that are on the agenda now, items that are left for closure as Jameson Greer and Commerce Minister Piyush Goyal get down to business.
Trade talks are underway between India and the United States. The US trade representative is in New Delhi. He's in talks with India's Commerce and Industry Minister Piyush Goyal, and both the sides are looking to seal the interim trade deal. Discussions are also likely on the larger BTA, the larger trade agreement between both the sides. It remains to be seen how early they are going to finalize the same, since both the sides had indicated that just 1% of issues are left as far as the interim trade deal is concerned. India's Commerce Ministry had indicated that several issues are likely to be discussed as part of talks, which are going to include issues like rules of origin, preferential tariffs and investment provisions. Both the sides are looking to not just increase their bilateral trade, but they're also looking to increase overall cooperation in areas like energy, critical minerals, defense and investment. Now, all eyes, of course, would be on how early the interim deal is going to be finalized and is going to be put in place, since currently 10% tariffs apply on all products entering the United States, including the products which are exported from India. Now, in absence of a deal, the 10% tariffs are going to lapse on the 24th of July. And if there is no deal which is reached by then MFN tariffs will continue to apply. So all eyes, of course, would be on how early both the sides are going to reach some degree of agreement, which will provide not just certainty, but also a competitive advantage to exporters on both the sides as far as bilateral trade is concerned. Now, India is seeking preferential trade access, preferential tariffs for its exporters, not just for the sake of certainty, but also to provide them beneficial access into the American market for India's exporters of labor-intensive products and also of agricultural and dairy products.
All right, Abhimanyu, many thanks for joining us. Now, India's National Security Advisor Ajit Doval met China's Foreign Minister Wang Yi at the BRICS Security meeting today. The External Affairs Ministry said talks were constructive and forward-looking. Both sides also discussed recent developments and gradual normalization of ties between India and China. This comes a day after Doval met his Iranian counterpart and discussed tensions in West Asia. Speaking at the event, Doval also expressed cautious optimism over the Iran-US peace deal.
India welcomes the MOU reached between the US and Iran. We have got cautious optimism and we hope that it will work. It will help energy security. Opening of the Strait of Hormuz is a very welcome development. It will remove supply chain bottlenecks and many of the shortages in the field of, say, fertilizers and chemicals, etc., will be met with.
Well, that is the NSA Ajit Doval. We'll head into a break, but up next, can Kunal Shah turn WhatsApp scale into revenue? The newly announced global head of the world's largest messaging app will need to deepen business adoption, expand payments, and find new ways to generate revenue. That and more when we return. Tata Electronics has suffered a cybersecurity breach. The ransomware group has posted more than 2 lakh files on the dark web, claiming to expose the trade secrets of the company's partners, Apple and Tesla. Rachna joins us now with more. Rachna, take us through what has transpired and how the company is responding.
Tata Electronics, the Tata Group's manufacturing arm, has now confirmed a serious data breach. A ransomware group calling itself World Leaks first posted its claim on June 10 and began dumping files online. More than 630 gigabytes of data, over 2 lakh files, and this isn't junk. We're talking about a 52-page Apple document detailing quality inspection standards for iPhone circuit boards, folders literally labeled com.apple.factory data, Tesla engineering drawings stamped confidential and trade secret, even passport scans of employees, including foreign nationals. But here's the thing, Tata only publicly acknowledged any of this on June 22, after security researchers and Reuters surfaced it first, and even now the group's official line is carefully worded. It says it detected the incident a few weeks ago, its response protocols kicked in, operations are unaffected. What it won't say here is just as telling, because it won't confirm whether Apple or Tesla's client data was actually exposed, and it's declined to comment on the ransom demand it's reportedly received. On the leak side, though, the clock is still ticking. Apple, for its part, is investigating the matter, is what it's telling. Now, why does this reach far beyond one company? It's because Tata makes roughly a third of all iPhones assembled in India. Foxconn makes the rest. India's entire pitch to the world, the cornerstone of the China Plus One strategy, is that it can be a safe, reliable alternative manufacturing base. And a breach exposing Apple and Tesla's crown jewel design files strikes right at the heart of that promise, and it isn't an isolated event, because just last month, Foxconn itself was hit by ransomware. And rewind a year, there was Tata Group's own Jaguar Land Rover in Britain, which was crippled by a cyber attack that halted production for 6 weeks and cost the UK economy an estimated £1.9 billion, one of the most damaging cyber attacks in British history. That's 3 major incidents brushing up against the Tata name in roughly 12 months. So the real question here isn't about one stolen folder of files. It's this, that as India races to become the world's factory floor, is its cybersecurity and its instinct for transparency keeping pace with this ambition? Because the most valuable companies on the planet are entrusting their secrets to Indian suppliers, and they're watching very closely to see how those secrets are protected and how quickly anyone admits when they're not. For now, the data is still available on the dark web to be sold and to be bought. We will keep an eye out for more information as the story develops.
All right, Rachna, many thanks for joining us. Facebook parent Meta has roped in Cred founder Kunal Shah as the next CEO of WhatsApp. Meta will also invest $900 million into Cred for a 20% stake. With 3 billion global users, WhatsApp is the largest messaging app in the world, but it's not a major contributor to Meta's overall revenue. Ritu's here with more on the challenges that Kunal Shah will need to take on. Ritu.
Well, Kunal Shah's move from Cred to WhatsApp marks one of the most significant global leadership appointments for an Indian startup founder, and he is going to be inheriting one of Meta's most important consumer product. WhatsApp, remember, has more than 3 billion monthly users globally, making it the world's largest messaging platform, with India as its biggest market with over 500 million users. But you know, WhatsApp today is a lot more than a messaging app. There's business messaging, there's payments, commerce, merchant services, and Meta AI, all of which is increasingly becoming part of the platform's future growth story. And that's also where the challenge is, because WhatsApp has already solved for scale. So the next phase is going to be about deepening business adoption, expanding payments and commerce use cases, finding new ways to monetize to generate revenue from one of the world's most heavily used digital platform. And that may well explain why Meta has turned to Kunal Shah. Now, Cred is not India's largest fintech company or even the largest UPI player, nor is Cred among India's most profitable tech businesses. In fact, they've only just reported their first profitable quarter this year. But what Kunal Shah brings to the table is something else, and that's a track record of building and scaling consumer internet businesses in India, the world's most competitive digital market. His entrepreneurial journey began with FreeCharge in 2010. He later launched Cred in 2018 with $1 million of his personal capital and expanded it then beyond credit card rewards into payments, lending, insurance, then wealth, and even commerce. Today, Cred has around 17 million members and has annualized revenues of more than 3,200 crore rupees. And that's perhaps why we saw Meta CEO Mark Zuckerberg say that Kunal Shah brings the kind of builder mentality and global perspective that's needed to run the world's biggest messaging app, and that emphasis on building is very critical. For Kunal Shah, of course, the opportunity is very clear. He himself says the delta between WhatsApp today and its full potential is massive. And then, of course, there's also the larger India story here. You know, there's several Indian tech leaders that have made their mark. The Satya Nadella, Sundar Pichais, Arvind Krishnas of the world, they built their careers inside global tech giants before rising to the top. But Kunal Shah's path is quite different. Here you have a philosophy graduate and an MBA dropout. He built a startup from scratch before stepping into what is one of the most influential leadership roles in global consumer tech. And that's what makes the appointment noteworthy, not just for WhatsApp or for Kunal Shah, but also for India's startup ecosystem.
Oh, absolutely. An unusual story, to say the least. A big move there for Kunal Shah. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV 18. Stay tuned. We're back in a minute with more.
Hello and welcome to Commodity Champions. I'm Manisha Gupta. The conflict in West Asia and the threat of a Strait of Hormuz blockade have done more than rattling geopolitical nerves. They have exposed a fundamental vulnerability in global supply chains. Freight costs spiked, transit times ballooned, route diversions added weeks and millions to shipping bills. And the pain was felt acutely in fertilizers, chemicals, and industrial commodities that India depends on. And India's stake in this is bigger than most realize. It is world's top ship recycling nation. 1 in 8 seafarers on the world's oceans is Indian. Yet when disruptions strike, Indian companies are as exposed as anyone. So how can tech change that? How do you build a supply chain that can think, adapt, and reroute faster than the disruption itself? Joining us now to discuss all of that is Soham Choksi, who's co-founder and CEO at Shipsy. Soham, hi, thank you so much for joining in. The way the commodity prices and the markets have been, it hasn't been about availability. It has more been about how do you move them from one place to another. And we have seen those concerns really multiply and balloon in the last few months therein. What is it that you're seeing within that space?
Hey Manisha, thank you for having me. And it's a very pertinent question because I think now what's happening is that for commodities specifically, right, production and supply isn't as much of a concern, right? It's how do I actually get the movement so that the goods reach the place at the right time. As you correctly mentioned, as we speak today, because of the Strait of Hormuz, there's about 147 vessels that are actually stuck over there. Pretty much the movement is down to about 8% of the pre-crisis levels, right? And the easiest solution or the most possible solution right now is a rerouting through the Cape of Good Hope, which adds roughly 10 to 14 days, right? Now, for any commodity player, right, a delay that long, a two week delay is as good as a shortage, and this is actually the key reason why today, at least for commodities, what we're seeing is it's not really an availability problem, it's a movement problem. And that's the key risk that companies today are dealing with.
So would you say that it's not about cost optimized, but resilience that the shipping as an industry seems to be facing right now or needs to address basically?
Yeah, no, absolutely. I think, see, there's two parts to it. One is obviously the direct cost, right? Now, if you see, typically for imports, logistics is anywhere from 10 to 30% of the price of the shipments itself, right? Now, what we have seen is because of this crisis, freight costs, depending on the week you're in, right, and the news that's there, right? Freight costs are up anywhere from 30 to even 150% on certain trade lanes, right? Now, what this does is that your total landed cost is likely to change anywhere from 5 to 15%. Now, that's a big cost, right? But today, what we're seeing is that, it's been 6 years of risks, right? COVID, the chip shortage, Red Sea crisis, the Russia-Ukraine, West Asia. So year after year, it's, there's been different crises, right? But the impact is the same, right? One is obviously the direct cost, but for the different companies today that are in this space, the bigger challenge is how do you actually build in resilience? Now, resilience is actually taking a bigger kind of seat at boardrooms than cost. And this is probably because if you don't have the product, it hits your sales, right? And today, that's the key reason, right? So people are moving to say that, look, can I have more inventory buffers? Can I have alternate suppliers? Can I have, by default, different shipping lanes that actually move my goods? And how do I build resilience through a more predictive supply chain than being reactive?
And would you say amidst all of this, it's going to be about real-time visibility and predictive planning that would work really wonders?
Yeah. No, I think, look, visibility for sure, right? Like 5 years ago, everyone wanted to know where is my shipment. Today, customers and enterprises globally want to know what's likely to get delayed. This is actually why at Shipsy, we actually launched one of our agents called the Risk Radar Agent. What this actually does is keeps a track of all of the different trade lanes, different ports, and actually sees congestion in real time and updates through a probabilistic manner what the ETA is likely to be delayed by. And this really helps enterprises plan much better, right? Because visibility definitely, right? But today, the key thing is predictability. How can all of this visibility actually get modeled, and how can AI also really help us plan much better and be more predictable? So, for example, even when I'm planning a shipment, I should know beforehand how likely is a shipment to get delayed and by how many days. And this risk radar essentially helps companies plan much better so that they can have inventory at the right place at the right time and they don't face the shortages. So you're absolutely right. While visibility was definitely a conversation, today it's about predictability and seeing beforehand how likely something is to get delayed.
Oh, absolutely. I was reading your agent fleet's names as well, Clara and Nexa, good one on that one. But how are you looking at the growth? So I'm going forward from here in sense of numbers. And also you're expanding, you're going into other countries apart from Asia and India.
Yeah, no, absolutely. I think, look, globally, what these disruptions for us, actually, the growth started with, COVID made companies realize that how fragile supply chains are and how last mile is very important. So that's where last mile took up, right? And then with all of the crises, for example, the Red Sea, the chip shortage, the West Asia crisis, overall transportation, warehousing, inventory, these topics became very important for enterprises globally. And what this means is that today enterprises realize that investing in AI, investing in the right technology to help build resilience, to help build a more predictable supply chain is the key. And that's where we've seen a lot of the growth. This is more global. So today, we're growing north of 80% year on year. We recently crossed 25 million in terms of our ARR as well, and a lot of it is due to the global growth as well across Europe, the European region, US, Australia, New Zealand, and of course, the Middle East, India. These continue to be regions that grow. And enterprises today are investing heavily in technology to see how they can build a more resilient supply chain and ensure that the product reaches the customer at the right place at the right time.
So, tell us on how heavily do your customers rely on your platform when they are looking at rerouting or hedging their shipping risks for that matter?
Yeah. No, in fact, if you see Shipsy as a platform for enterprises is mission critical in terms of right from planning all of your shipments to execution to seeing how that moves across visibility and also the financial settlements. Right. So at every leg of the shipment journey is where our agents and the core technology platform actually helps customers make more intelligent decisions. Right. And also using all of the data feeds that we have from the market, seeing how this can actually feed into taking more proactive decisions and seeing how it can actually yield a more cost optimized and a more resilient supply chain. So to answer your question, enterprises today, right from planning to execution to settlement to visibility, use the Shipsy platform to actually take decisions. Agents today, in fact, are the percentage of work that agents do. So, for example, you spoke about Nexa, which is around freight settlements, because all of the shipping produces invoices. Today, enterprises can audit just about 10% of these invoices. With Nexa, it's 100% audit in 1/10 the time. So there's clear benefits that we see, and enterprises use this across all legs of the transportation and warehousing journey.
All right, and very opportune business at an opportune time, I must say. And as you said, there's growth and there's growth beyond India as well coming in. So, as always, thank you so much for joining in and thank you for taking us through that conversation. But with that, we'll move on to the monsoon because that really is a headline right now. The southwest monsoon has arrived in Mumbai nearly 2 weeks after its official onset date. The country has received 43% less rainfall so far in the month of June, and the Agriculture Minister Shivraj Singh Chauhan has warned that Kharif sowing may be impacted due to the poor monsoon. He said that as many as 315 districts are likely to receive deficit rainfall. The minister expects things to improve if rain normalizes by July 15th. SkyMet, in the meanwhile, has warned that the southwest monsoon could slip below 90% of the long period average, and dry spells may return as early as mid-August. El Nino fears are back on the table as well, with IMD expecting severe impact by the month of September. On the ground, the numbers are alarming. Between June 1st to 22nd, Maharashtra recorded 73% rail deficiency, while Gujarat is at 74%, Chhattisgarh is down 67%, and you have Jharkhand at 65% of a deficiency. Even as parts of Northeast like Meghalaya and Manipur are running deficits of over 20%. 3 weeks into June and some of India's most critical farming belts are parched.
संभावित प्रभाव जिन पर पड़ेगा वो लगभग 315 जिले ऐसे होंगे जहां वर्षा कम रहने की संभावना है। मैं संभावना की बात कर रहा हूं अभी। इनमें से 111 जिले हमारी उच्च प्राथमिकता वाले जिले होंगे क्योंकि इनमें सिंचाई 25% से कम है।
Well, those really are the concerns because most of the Kharif arable land is rain for irrigation facilities not across there. But let's go across now to Rajesh Agrawal. He's Managing Director at Insecticides. Mr. Agrawal, hi, thank you so much for joining in. With so much concern about monsoon and then, of course, fertilizer and irrigation, what is the on-ground pattern that you're looking at with such huge deficiencies in monsoon this time?
June so far has been a tough month because in the first 3 weeks, the rainfalls were poor. And as you have rightly shown, in many parts of the country, it was too much deficit, and particularly in the central part of the country, it was. So the sowings are delayed, and in many parts, there are no sowings at all so far, and people are waiting for the rains. But the good signals have started coming in because there are a lot of showers, pre-monsoon showers in northern part of the country, and even in the central part, there are some small rains which are good enough for the farmer to prepare the fields. So they have started going to the fields, and they are quite hopeful that as the rain comes in this week, so the sowing should start. So we are confident that yes, there has been a delay, but it should make up.
Mr. Agrawal, what's your sense on the growth outlook for the sector with the monsoon uncertainties? I mean, as you said, there's a lot of ifs and buts as we move from 1 month to the other, 1 week to the other for that matter. How are you looking at the growth numbers right now?
The first quarter has been a little tough actually because of all these factors and also the international factors. Now international factors are easing out. Monsoons are also looking good. So this gives us the boost. The first quarter looks to be reasonable. Actually, not much growth in the first quarter. But yes, I'm confident for the month of July, which should be the peak month in the sense that the June sales, which will be missing some sales, it should also come in the month of July. So very confident even now.
Well, yes, the minister also has said that if the monsoon does not turn around by the 15th of July is when the concerns perhaps would start mounting up. So I'm assuming we still have those 20-25 days of a buffer, as you mentioned as well. How are you also looking at the agrochemical export numbers? Because when you look at the global trade because of the West Asia conflict and various other reasons as well, we've seen a decline in number. How would you look at that segment of business and what is your numbers within that?
For us, it's a small business. It contributes roughly 5%. We are on a growth path because we are working to increase it to 10%. So this year it won't be 10%, but definitely 7-8%. And we are on that path. Our export numbers at the moment are up in comparison to the previous year.
Point taken. So when you talk about India as well, which you mentioned is 95% of your market now, what are the demand trends that we are looking at onto this one?
It's more, the demand is more on generics, the general products. They are very much in high demand. The specialty products, people are trying to delay their requirements for all those specialty products, particularly the specialty herbicide, insecticide. So at the moment, the sentiment is low for many crops. For many other crops like paddy rice, the transplantation has started in many parts of the country. Cotton, we see in some areas, pulses we are seeing. Soybeans are delayed. So there are some delays and some there is a mixed pattern across the country. There may be some switching of crops, particularly in the dry areas, I would say. So we are keeping ourselves prepared and trying to make more generic general products than the specific products.
Oh, that point is well taken. Mr. Agrawal, also the Indian government has been pushing for some time now about natural farming practices. How have you read into that? I'm assuming it's a very, very small number right now, not much to make an impact. But do you see that number grow?
I'll not call it a task impossible, but it is sort of that. So in a chemical world where we are living actually, and with the type of population we have and the situation around, it is very difficult to survive on natural food actually. So which is impossible. That is my target also. If I can have natural food, why not? But today it's not possible with our type of population. And even if we look at the world, Japan, America, Europe, all are using more pesticides than us, much, much more. 5 to 10 times more than us. So we are not the culprits actually, but we are being blamed as the country using more pesticides, whereas our production is number 2 in the world by using just 40,000 crores worth of pesticides.
I just want to come back to the monsoons. And Mr. Agarwal, in all of my conversation with you right now, you've been very, very hopeful, optimistic even going forward. When do you start getting worried about monsoons? Because this is really delayed. We're almost to the last week of June with a 40% of below normal monsoon. When does it start to worry you now?
Actually, the loss has not happened so far, because even if it rains now and people adopt their choices crop, whatever they want to sow according to the situations, there are some changes, like we are seeing a lot of green gram, some other pulses, some other crops like bajra catching up in some areas. So whatever the crop are there, we get our share out of those crops. So not much worried yet, but yes, if these things improve in this week and the next week, then it will be normal. Otherwise, yes, we'll have to change our strategy.
And what is the strategy going to be?
I beg your pardon?
What is that strategy going to be if you have to change your strategy?
Strategy means that we have to demand various crops, and we'll have to move our specialty products in, particularly in the Kharif season.
All right, Mr. Agarwal, thank you so much for joining in. So clearly a concerning situation, but as Mr. Agarwal says, the hopes are high and expectation that the monsoon will see a reversal by 15th of July. If it doesn't, well, then there are more than one concerns that industry and the country will have to look at. But with that, it's time for a short break. But don't go anywhere. We will be joined by Carlos Mera, who's head agri-market research at Rabobank, on the other side of this break. Welcome back to Commodity Champions. Joining us now on the show is Carlos Mera, who's head agri-commodity market research at Rabobank. Carlos, I thank you so much for joining. And I want to first start about India. And we're looking at an El Nino year. June hasn't been very nice. How are you looking at India's monsoon? And what's your take on the impact of overall agriculture sector this year?
As you said, the early signs of the monsoon are not very promising. We're still in very early days, but in principle, we will expect rainfall to be a little bit below normal. That's what we have to expect in an El Nino year in India and across Southeast Asia. And that could mean a little bit less production of certain commodities, and in particular, sugar. Some other commodities might also be affected. In terms of fertilizer, my understanding, I'm not based in India, but my understanding is that the Indian farmers are very insulated from international prices. And more recently, nitrogen fertilizer prices have dropped quite significantly, both internationally, but also in India, like in the Indian import market. So we don't expect huge drops in production, but on the fertilizer front, but on the weather front, we might see yields suffering a little. In any case, we wouldn't expect to see any significant exports of sugar going forward.
Since you spoke about sugar, how are you looking at the markets going forward? As a lot of sugar is now going into ethanol, exports are being restricted, a lot of push coming in on. What's your sense on cane, sugar, and the fact that a lot markets really are looking at a lot of divergence right now?
Well, looking at it from an international perspective, right? India's sugar surplus have been going down over a number of years, mainly because of the rise of the ethanol demand in India. And that means there's less and less left for the export market. And the quotas have been getting smaller and smaller and not always fulfilled. And we wouldn't expect any large quotas in the coming for the coming season. If there's any quotas, they might not be fulfilled at all. And it's still early days, but most likely we might see no exports of sugar for the coming season, especially if we see lower than normal rainfall as we expect at the moment. And this is a worry because we are probably going to have India being removed from the international market. We might have the Thai crop also potentially affected by El Nino, the Australian crop also potentially affected by El Nino. And that means that internationally, the sugar market will rely more and more on Brazil. And the issue in Brazil is that we have a lot of sugar availability this season because the cane crop was very, very good. There's not a huge diversion towards ethanol, but it's an election year in Brazil, and that means that the energy policy could potentially change, especially when we look at 2027 and onwards, and that could mean that Brazil could produce a little bit less sugar and potentially a little bit more ethanol if we see that change in the energy policy. And as well, the availability of cane in Brazil this year is excellent. But if we see high temperatures in the coming months, which is what we have to expect during El Nino year in Brazil, that those cane yields might suffer for the next season. So the cane might not grow a lot, and that might result in a lower harvest next season. So we might see a number of potential challenges in Brazil as well and across Southeast Asia. So for me, sugar is one of the commodities to watch.
And finally, Carlos, what's your sense now on the sugar prices? Because they have been kind of bearish for the last couple of years now. What is your sense on the range from here on?
Yeah, the moment it's had to be too bullish because we are looking at relatively large stocks in the international market, especially from Brazil. But certainly going into 2027, I think it will be relatively easy to see something like 16 cents that pound. So a couple of cents higher at the moment.
All right, so it's trading at 14 right now, and you've said 16 cents a pound is what we could be looking at in sense of sugar prices. Carlos, thank you so much for joining in, making sense of India's monsoon right now, or the lack of it, and of course its impact on sugar. But with that, it's a wrap on this edition of Commodity Champions. Thank you so much for watching.
Hello and welcome to News Center. I am Ashmit Kumar. I have with me today the newly elected president of the Confederation of Indian Industry and the managing director and CEO of Tata Chemicals, Mr. R. Mukundan. He takes over at a crucial time for the Indian economy with strong headline growth, but growing questions around consumption, private investment, global trade uncertainties, input costs, and the impact of geopolitical developments. So what will be the impact of this turmoil on balance sheets? How will the private sector account for global trade uncertainties? And will the India consumption story continue to hold firm? For an industry perspective, let's go across to Mr. R. Mukundan, who's joining us now live. Mr. Mukundan, let me begin by congratulating you on this new role. Welcome to CNBC TV 18.
Thank you.
Let me begin by asking you, before we get down to brass tacks, one key news development I want to get your thoughts on. Kunal Shah being elevated as the global head of WhatsApp, taking over the reins from Will Cathcart. Just your quick thoughts, an Indian leader at the helm of one of the largest tech platforms in the world.
We will wish him very well, and also all the Indian firms and Indian talent all the very best. In years to come, this is only the beginning. A lot more will happen.
Sure, Mr. Mukundan. Let's get down to some of the serious issues now. I want to get your thoughts as far as geopolitical tensions are concerned. The last time we spoke, we were talking about what the West Asia crisis will do to near-term and mid-term planning. I want to get your thoughts on rising input costs. We've been hearing from various quarters within the private sector. They tell us that there could be substantial pain due on the balance sheets in the quarters to come. I want to get your sense, how significant is this impact that you're anticipating? What are your conversations like from some of the members of the CII?
So clearly, I think this has been a very episodic event. There are three broad forces on us which are going to play out over a period of time. But clearly, the West Asia crisis is one of the 4 or 5 wars which are ongoing. And of that, this is the one most visible, and it's been an episodic event. I think really what has happened is up to now, a lot of the cost increases and shocks have been taken. While initially the focus was on ensuring continuity of supply, I think now it has become how do we manage the cost. I think government absorbed part of the cost, industry has absorbed part of the cost, and part of the cost will go to common citizen, unfortunately. I think hopefully it will not be for long, and this should resolve itself. But having said that, I think the Indian industry has entered this period, and including Indian banks, with a fairly strong balance sheet, so that should give us a sense of comfort on the first front. But what really the CII is stating and working with the government, working with the members, is the fact that there are three broad forces which are underway. One is the geopolitical challenges, which as world moves from unipolar to multipolar world, there is going to be influx of technology, new materials, AI, whatever you want to call that, whole technology footprint is going to continue to change, and that can either be a fulcrum for further growth, or it can, if you don't act well, it will become a slight amount of challenge in the way forward. So I think we need to act well. And third is the piece of sustainability and climate change. This is going to be with us for next 15-20 years. So all these three forces will play out. And clearly, we can only say that we can address these issues, including the episodic issues, only if we are competitive. I think Indian industry and CII's focus is to ensure that we are competitive and become the most competitive company, most competitive industry, most competitive nation in the world. And for that, what we have to do at the industry and at the country at large is to continue to focus on reform. Broadly, the good news is that amongst the countries which are bigger than $150 billion, which have consistently grown beyond 6%, except for 1 or 2 years, consistently 6% over the last 25 years, only 3, India, China, and Vietnam. We are right up there. But we now have to be the best amongst the 3 and reform ourselves to provide solutions which address all the issues to ensure the growth momentum is continued.
Sure. Mr. Mukundan, just I'll labor on this point a little further. You mentioned that as far as the cost increase is concerned, that we've seen a dramatic cost increase. You've mentioned that some of it has been taken on board as a part of the balance sheet, some of it has been passed on. I just want to weigh in on that. Number one, as far as the part that has been absorbed by the private sector, when will that begin to reflect, and what will that look like in terms of the balance sheets of some of the member companies, for instance?
So clearly, the issue is more coming from the overall increase. For example, the big impact has been on packaging costs for many of the FMCG companies. So they would have increased by a small percentage here or there. The good news is the demand hasn't tapered. Demand has continued to be healthy. So if you really look at overall profitability of the companies, I think because it's a function of both volume and the margin, I think that it would probably be playing out in the positive direction. But this is going to be a temporary cost. One of the things we've been telling the government is we should also make sure that the reform process we are recommending, 16 reforms we have recommended to government, actually take the cost out of the system. The moment the cost is out of the system, you're going to be with the same number as before. So clearly the effort of the industry needs to be twofold. One is, while we address the short-term issue in terms of absorption, the longer-term and the medium-term issues are about becoming more productive. Through becoming more competitive and productive, we are able to address the cost increases.
You alluded to big reforms that you're recommending to the government. You pointed out a 16-point agenda that you've laid out. What, to your mind, are the 3 biggest changes that you mentioned will be important to ensure that cost does not become a factor going forward, like you said?
So I think I can refer to a few of them, but let me give you the context of this 16 reforms. There are about 4 buckets in these reforms are there. One is foundational reform, second is factor cost reform, and third is future ready reform, and lastly is fiscal and monetary policy reform. So I'm not going to go into the last one, but clearly on the foundational reform, the 2 big ones out of the 4 are effectively the issues around making sure that the ease of doing business, the cost of doing business, more importantly, the speed of doing business. We continue the momentum on improving our scores, our performance on this, not just at the center, but also at the state, at the district level going forward. The second piece which we are also highlighting is that this is a high time India also starts to refresh its whole thesis around exploration and resource mobilization. When I say exploration, resource mobilization, I think India is underexplored. So we need to look for our domestic resources of minerals, oil, gas further, both offshore and onshore. I think we have recommended that that process be put forward and we move forward on that. And there are 2 more which are fundamentally around making sure we focus on agriculture, also focus on MSME. But these are foundations of the economy as far as India is concerned.
In terms of headwinds, Mr. Mukundan, we're looking at El Nino conditions being talked about, how that will have a global impact. We're also looking at perhaps a subpar monsoons this time around in 2026. Do you see that as headwinds? What is the impact that you're anticipating in the quarters to come?
Yeah, so clearly I did say that something which is going to continue for long term is the impact of climate change. So the spatial and temporal spread of monsoon always is going to be a challenge. This time it is both spatial and temporal, so we are dealing with that challenge as we already had the warning sign, but the good news is that I think we entered the Kharif season with reservoir level at slightly better than okay, and also the fertilizer stock position was better than okay. I think we need to work with the farmers, with farm community in the affected areas as we usually do, with schemes which help them not only to protect their livelihood, but also protect the cattle with fodder and water so that we can protect them. The other thing which we also need to do is to, because the monsoon will be late, will be delayed, whether we can give them the right seed quality, right kind of inputs to make sure that we have got very short flowering varieties which can then be planted late and harvested on time. So these are all solutions we are working with government.
I want to get your thoughts on the ongoing trade negotiations as well. Jameson Greer is in town. He's negotiating, of course. He's called on the Indian Commerce Minister, Mr. Piyush Goyal, as well. There have been comments, there have been sections, quarters within the leadership who are basically saying that, look, FY26, despite the tariff pressure, we actually had higher exports in this latest fiscal FY26 as compared to the previous one. So there are conversations, there are suggestions that perhaps it's best for India to wait it out, to delay the signing of this interim deal, negotiate a better one, and to await the outcome of the 301 investigations. What would be the CII perspective? Is it better to clock to ensure that we put ink to paper and we get an interim deal before July 24th, or is it better to wait out for a better deal at a later stage?
So clearly, I think the 2 largest economies with whom we need to sort of build bridges to have open trade is the EU, including and UK on one hand, and also US on the other hand. These are largest economies, largest markets for us, and also largest source of technology and largest source of capital. So we need to engage, and doing this deal is better than not doing the deal. But having said that, I think the deal which we strike, as far as our exports are concerned, we must be at least at the similar or better situation in terms of tariff numbers are concerned than our peer competitors. That's the only ask. We have no issue in terms of what kind of import rate we give to the US firms, but more importantly, what we get as an access to US market must be better or equal to our peer competitors. That's been our only point. Other than that, I think it is always a question of timing. I have a saying that there is one way of, when you ever shoot a duck shooting competition, you shoot and then aim. That is not what we need to do. We also need not do what is called aim, and miss the duck fully. Or what we need to do is aim and shoot when it's more opportune. If this is the most opportune time, we must. But I think we must ensure we get terms which are at least at par, if not better than our peer competitor.
Right, Mr. Mukundan, thank you so much for joining us with your perspective on what some of these challenges and headwinds could be and how the private sector is accounting for them. But on that note, let's move ahead. We're diving into a very short break, but on the other side, we'll talk about the big US-India trade deal. The USTR, Jameson Greer, here is in town in the New Delhi, in national capital. He's already called on the Indian Commerce Minister Piyush Goyal. On the other side of this short break, we'll be joined by Ambassador Atul Kashyap, the former US chargé d'affaires to India, and the president of USIBC on what the nuts and bolts of the final 1% of the US-India trade deal could look like. Welcome back to News Center. Now, one of the strongest supporters of a swift India-US trade deal is former US diplomat and USIBC President Atul Kashyap. He believes that both sides should move quickly, but not at the cost of a well-crafted agreement. We speak with Ambassador Kashyap to understand why the final 1% of the India-US trade talks is taking longer to close, as USTR Jameson Greer meets Commerce Minister Piyush Goyal. Ambassador, thank you so much for joining us. We've heard both sides say that it's just the one final percent that remains for cracking the interim deal. Tell us, is the final 1% often the toughest to crack?
Well, it can be the toughest, but it can also be the easiest. If you think about it, you know, we're at the very late stage of a very lengthy negotiation that started 15, 16 months ago. So a very great deal of work has been done by the leaders, the negotiators on both sides. And I think what it comes down to now is the final numbers. And this is where I think the Indians very wisely are saying they want a little bit more transparency about what other countries might be getting. You know, you don't want to put the Indian economy at a structural disadvantage in accessing the very important American market. So I think that's probably what Ambassador Greer and Minister Goyal are going to talk about in Delhi. And so this is where we as a council that represents the business community are arguing for ambition between the two countries and the closure of the deal in a way that expands the volume of trade and creates more strategic ballast through economic and commercial ties.
Well, Ambassador, President Trump and Prime Minister Modi, they met at the G7 summit. Both of them said that the deal is not very far. And now Trump has previously said that Prime Minister Modi is a tough negotiator. Do you see India signing this interim deal with the 301 overhang, or at least until it becomes clear as to what the additional levies on India could look like under Section 301?
Well, the Indian trade negotiators, in my experience, are very sharp and astute people. And I've negotiated with the Indian government in the past, and they're always well prepared. So I assume that the 301 that you refer to will be a part of the negotiation and the discussion between Ambassador Greer and Minister Goyal. And I would certainly expect that it would be factored into whatever final agreement is made. I don't think we will have spent this much time between the two governments negotiating through all of these various dimensions and then neglect to include the impact, the potential impact of the 301 investigation. So, this is where it ain't over until it's over. And that's why the negotiations may have taken a little bit of time. But let's paint a positive picture of what happens if they can conclude a reasonable framework for expanding trade. It will create greater strategic ballast between the United States and India. It will unlock greater prosperity between India and America. It will create jobs. It will generate tax revenue. It will create connectivity that will positively impact the growth of these large economies in the 21st century. So I'm very focused on the potential once the deal is struck, and I wish them both great success.
Let me labor on that point a little further. Take EU and Japan as an example. Both have signed a trade pact with the United States. The concern among those watching is that even after signing a deal, the likes of EU, Japan are now looking at additional 301 levies. Does that make the case harder for India to sign an interim pact?
In a way, because Japan and the EU already have free trade agreements with the United States, India would be a beneficiary of being able to factor this in to the current negotiations, right? In a government-to-government negotiation, literally everything across the entire waterfront is on the table until the deal is struck. And so this gives India kind of a late mover advantage in trying to factor these things in. But look, what I've always said about a trade agreement is that it provides a recourse and a framework through which governments can address these issues. With our great allies and partners, these kinds of irritants come up in both directions. We get accused, others get accused. There is a framework through which these things are resolved with Japan and with the EU. And I would certainly expect that the two sides would put together some similar form of recourse and framework in the US-India perspective.
Well, let me bring up another important issue, Ambassador, energy security. Now, as far as the two countries are concerned, US wants to sell more oil. India has expressed interest in buying more from the United States. But the challenge comes up when India tries to buy Russian or now Iranian oil. Could that invite further unilateral punitive tariffs from the US?
Well, I don't know if it's within the trade track, but it's definitely in the bilateral track. Look, there's a very great deal happening on the Iran front that we all know about. I don't know where those negotiations will end up, but I would imagine that India, which is so heavily reliant on bringing in increasing volumes of energy in order to fuel the massive growth of its economy, thanks to structural reforms and infrastructure enhancement, ease and speed of doing business, is going to be focused on ensuring uninterrupted supply of energy. This is where the United States is saying that its oil and gas and coal, especially its hydrocarbons, don't go through the Strait of Hormuz, and they have a geostrategic advantage that immunizes them from a lot of the political risk that India currently faces with imports from the Strait of Hormuz. What I'm hoping for, and I think as a representative of a very large and 51-year-old business council, is that the trade volumes increase because of increased Indian buying of American oil and gas. And that will help us hit that $500 billion target that everybody's talked about. And it will also create more strategic ballast in the relationship that will help immunize us when the boat starts to rock due to geostrategic problems or any other issues that come up. So I'm looking to put more ballast for a more smooth US-India relationship.
Well, Ambassador, now despite the tariff pressure, India managed to clock higher exports to the United States in FY26 as compared to the previous fiscal. Now, the thinking in some quarters is that if India has seen the worst of it, perhaps it's best to delay by negotiating further for a better deal.
Well, look, I'm in Chennai right now in Tamil Nadu. Tamil Nadu economy is just roaring by leaps and bounds. There is so much high quality trade and investment from Tamil Nadu companies into the United States, from leading American companies into Tamil Nadu, lots of job creation. You know, the fact is that the sheer genius of what is happening in Tamil Nadu and in many other states of the Indian Union shows that India has the luxury of time. You know, its economy is growing. Its government in Delhi is taking all the right steps to try to dynamize the Indian economy. India is the fastest growing large economy on earth. American investors are interested. There have been a lot of big announcements on data centers and GCCs because of the unique attributes that India has to offer. 2 weeks ago, I was in Texas, in Houston and Austin and Dallas. This is part of our USIBC Great States Initiative, where we're highlighting the sheer power and dynamism of the US-India relationship beyond Delhi and Washington. And so I think my answer to your question is there is, of course, always time when an economy is growing by leaps and bounds. But as people who have trained in economics always say, in the long run, we're all dead. And what that means is once you've taken time to make a decision, you've lost all of the opportunity that could have been generated if you had made the decision earlier, right? This is why we always tell our children to start investing early, because otherwise you lose time and potential. So my very strong urging would be that both sides not waste more time, that they create a framework that captures even more of the energy of our great states, and that it generates, therefore, even more productivity and economic growth, which is what politicians on both sides want.
Well, Ambassador, the last time we had a word, and that was earlier this year, you talked about how we are being conservative in terms of India sourcing $500 billion worth of American goods. At the time, you had said that the target should be $1 trillion. Are you still confident about that target, that 1 trillion number?
You know, I don't know. I spent 25 years in my government career working to build convergence between the United States and India. When I started working on India, it was not convergence, it was actual active antipathy between Washington and Delhi. And we've gone from that antipathy, that era of estranged democracies, to an era of convergence. And now, as I said to the New York Times, I'm worried that there's a little bit of strategic drift. You know, God forbid it lead to divergence. I don't think it will. I give full credit to Ambassador Gore, to Prime Minister Modi, and so many others in ensuring that we send the right signals in public. I thought that the Trump-Modi meeting in Evian was a very strong signal of the importance that the two greatest democracies place on one another. But here's the thought I'd like to leave your leaders. If indeed, for good reasons on both sides, there's a little bit of cooling off of that strategic convergence, maybe reappraisals due to pressures we're both under, then that makes it all the more important that we do our homework on the economic side. When I was running this embassy a few years ago, here in Delhi, the strategic relationship was strong, the economic relationship was estranged. Now, what I would say is if the strategic relationship needs to take a little bit of a breather for various reasons, then the government should put more effort into the economic relationship and really do the heavy lifting to make it easier for investors on both sides to trade with each other, to invest, to recruit, hire, dynamize the economies, because the business community is eager. USIBC represents 200 of the biggest companies in America and India. They are champing at the bit to do more with each other, but they're waiting to see what the governments negotiate in the framework. Well, let's get that done. And let's let the business community add ballast to the relationship at a time where it badly needs it.
Well, Ambassador, before we let you go, the two sides, as they negotiate over the final 1% of the interim deal, would you hazard a guess as to what the timeline could be for the final agreement to be signed?
If I were good at predicting the future, I would buy lottery tickets knowing the numbers. So I don't know what the timing will be, but at the end of the day, we are in a global foot race. You know, give credit to the Chinese. They are putting serious effort in. You know, America's pragmatic. We know what it takes to ensure our primacy. I would hope that we can strike a deal with India in a way that helps ensure that the great democracies remain on top all through the rest of the century. So I don't think we can tarry, frankly. Time may be India's friend long haul because of India's inherent strengths and structural growth, but in this AI foot race, time is not India's friend. And the faster we get this trade deal done, the faster it creates a signal of profound psychological confidence and trust between Washington and Delhi, the faster our companies can take up the baton and help really fuel the speed of our innovation.
Ambassador Kashyap, thank you so much for joining us. Always a pleasure helping us figure out what the nuts and bolts of that final percent of the India-US interim trade deal may perhaps look like. But that's all the time that we have. It's a wrap on this edition of News Center. More news and updates will continue right here.
Welcome to Newsmaker. I'm Ritu Singh. Now, Cred's founder Kunal Shah's move from Cred to WhatsApp marks one of the most significant global leadership appointments from an Indian startup founder perspective, and he is going to be inheriting one of Meta's most important consumer products. Now, WhatsApp has more than 3 billion monthly users globally. That makes it the world's largest messaging platform. India, of course, is its biggest market with more than 500 million users. But WhatsApp today is a whole lot more than just a messaging app. You know, they have business messaging, payments, they have commerce, merchant services, Meta AI, all of that increasingly becoming a part of the platform's future growth story. And that is where the challenge also lies, because WhatsApp has already solved for scale. The next phase is going to be about monetizing and finding new ways to generate revenue pools from one of the world's most heavily used digital platforms. And that could help explain why Meta has turned to Kunal Shah. Now, you know, Cred is not really India's largest fintech company by any means. It's not the largest UPI player, nor is it even among the most profitable. In fact, the company only just reported its first ever profitable quarter this year. But what Kunal Shah brings to the table is something else, and that's a track record of building and scaling consumer internet businesses in India, which is one of the world's most competitive digital market. Now, his entrepreneurial journey began with FreeCharge in 2010. He later launched Cred in 2018 and then expanded it beyond credit card rewards into payments, lending, insurance, wealth, and even commerce. Today, Cred has about 17 million members and generates annualized revenues of more than 3,200 crore rupees. And that's perhaps why we saw Meta's Mark Zuckerberg saying that Kunal Shah brings a kind of quote-unquote builder mentality and global perspective that's needed to run the world's largest messaging app. That emphasis on building is quite significant. And for Shah, of course, the opportunity is clear. He says the delta between WhatsApp today and its full potential is massive. But then, of course, if you step back, there's also this larger India story. Several Indian tech leaders have made their mark. The Satya Nadellas and the Sundar Pichais of the world, they've all built their careers inside global technology giants before rising to the top. But Kunal Shah's path has been different. A philosophy graduate and an MBA dropout. He built startups from scratch before stepping onto one of the most influential leadership roles in global consumer tech today. And that is what makes the appointment noteworthy, not just for WhatsApp or for Kunal Shah, but for India's startup ecosystem as well. Now, all of this has sparked a much bigger conversation, about just the leadership change at WhatsApp, about India's growing influence in global technology, the rise of founder-led leadership, and what Meta may be betting on as WhatsApp enters its next phase of growth. So joining us now is Ganesh Natarajan. He's a veteran technology industry leader, entrepreneur, chairman of 5F World and GTT Data Solutions, who has witnessed India's journey from the IT services era to the startup economy, also the former CEO of Zensar. Mr. Natarajan, such a pleasure to have you here on CNBC TV 18, and welcome. You've seen India's tech industry evolve from, like I said, the IT services era to now the startup era. How significant is it that, that you have an Indian founder, not a career corporate executive, an Indian founder taking charge of a global platform that has 3 billion plus users?
I think it's a fantastic development on two reasons, actually. One is, of course, as you mentioned in your narrative, the whole endorsement of the startup success story in India. The second, and probably the more important, is the recognition. Like, I'm in Dallas right now, and yesterday I was having dinner with an American friend, and he was saying that, look, the US is suddenly realizing that India is not just great talent, but it's great managerial and leadership talent. So if you look at the Sundar Pichais and the Satya Nadellas of the world, I think Kunal is in that category where he's now seen as having the potential to lead a global organization. And as you rightly said, they've solved for scale. Now they have to solve for solutions and monetization. So I think that's absolutely amazing, because it'll give a chance to many more Indian entrepreneurs to maybe sell a stake in their company as well as go on to lead larger things. So it's absolutely fantastic.
Well, let me build on that point, Mr. Natarajan, that you bring about global technology companies increasingly look at India's talent. I mean, do you see Kunal Shah's appointment as an individual success story, or would you say it's an evidence that founders built in India's intensely competitive digital market are developing skills which are now increasingly relevant for the global stage?
Yesterday we were actually jokingly commenting in the Thai group, the Indus Entrepreneurs Group in Pune, that this is an acqui-hire, in the sense that it's not really an acquisition, because they've taken a minority stake, a significant minority stake, of course. But I think they've really gone for talent. So from that point of view, I think it's a great individual capability endorsement for Kunal Shah. And of course, it's also a recognition of the fact that he's built successful companies, and credit itself, while it may not be large, is a significant part of this whole ecosystem.
I mean, are you just joking, or would you actually look at the credit investment, into what Meta is actually buying here with that $900 million check? Because Meta is not getting any board seat. It is not getting any access to Cred's customer data. So what is it really betting on? Is it purely a $900 million check to get Kunal Shah in?
Well, I wouldn't put it past them because, I mean, for instance, suppose he creates $20 billion of new value in the next 5 years. I mean, 900 million is cheap. So, I mean, I wouldn't put it past that as being a significant part of the dynamic of making this acqui-hire happen.
Acqui-hire is an interesting term there that you've coined, but let's talk a bit about WhatsApp as well. They've struggled to convert the enormous user base that they have in India into meaningful revenue. At the same scale as some of Meta's other products here, perhaps. What would you, from your vantage point, identify as the biggest monetization challenge that an outsider like Kunal Shah will have to inherit as he takes on this role?
It's an interesting question because if you look at the evolution of e-commerce, I mean, it started, as you know, with Google and Facebook and Mark Zuckerberg saying that, look, we will never, ever charge the customer. And they make all their money from advertising and endorsements, etc. The market has actually moved towards paying for value. So there are individual contributors like LinkedIn, for instance. You start off on LinkedIn free, but then eventually you kind of migrate to LinkedIn Premium, which I did, let's say, 3 years back. And I think Kunal has two opportunities in front of him. One, to see whether it becomes so valuable that we all subscribe to a WhatsApp Premium with a whole bunch of other features, which is not something we can rule out. I mean, I would happily do it if something gave me an advantage in terms of communications. But also, of course, looking at monetizing the traditional way through advertising, etc. So I think that's a question that the organization will have to answer. And we will have to see how it goes. But certainly going to be exciting times, and all credit to WhatsApp because, as you know, there have been Indian wannabes trying to compete in that space. There's of course Aratai from Sridhar Vembu. There is also Telegram and so many others. But WhatsApp has very confidently held its own and increased market share. And now, as you said, it's the next stage.
Well, the Indian wannabes, WhatsApp is what you're calling them. But let's focus a little more on the fintech space because that's what Kunal is most closely associated with. And if you look at WhatsApp or Meta's fintech play in India, it's WhatsApp Pay. And that's a very small player in our larger UPI ecosystem. It's not even in the top 5, despite having the kind of base that they have and NPCI allowing them, to increasingly expand their, coverage. Do you think Kunal Shah's experience in fintech, in consumer behavior specifically helped change that, especially given that, he's gone on this whole, building for the, top percentile with cred. Now, as he transitions into this role, perhaps building for the masses?
I think it's very likely because if you look at the success of Google Pay, I mean, I do all my payments through Google Pay. And who would have thought that Google would become a significant payment platform? Absolutely no reason why WhatsApp would not do it. And in fact, if WhatsApp gave me a easily clickable payment option, I'd probably use that rather than go into Google to make Google Pay happen. So yes, absolutely. I think that's a low-hanging fruit for somebody like Kunal with his experience. And as I said, there are so many other opportunities. I think it's very exciting for him, exciting for the whole Indian ecosystem to see how he will succeed in this role.
Speaking of succeeding in that role, you have someone who's forever, worked as an entrepreneur, built his own companies, whether that was Freecharge, that was Cred. And now you have him stepping into the processes and systems inside Meta as he leads WhatsApp. Do you think that transition will be difficult on one hand, what he does at WhatsApp, of course, and also the company that he leaves behind, Cred, very much associated with Kunal Shah, the person, and now preparing for this eventual IPO. Do you think Cred would also find itself in a bit of a tough spot while also Kunal Shah making this adjustment into working under Meta?
See, you're absolutely right because if somebody's been a serial entrepreneur, it's difficult to immediately fit into part of a larger ecosystem. But I think Meta is a very wise company. They'll also realize that here comes a super entrepreneur and we should not put too many straitjackets around him. So from that point of view, I think there will be obviously a certain teething troubles and certain startup time, but I don't see a problem. Somebody with that kind of a track record and a company which is so successful as Meta has been, I think that combination will make sure that he continues to succeed.
Well, let's hope so. And let's say that appointment succeeds. He does fabulously well. What will it change in terms of perception? I mean, could it become a defining moment that encourages even more global technology companies to look at Indian founders, not just Indian executives, for leadership roles? I mean, typically you'd have these Indians that have grown within the company. You'd have Silicon Valley founders that are Indians, but not Indian founders from India so far. Do you think that is set to change in a bigger way?
I think that recognition has always been there. In fact, I was just joking to my friend in Dallas yesterday. The last time I was here, I was actually interviewing for a mega billion-dollar company who wanted an Indian to lead their Europe operations. Quite interesting. And in fact, a friend of mine who was in New York, she just finished handling Latin America and before that, Europe for a very large European company. So the recognition is already there that bright individual Indian professionals who have kind of achieved scale in India, either in startups or in large companies, are great talent. But does this one kind of tip the needle? I don't think so. That recognition has been there and will continue to be there because Indians do contribute extremely well in leadership roles.
Well, that they do. No dearth of talent here for sure, Mr. Natarajan. Always a pleasure having you, and thank you so much for taking the time out and joining us here on CNBC TV 18 today. We appreciate it. All right, and we will slip into a short break on that note, but don't go anywhere. We will be joined by Mohandas Pai, the chairman at Aadhaar Capital, to continue this conversation, so stay tuned. Welcome back. As promised, let's continue to focus on our newsmaker Kunal Shah and the significance of his move to WhatsApp. And joining us now is Mohandas Pai, the chairman of Aadhaar Capital, a veteran investor who's also closely tracked the evolution of India's startup ecosystem for decades. Mr. Pai, thanks very much for being with us here today. I want to start by asking, Kunal Shah moving from Cred to lead WhatsApp is being hailed as a milestone moment in the startup ecosystem. But What is the larger message here, and what does it say about the maturity of the startup ecosystem?
Well, the larger message for this deal is that WhatsApp wants a leader from the emerging markets who has been a builder, who has done very well, and who is a great techie. And they found the right man in Kunal Shah, because WhatsApp has competition globally from WeChat from China. Because China, they dominate Southeast Asia, they're dominating Africa too. They're investing hugely, and they want to be a large player in the world. So WhatsApp is looking for somebody outside the US who understands consumers in the growth markets, and I think it's a good deal for both sides, except Kunal has to give an exit to the existing investors. He's built the company, he's been around a fair while, and I think by having a secondary and making sure that he retains his shareholding and gives protection for privacy and data, and I think it's a good deal. Let's see what happens. As for the maturity of the startup system, look, we got great founders. We don't have a shortfall of founders. Whether the West and other companies find them useful to be CEOs is something to be seen. But I think this is a one-off. We should not see as if everybody is going to come here and grab our founders.
Well, that's exactly what Mr. Natarajan was also just alluding to. Of course, there's no dearth of good founders here in India. But to your mind, why did you think Meta particularly chose Kunal Shah? I mean, this is what we were alluding to earlier. It's not that Cred is the largest fintech or even the most profitable. What made Meta, what do you think Meta saw in Kunal Shah that made him the choice to run WhatsApp globally?
I'll tell you a story, Ritu. Many years ago, an investor from the US whom I knew for the last 20 years and had the greatest respect for him because he was an analyst and, he's called Bekovich, and he was an analyst and he became a big investor. He called me and told me about a very exciting company run by Kunal Shah, who is very impressed. He said, I can't invest because he's so small in valuation, but you must meet him. Then that's how I met him. And Kunal is a brilliant guy, very impressive. I guess the magic worked and personalities liked each other. The culture worked and they hit it off. I mean, that's the only thing I can say.
Well, but, would you say this is a bet on founder capability rather than company size with that $900 million check for Cred? And, especially with Mark Zuckerberg highlighting that Kunal Shah's builder mentality, is relevant for the job. Does it suggest big tech is also increasingly valuing entrepreneurship, judgment and product building skills as much as perhaps scale and profitability?
Well, they took a big bet. I think Kunal must have told them that, look, you want me to come, you got to take care of my company and invest and put money in and buy people out. So I guess they agreed. I mean, look, for Meta, who is investing maybe $250, $300 billion in cloud, this year maybe $125, $140 billion next year, putting $900 million must have been peanuts. The cash surplus, they'll borrow money cheaply. So they wanted Kunal because they felt that the value Kunal adds to WhatsApp by growing them in emerging markets, including India, will be 100 times what they're going to put money into a good company. So I guess they made a deal, the terms of the deal. But Ritu, it just shows how much cash is available with these global monopolies. Huge amount of cash, no respect for capital. They'll go buy you. For example, remember, Meta is the same company that bought 10 AI engineers paying them 100 billion each. Remember that? 100 million each. I mean, it's absurd, right? But they paid. They wanted to build AI. So I guess it's part of the deal. Kunal negotiated a great deal.
Well, there absolutely seems to be no dearth of cash if you look at some of these large tech companies, especially out of the US. But, let's also look at the executives, Indian origin executives, whether that is Microsoft, Google, IBM. All of them have risen through the ranks to take the position that they have. But Kunal Shah's path has been quite different. Do you see this as the start of the rise of Indian founders in global tech leadership roles, especially founders that have built and worked and operated in India, not necessarily grown through the ranks in these tech companies?
Well, I understand what you're saying because most of the people who build companies in the US are US-based. They build companies, became, unicorn founders, billionaires, etc. Now, Kunal is very different. He's grown up in India, built companies in India, and now WhatsApp is hiring him and putting money into his company to get him on board. That means he's going to take a managerial role, a CEO role. He goes from becoming an entrepreneur to a CEO. But I guess Meta wants an entrepreneur as a CEO versus a manager. They quite possibly globally are not doing so they're not seeing great growth. So they want an entrepreneur who brings an entrepreneurial fail. Meta has got capital. They're building huge data centers.